Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Good morning, everybody, and good morning to you, Coach James. Hope you're doing very well today.
Good morning. Good morning. Good morning, chat. Good morning, Coach Sam. Good morning, world. Good morning, FOMC Wednesday. It's going to be a big one today. I guess that's what everyone's talking about already. So we'll be chatting about that later on today. Yeah. Welcome to everyone in the chat. Great to see Nathan here and Ellie, Mark, the usual suspects, and Savinda. I guess we'll see Gigawatt in the crowd coming in just now. So, and quite a lot of folks in the chat. So welcome to everyone. Make sure to like and subscribe, folks. There's a prize to be won today. And the first step you have to take to win that prize is just like and subscribe on this channel. And say hi in the chat. Say hi to Coach Sam, and as he's coaching his Hola Prime basketball team over there. Give a wave out to the basketball coach as well. Yeah. So welcome to everyone.
Absolutely. And we've got Choco Trade as well. He says, good morning. Good to see everybody. What are your thoughts? Let us know what your thoughts are, what you're trading today. And obviously, be careful when it comes to FOMC. It's going to be, I believe it's 2 p.m. Eastern. It's going to be a big one. Anything outside of a 25 basis point cut is going to be, well, untradeable. So do keep your wits about you. And the press conference afterwards. Remember, there's a press conference after FOMC, which can be even more volatile because traders will be picking apart, and algorithms too will be picking apart every single word that Jerome will be saying, and it can swing the market up and down, and we're talking not just small swings, we're talking big ones. So you really have to be careful. My advice would be probably don't trade at all, but if you must trade for whatever reason, please lower your size. Don't be a hero. Sit on your hands. Don't try and chase the market. Just keep your wits about you, because anything can happen. Technicals go out the window when it comes to something like that. You know, support, resistance, all this stuff goes out the window. It's just a free fall for everything. So, but we will be breaking down some charts. I know, James, you have
actually what we can
break down low.
Let's have a look at the news. Let's have a look at the news stack today. Let's go through it quickly while we're talking about news. And All right, we've had some news already. Not a lot, not as much as yesterday. Yesterday was a super busy day. Let's scroll back a wee bit and have a look. Look at all that stuff coming out of Europe and the US, including some pretty important numbers like housing numbers and so on, and retail sales. But what we've got today, and if we scroll down, we'll see there's a couple of things that are coming already from Canada. And in about an hour's time, we've got the Bank of Canada interest rate decision expected to actually reduce down from 275 to 250. Interesting. And then if I scroll down one more day to the next day, which is Thursday, tomorrow, you'll see that the Bank of England is also getting in on the game here, and their interest rate decision set to stand still at 4%. So Bank of England standing still, I think. I think that's the news that's coming out from there ahead of that meeting. And then the Bank of Canada, right now, in an hour's time, may decide to cut by 25 basis points. I think I've lost that page now. Let's go back. All right, so yeah, pretty important news coming out. And if we have a look at what's ahead of that Wednesday, we've got EIA crude oil stocks change. The oil traders will be interested in that. There's the Bank of Canada rate decision coming up in 1 hour's time and 8 minutes, and expected to drop by 0.25. If we scroll down to the Fed decision, it's in 5 hours and 23 minutes from now. So put that on your clocks, mark that time down. And we're expected to drop from 4.5 to 4.25. What Sam was saying earlier is that if we do get anything above or below 25 basis points, it could really throw the cat amongst the pigeons. No interest rate cut will be a terrible damper on the market, and a bigger interest rate cut could mean that there's panic in the air and the market goes down as well. Anyway, no matter what. So we want 25 basis points basically, and I think that's probably what we'll get. That's what the market's priced in. Therefore, anything weird will affect that. Now, that's going to affect all sorts of things. And what I'd actually like to do, Sam, unless you'd like to digress into currencies right now, is just talk about energies, because there are some moves going on.
No,
if that's okay with you. Yeah,
of course.
So let's start with natural gas, and we'll get this one out of the way, and then everyone else that's sort of champing at the bit to find out what's happening on the natural gas market can be relieved of their sort of frustration, I suppose. This is the daily chart on natural gas. Now you can see, once again, just repeating what we've done many times before, we've got to run up into what looks like it could be a bull flag. We didn't get down to the bottom of the flag, which is what I thought we would do. We didn't get there. Instead, we stopped at this very crucial and key level, which is a Fibonacci retracement and multiple confluence of support levels. And if I go into the day chart and zoom in, you can see we had a flat bottom formation here. You might call that a tweeze bottom. I suppose if you looked at that on a weekly or a monthly chart, we would get an equal bottom on one of those candles. So a pretty powerful launch off that base, moving up to first resistance, 50-day moving average, and the order block coming back down a bit where we started rebuying. I'm long from 277, but we started adding some more size on here, having taken a little bit off at the top. So we're just adding that back on, really. We started down here at about 291, and I just added some on yesterday or the day before yesterday, just below $3. So we're currently trading at 310. Let's go have a look at the 4-hour chart and see how that looks. This is the chart that I trade off mostly. And once again, you can see a big bottoming pattern yesterday over here. This one spooked out a few traders, particularly after what happened after the open on, where was it? Let's have a look. If you remember, we had a big gap down and then a spike up. There it is there in the center of your screen. That was over the weekend. That was Sunday night. It gave traders no chance to hedge or to employ a stop loss during that gap overnight over the weekend. And in fact, it was even worse than that, because we only opened much, much lower down here at the lower Bollinger Band and then bounced sharply up. So everyone that got either long or short was probably whipsawed to death in that move, and that spooked the entire market and allowed us to basically it cleared out most of the longs, unfortunately, including quite a lot of traders that I know who are long in this market. So that was the clear out. Unfortunately, it's been done now, so it's all over. The pain should be finished, and we've now moved up and we're sort of curling up into this resistance zone. So, and once again, if we look at this on the weekly chart, it all looks quite supportive. There's that tweezer bottom that I was talking about. It is on the weekly chart, and a precise equal low on 2 weekly candles is a very powerful reversal, particularly when the second candle is as bullish as this one, and almost shaven, completely shaven top and shaven bottom. Now, in other words, no wicks. The 3 weeks since then, we've moved sideways in what looks like a bull flag consolidation. And once going back to the 4-hour chart, that's the sort of pattern that we're forming in here right now. So I think this all looks pretty positive for natural gas. My first target is 375. Let's go back to the day chart. It's basically the top of this falling bull flag channel, but it's also the 375 level, this red line in the center, which is one of the most highly traded zones overall in natural gas over many decades. Even on this chart, you can see it's been quite an important level. And no matter how far you go back, you'll notice, I'm not going to do it now, but you'll notice that natural gas respects $3.75. In our case right now, it's actually fortunately at the top of this channel too. So that will be the place to either exit or hedge or reduce size, or I don't think reverse, but manage your risk a little bit at that sort of level. But I think we're going higher. And once we get out through that level, we're going to have to bounce around a bit, clear out some tops, clear out some bottoms, get rid of some longs and shorts. Once that's all been done and some volume support has been built up in that zone, it's actually already the most highly traded zone on this chart, just about. So that will create some more volume there and give us an opportunity to launch up to the next target. And I think that's around about $4.25 to $4.50, and maybe even slightly higher. Just going back to the weekly chart, you can see actually we're not all that expensive on natural gas in the bigger picture, but in the last number of years, we're actually at the top of a range. But maybe this range has just shifted $1 higher, which is what I think has happened. And I've actually drawn that on here. The previous range was between the red line and the bottom, roughly. And now I think the new range that we're trying, not the red line, currently where we're trading more or less, that's at about $3, down to these lows. I think that's the lower range. So basically below this white line in the center. And we've now moved out into a higher range. You can see most of the last year, 2 years really, we traded below that zone. And now we've moved above it. And we're trying to hold it. That's why it's so key. And you can see we are trying to bounce out of there on this weekly chart. So I like it very much. Natural gas longs. We got no risk on this trade. We're long from 277 basically. Adding some more size back on. We'll have our full position back on almost any time now. So I like that. And as natural gas moves up, I think oil will move down. They do move opposite to each other quite a lot. Oil's been quite sort of frothy or bullish, but I'm still short. There are my 3 short positions lined up really at the top there, all at the same sort of level. And every time we've got there, I've just added a fraction more on, and it's moved down. Added a fraction more, and it's moved down. Are we going to do this again? Probably, I suppose. Probably sell some more at around about now, and we'll see how we go. But I'm allowing for a move up into that red blob, and that's not inconceivable. In fact, we could even get higher. In this bigger picture, let's go to, that is a daily chart. Let's go to the weekly chart. In this bigger picture, this is oil. It's quite beautiful, really. Even though within, remember this is a weekly chart, so it looks all quite neat. But within all of this, there's a lot of messing about within this channel. But we've been selling the top of the channel and or the 200-day moving average on every occasion. That's been a pretty simple and juvenile strategy. Sometimes they work the best. And so we continue to do that. But now we're trying to sort of get back down into the next level. We've only done it once. We had a double spike down through there a few weeks ago, and we're trying to get back down there again now. So that's oil. And I think we could see oil down, natural gas up, and we could end up this week with quite a good profit on both of them. Natural gas is already in great profit, but we just need WTI to keep moving down. And I think that's energies. And you can see all of this playing out on the XLE ETF. We're long on this one too. And that's, well, it's not all that exciting to be honest, but at least we dip back into the support zone. We've got a 3 moving average confluence here, almost 4. In fact, there's another one just down below here, which you can't see, just below the channel center line here. But there's the 20, the 200, and the 50, basically on top of each other. We plunged into there with some gusto, but it acted as a trampoline, which this would normally do. A great trampoline. It's a good analogy, actually, when you've got a lot of elastic bands all tied together and you bounce into them. Often you'll bounce right back out, which we did. So that's XLE, the energy ETF. That's moving up. Natural gas is moving up. And oil might have to move up too. We might just see a general bid across the board on energies, including oil. But for now, I'm still short on WTI. Uranium is another one, by the way. let's just finish off with energies. I don't think we trade this at Hola Prime. I confirm that later on. But this is the uranium ETF, URA, and we simply sold the top of this megaphone. It's moved down quite nicely, and we're doing okay on that. We sold another one at the top of a megaphone quite recently. Was that gold or silver? Yeah. Let's just talk about another top that we sold at while we're talking about selling tops. The other one is silver. We sold the top of the channel, the big channel, little channel. We sold the top of that. That's moved down sharply, but we were right down at the bottom here. We've now bounced up about halfway back up to this little channel center line. So yeah, I don't know. All of this is going to be affected by the FOMC, of course. None of this is going to make any sense later on because these patterns will all change. And primarily because we'll see, I think, what the true colors of the Fed might be. We're going to get an interest rate drop, I think, and that's going to have to be explained. And I'm really interested in what Jerome Powell, the last 5 or 6 meetings, he's really just adjusted a few words in the statement, not said a lot, but just the normal stuff. We've got a twin duty with jobs and inflation, protecting the American public and all that stuff. But he's going to have to say something different today because we're probably going to see a drop in interest rates. So a different tune, a different day. And I think the market will be, as you said, Sam, hanging on those words like you can't believe. So it's going to be a great day.
Yeah.
We've got trades already on and trades ready to set up straight afterwards. I'm looking at shorting gold, shorting silver, potentially shorting stocks. Even if we get 25, I don't know. I'll be watching price action very carefully. And of course, the clue is to wait half an hour after we get the news, wait for the presser to begin, wait to hear what they've got to say. And it's normally actually at the end of the presser, or sort of 3/4 of the way through, that if there's a clangor to be, excuse me, a clangor to be dropped by Jerome Powell in response to a question from the press, it's normally about halfway or 3/4 of the way through the meeting. So stay until the end and don't take your trade decisions until that meeting is complete, because there are normally some surprises that come in later on. Yeah, so Sam, what do you think about all of this? And perhaps we can have a look at what you've got going on in equities and so on, because this is going to affect your day trading quite dramatically later on today too.
Oh, absolutely. I mean, like we mentioned, if it wasn't FOMC, I would be more looking for a longer term bias, but I really wouldn't want to get an idea in my head until after FOMC, because a bias can especially with the style I trade or scalping, if I have a fixed bias, like, oh, it must go up or it must go down, it can actually prevent me from seeing the obvious on the 1 minute chart when I'm scalping. I will only start looking at things that support what my longer term bias is. So I like to rid myself from a bias, especially on a day like this, and truly kind of believe that anything can happen. I only trade what evidence is showing me on the chart. But I can go over the NQ, and you got to take this with a pinch of salt, everyone, because once 2 p.m. rolls by, 2 p.m. Eastern, anything we say can be completely wrong, because it all matters about what comes out of Jerome's mouth. That's ultimately it, right? So we can only look at the technicals. None of us truly know what's going to go on. Believe me, if we had any insider knowledge, would be very, very rich people later on. But it is
like Nancy Pelosi et al.
Yeah.
Yeah.
Okay, yeah, you can back end. If you want to switch to my screen, I'll go over NQ really quickly.
Cool.
All right, cool. So this is NQ 1 minute chart. Right now, we're basically in kind of a range. It's quite a decent size range, but we're just kind of bouncing up and down. I wouldn't treat this market any different until it does something. But again, this is to be expected. It's FOMC day. It's pre-market as well. The market can move pre-market quite nicely sometimes, but a lot of the time, you can just get these kind of ranging days. And everyone, you got to realize, every trader out there is kind of holding off until after FOMC. No one wants to put, unless you're a scalper or something like that. But if you're trading more like swing / intraday, it's a good chance no one really wants to put any real size in the market, right? Unless they know something we don't know. But no one really wants to be kind of putting that risk on the table pre-FOMC. So it's kind of to be expected. But from a technical standpoint, I see nothing at this moment in time. All I see is this area at the top here. I can imagine there would be sellers coming into this if we get to this area. My bias, if I had to pick a direction, I'd be more on the short side than I am on the long side. But again, that's just based on kind of the longer term. All right, we are clearly in an uptrend, but I don't know. It's hard to explain. We have this kind of big gap here that the market has tapped into and rejected. But I don't know. I feel like it could retest that area again. Just because of FOMC, but it could be as little as it just kind of wicks into it. As it happens, we kind of see like a push into it and then a quick kind of V-shaped reversal. Anything can happen. This is what's so difficult about days like this. You really don't want to be swing trading at this moment in time. Wait until tomorrow if you're going to be holding a trade. Especially make sure you're out before FOMC. But don't expect too much from the market at this moment in time. Understand that the big boys are not really going to be placing much size into the market unless they know something we don't know. And we won't know until the market opens. So until about 40 minutes time when the market opens, we can look at what kind of volume's coming in, who's trading, is anyone buying large contracts? That might give you a bit of an indication that, okay, who knows, maybe someone, because information does leak out and we live in the real world. There are some people out there who know exactly pretty much what is going to happen at 2 p.m. And although it's technically illegal, right, believe me, people take advantage of that information. So looking at what volume comes in will give us a better indication of what might happen. If you're seeing large amounts of absorption happening, if you're seeing large amounts of buying or selling happening, that's something to kind of, keep your eye on and think, right, who is selling or who is buying thousands of contracts right now? It's got to be some big institution, right? It can't just be a retail trader because no retail trader trades that size, right? So you can kind of then start formulating an idea that maybe they know something that we don't know. Otherwise, why are they putting that risk on? Because any institution will have a risk management of some kind. And if they don't know what's going to happen, believe me, that risk manager will be telling their traders, do not trade. Anyone breaking those rules are out the office that day. There's no kind of, play around and do what your gut tells you. It's all very... their number one rule is to protect their capital. So they're not going to be taking any silly gambling kind of moves. So really at this moment in time, all you can do is wait and see. That's ultimately it. I know that's not what people really want to hear. People want to hear something with a bit more like kind of definite, not definite, nothing's definite, but people want to hear something a bit more elaborate. I understand. But it is what it is. That's unfortunately the day it is. It's FOMC. It's not just a standard FOMC. There's a big one. Think about how often Trump's been pushing Jerome to cut rates. Jerome's been very kind of hesitant to do it. Yes, the market's priced in the fact that he will cut it, or he most likely cut it by 25 basis points. But we all know Jerome and Trump don't really have the best relationship. Do I think Jerome's going to be the type of guy who will just do something out of spite? Probably not, but you just don't know. Do you know what I mean? You just don't know. So better just wait and see. Sit it out unless you see like a really good opportunity.
We do know a few things, Sam. We do know that he's in charge of the Fed and he has a net worth of close to $100 million. We know that. So So I guess he probably knows what the number is. Well, and obviously he knows what the number is, but I guess he kind of has an idea of the impact on the market. And I think we've got to say, well, if it is 25, which we think it will be, what's the market going to do? And try and imagine that scenario. We can't imagine if it's 50 or naught. It's impossible to even work that. As a position trader, you just can't. But as a day trader, there'd probably be plenty of chances. But if it is 25, what's going to happen? I've got an idea in mind. I think I know how I'm going to play it if I see the chance to do so. I'm talking about stocks now, but there are other instruments we got to look at as well.
Yeah, I mean, it's a good question again. I think considering, we've had such heavy buying happening, for the last, let me flick to a higher time frame so I can see this a bit more. Let's do 1 hour. Maybe you can see it a bit better. Oh no, it's still, let's do 4 hours. I mean, look at this.
I think you're going to get to days.
We've had heavy buying.
Yeah.
Since all the way back to April, you can kind of say, I mean, that was the crash. All right, forget that. That's a bit too far back. But the last major kind of pullback, I would say, happened kind of around maybe a month ago or so. We had this kind of pullback, and then there was a time I remember seeing ridiculous amounts of buying happening, and I believe it was around here actually. 2nd of September, yes, this was it. It was, let me just remove the drawings. It actually happened during right here, this push down here. I saw extreme amounts of absorption happening. And I said it live on stream, something is going on. Someone is buying ridiculous amounts of the NQ. And as we started pushing up, I said it live on stream. I don't think we're revisiting this low. I think we're going to keep going up now and go to all-time highs. And that's exactly what happened because of the amount, the volume I was seeing coming in, right? Not just because it was a hunch or...
It's also a fresh low and I think it's a fresh low and a tree's bottom as well. And on top of all the absorbed studies, maybe not a fresh low, maybe a double bottom actually, almost precisely. But yeah, sure. Yeah.
So what could potentially happen? I mean, we've had all this buying, right, for the last half a month, I would say. Yeah, half a month we've had all this buying. The market's really only been buying. And that's pricing it in for the fact that everyone believes it will be a 25 basis point cut. So if it is a 25 basis point cut, I don't think nothing too drastic will happen. You might get a bit of a whip as the market pushes up and some people might, take their money out the market. You might get that kind of, crazy volatility a bit happen. But if it's anything outside that, I mean, if it really depends what people as a whole see it as. And this is what's hard about trading when you look at fundamentals, because it's really down to humans and what people perceive at, and everyone can have different opinions. But then it comes down to, who's actually got the size in the market. What we do know right now, there's a lot of money, there's a lot of bulls in the market. And those bulls were big institutions. And the likelihood is they're either going to, I don't want to say something and then put any kind of ideas in people's heads because it's such a coin flip. But I would say the press conference would probably be more drastic, because the likelihood is it will be 25 basis points, right? And we're going to see a bit of, volatility spike. It can go up and down, and as people are taking money out the market, more people putting in the market, and that's really what it is, the supply and demand. If someone right now has, let's say, 1,000 contracts, drip fed into this market as we're going up, and the market pushes up, a lot of those people can say, right, let's take the risk off the table because they know how volatile it can be. They'll take money out. Those get converted into sell orders. There'll be some people who, and the market can kind of whipsaw, and that's a good chance of what would happen. But the press conference, depending on what he actually says and what questions get asked, right, about leading up in the next few months till the end of the year, that can give traders a lot more kind of perspective on what to expect in the future, because that's ultimately what FOMC is about, right? It's about it kind of chooses the direction for the next couple of months, right? So that will be more kind of depending on how clear he is about it. If and this is what it is. It's human words, right? It depends how clear he is about it, what questions get asked, and how he answers those questions. Does he hesitate? Does he every minute little thing? You won't believe how these institutions study stuff. His body language will probably even get questioned at some point. So
yes, absolutely,
it's such a coin flip.
They have body language experts, Sam.
Yeah,
they do actually have body language experts. Yeah,
it is so difficult to kind of predict, because it really is. It's impossible to predict. I could tell you it could go up, it could go down, it could whipsaw. Any of those scenarios could be true, and you won't know until it happens. And then that's why it's the safest bet for retail traders. We're not, it's like going into a war with people with nuclear bombs, and you have a stick. You're just not going to win. You're just, there's no point trying. You might get lucky. It might go in your favor, and you make a decent amount. That's gambling essentially, right? So just wait till it happens and form a kind of longer term bias based on what has happened. That is what I would say is probably your best bet.
Yeah, it's going to be tricky. I have an idea. Actually, perhaps we can just switch back to my charts and tell you what I think might happen, but I'm not convinced. It's just a thought. Now I've just opened up my trading view charts on screen, so it's going to go a bit jittery for a while. Forgive me. I'll get rid of it as soon as I can. I've just uploaded, Sam, I don't know if you use Apple or anything like that, but I've just upgraded my MacBooks and everything to the new version, and all the things changed. Everything's gone to different places.
Oh, really?
I think it's just big. I sound like a grumpy old man, but it's just not great. Anyway, let's have a look. Everything's just gone to different places. Let's have a look at the Nasdaq, and I think you're right, Sam. It's a little bit, and we can look at the S&P as well. Either of them will do, and sort of see where we are on the charts and what could happen. I'm now out of this trade. We've been long actually this whole period, most of the time since Liberation Day, Independence Day, the tariff day. That was the tariff drop. I'm inclined to just ignore that and just sort of chop that off. Didn't it just carried on and just were real dips if you just a steady march. Is there
James, I don't know if you can hear me, but you've broke up quite a bit there. Can you just repeat the last few sentences?
Yeah.
No problem.
Hang on one second. Sam, if you wouldn't mind just taking over, I've got a RAM problem. It's this new Windows, Apple, new Apple stuff. I'm just going to clear my RAM. I'll be back with you in 2 minutes.
Yeah, sure, no problem. So yes, back to NQ, S&P, they're all going to react very similar. So if you're analyzing one, yes, they do move a little bit differently. Obviously, NQ is more tech. S&P is just, well, it's no real particular industry. It's just the biggest 500 biggest stocks. But so we're going to look at the NQ. You got to remember, look, there's a lot of money in the market right now on the indices. And it really comes down to, will the people who have put the money in the market to cause this uptrend, are they going to start cashing out? That's the big question. If people start cashing out and taking money out the market will drop. Okay. But if people feel if institutions feel actually, everything was really positive for the on FOMC, I'm going to buy in more, the market can rally up and keep creating new highs, new all-time highs. So it really comes down to, are people going to be taking their money off the table and cash in and celebrate, or are they going to double down and keep adding more contracts into the market? That's ultimately what it comes down to. And again, it comes down to what Jerome says, how he says it, his body language, the questions he gets asked. It's more than just, will it be a 25 basis point cut? That's just one, that's the first kind of big thing. If it's anything outside that, of course, that's upsetting the market, right? It's because we got a huge percentage that it will be 25 basis point. I think it's like 90 something percent, right? So anything outside that is obviously going to cause a massive move. But then the press conference afterwards is going to really determine whether a lot of these institutions are going to hold their position or add more to their position. This is what the big question is, right? So very hard to predict.
Am I back? Am I back
Carry
with
on.
sound?
You are back. Nice.
Am I
Clear.
back with sound? Okay. Wonderful. Okay. I'm so sorry about that, folks. I have a RAM problem. I don't know if you even heard what I said 2 minutes ago, but I'm back. Let's switch across my charts. I think it's one of these new Apple. I'm not the only one that's complaining. Can you see my charts and can you hear me okay? If
yes,
that's good, then we can keep going. Yeah? Okay. Wonderful. Thank you so much. So let's look at the S&P. So what I was saying was this was the end of Pep. Sam, just leaping. I can't see you right now because I'm on my charts. If I go weird, just let me know. Just jump in and talk over
sure.
me. S&P, that's the end of Pep. I regard this. Sorry, choppy again.
Yeah, a little bit, but not as bad as it was. I think we could still. I can still kind of make out what you're saying.
Okay. This is not good, is it? All right. So basically what I'm saying is that we have almost ignored that clear out and we've moved back into the sort of trend that we've been in this whole time. I regard that as a fake move, and we've just resumed the sort of average trend, but below the channel line that we were in before the clean out. So we haven't candle yet, and we're trying to do that today. And we're just poking up through there. I've taken a tiny short at this level after having been long the entire time since this red line. So we've basically just reversed direction. I've got quite a lot of profit. Our last short was down here, green arrow control at 6456, and we've moved up to this sort of level at 6620, where I've taken profit and actually reversed to short. It's a tiny short, and it's speculative, and I've got time before the FOMC to either hedge it or get out of it if something happens. I really don't know what's going to happen. I tell you what, though, on the Nasdaq, it does point more to the upside than anything else. On the S&P, you saw we're below that channel, the Independence Liberation Day channel, but on the Nasdaq, we've broken back inside it and moving up much more strongly than the S&P. So I think this looks a lot more bullish, and I'm going to take my cue from this in terms of the overall direction. I may even reverse my S&P short and see what happens after the FOMC. I think we could probe up on the Nasdaq into some of these higher levels. I've got two targets. This first one here, is the sound okay there, Sam, now?
Yeah, perfect.
Just let me know. Okay, cool. So I've got the first target there at that blob, and that really is just a simple trend line connecting the tops of all of these recent highs. There's a trend line there. Let me make that one white too. So that very simple trend line, we're at that level now. We haven't got to the top 200 period Bollinger Band, the red line up here, and we haven't got to the top of the long-term channel that we fell out of and reclaimed with that Liberation Day tariff sell-off. We're back in the channel. We're touching this intermediate line. We haven't got to the channel top. So I've got two targets. First of all, this intermediate line above us. We're almost there now. We're not too far off. And then the channel line at the top here. And that could take us all the way up actually in the next few days or weeks above 26,000 on the Nasdaq, and we're currently trading at 24.2. So, that's another 10% up. And I think I'm not the only one that thinks the Nasdaq and the S&P and the Dow and the Xetra, everything else can go up by another 10%. And that would take us literally into that blob that I've got drawn on that top channel line. And let me just do this and change it to a weekly chart so you can see the much bigger picture. And there we are there. So that's the intermediate line. We're reaching up. We haven't quite got there yet. And then above that, we've got the long-term channel line right up here and the blob. And I think probably that's where we're heading up towards. So if we do get 25 basis points, I think we'll see. This is what I think. I've watched the markets a lot over 30 years. I'm going to make a call or a prediction. It's not a tradable one, but it's what I think might happen. Is that on the news of 25 basis points, any sign of a cut, the first reaction is probably going to be up, but not by much. And then I think the market will then reassess and collapse down pretty rapidly. All the bears will come rushing in. Of course, they'll take that chance. If we sort of poke up on the FMC, plenty of chances to grab that liquidity and sell. But I think it's going to sell off quite sharply, but not for too long. And I think we could get maybe like a 1% down day, and then into the afternoon power hour, we could be up back to break even, or back to the opening price, or even into a profit at that point. So I'm going to be watching for a very sharp dip, not a shallow dip. I won't be buying any breakouts. I won't be buying any shallow dips, but I will be considering buying a fairly deep dip of about 1 to maybe 1.5%. That sounds quite dramatic. So if you get down 1.5%, Sam, you'd be looking at that going, well, this market's never going to recover today. But it could be that sort of day, which is one of these elastic days where we swing, stretch wildly to one side and then wildly back again, and the elastic effect starts playing. So, but the bigger picture is, I think we have to get to the top of the channel and the top 200 period Bollinger Band. We've got a long way to go still, and that's at 26,200-ish. We're only at 24,000 now. It's not going to happen today, and it's got nothing to do with the FOMC, but I think it's good to bear in mind that overall, stock markets are generally optimistic as a Ponzi type optimistic scheme. I say that with tongue in cheek, but it is very similar to a Ponzi scheme in its structure in a strange sort of way. But it is a market that keeps on moving up and keeps on getting fresh capital injected through printing of money. So yeah, it is a little similar to that, and it's an optimistic, generally bullish market. On top of all of that, I think with an interest rate cut, that could fuel a little bit more of a rally, and there might just be a big sense of relief that maybe this cutting cycle, even if it's not very dramatic, at least it's begun, and that we could see maybe one more cut, in the next meeting, and another one, maybe two more before the end of the year. And I think that would just be normal. I don't think that's freaky or unusual. I just think that's kind of what we're expecting. And if that goes along as expected, I think we'll just see the markets carry on melting up. If we see anything out of the norm in all of that stuff, then I think that's what will spook the markets. But that's the game that Jerome Powell's got to play. He's got to dance this dance and calm everyone down, at least make them feel slightly optimistic, but not too optimistic, because that creates inflation, and not too pessimistic, because that could destroy the jobs market. So what are we going to do, Jerome?
Yeah.
I think he's going to say 25 basis points, going along fine. We're going to analyze the data and make decisions based on that. But we are looking at potential further cuts if and when the data allows. And I think any message along those lines will be absorbed by the market with some degree of optimism. But I don't know, it's going to be a messy old time, but eventually when things sort themselves out, I think we'll probably see, maybe not this week, possibly, but maybe into next week. And that's going to affect all sorts of things, not just the stock markets. I'm actually more heavily involved in metals and crypto at the moment. So I'm going to be watching with great interest how Bitcoin, gold, silver, copper even, and some of the other metals react to all of this. And you might even be looking at some of the, the palladium group metals too, like platinum and palladium and so on. Did I say palladium? I meant platinum. So this is Bitcoin. And Bitcoin, as I said yesterday, Sam, to Coach Richard, was that this has become the most beautifully technically obedient chart you can imagine. It's trading much better than equity charts, trading better than Forex market charts, trading better than gold. I'm talking about the structural obedience or the adherence to normal technical patterns. And Bitcoin's been absolutely beautiful. Right now, we've held, after having claimed the 50-day moving average, we've now held it for 1, 2, 3, 4, 5, 6 days in a row. And there's no sign that it's really being challenged in, very aggressively. No big spikes down there. And below here, actually, we've got the 20 and the 100-day moving average, which might even be more attractive for us to just spike down, and get rid of some of those low-hanging fruit stop losses and just dip down into there. It might happen today, of course. Maybe that's what's happening right now as we speak. If we go down to the 1-hour chart, you'll see we're drooping down, but not aggressively. There's the 50, there's the 100, below the 20, but nothing sort of super scary. What I don't like on this chart, and I have to keep on bringing this up because it's getting worse and worse, is the volume drop off. The only day when there was a little bit more volume was when it was red. So that's not good, right? And yesterday, quite a big bull candle, but a very small volume candle. That worries me somewhat, despite the fact that we're holding this technical pattern. If I draw a line straight across the chart there, you'll see it's also the previous all-time high breakout sort of zone over here. And that's not the one I was talking about. I'm actually talking about this low to the left. Sorry, I seem to have a plague in my office. I got a fly in my eye or a mosquito the other day. I've just got another one now for the second time. So yeah, so holding these levels. I am allowing, however, for Bitcoin to get down. Let's get rid of this white line at the top. I am allowing for Bitcoin to get slightly further down. Simply, I'm not proclaiming this as sort of that we're safe right now because of the volume profile down below us. So I think we may have to get down to this white line, and maybe at the worst case scenario, we may have to get down to about 107. And even worse than that, we may have to get lower. But I don't think so. I think we're moving up. We're above all the moving averages now, including the 200, 100, 20, and 50. And as long as we hold the 50, I think we'll be okay. So, yeah, I think this is going to affect all the markets across the board, including metals, Bitcoin, and stocks, energies, and of course currencies, which we haven't even talked about yet. But sometimes we just don't have time, Sam. We cover all sorts of things here on this show.
But I would say, all assets as a whole today.
Is there anything that you're seeing on?
Are gonna, have the similar kind of outlook where until FOMC, anything's, anything's kind of possible. But do remember, there's fear drives the market more than anything. If institutions have hundreds of millions of dollars right now in longs, and there's any sign that this could be bad, they're pulling those positions out, they're selling them, and that can cause a kind of sharp movement down. So that's why sometimes even if news seems overall positive, it can have a negative outlook. It really comes down to fear. Fear. People are more scared to lose money than they are to a degree of making more. So it comes down to psychology again. So just be very careful. The data isn't always going to be so black and white and you expect the market to do whatever the data says. It really comes down to the situation of who is right now in the market and how they perceive it. So put yourself in those shoes. If you got 100 million right now in Nasdaq, and Jerome says even just the smallest thing that could be seen as negative, you might be like, okay, I'm going to take my money out, and that can cause, because you're such a big player in the game, that can cause a kind of snowball effect and more, and push the market down. So that's why you can get these huge kind of whips, and then people buy up your old position and push the market back up, and it just keeps kind of going crazy for a while. So just be careful, step back, and relax. Take the day off. Yeah, that's what I would say from trading.
Absolutely. Yeah. And gold will be one of the instruments that gets beaten around a bit today as well. So for those gold traders, looks quite good actually on the 1 hour chart, bouncing out of that 100 period moving average up into that confluence That's the 20, the green one, and the 50, the red one. So overall, quite good. I'm not in a position here. You actually can see on the chart, if you can see, I've got two arrows drawn on there, and those are my actual positions. They're still open. I say I've got no position because I have a short there, and I've got a long just above it. So basically no position, hedged, in other words. So I don't know. I think gold will probably get a bit of a bid as long as nothing goes on weird at the after the FOMC. They might send in the dogs in the press conference, send in the new media to rattle Jerome. Who knows what will go on. But I think if nothing strange happens, we should be okay across the board. But expect a slight rally, a sharp dip, and then a resumption of the rally later on. And I think we run out of time, Sam, so we got to get going.
You have.
So
But yeah, I like that analysis.
yeah.
But everyone watching,
All right.
do stick around because we're going to start with the Futures Takeoff of the NY Open with Coach Troy, Coach Daryl, Coach Paul, and Coach Adelina. So do stick around for that. That's coming live. But James, great little session. Have a great rest of your day. And yeah, we'll catch up
You
soon.
too, Sam.
Take care, everyone.
All right. Take care, everyone. Take care. Bye-bye.
Hi, I'm Adelina, one of the coaches here at Hola Prime. But don't worry, I won't make you do endless push-ups, unless you are up for the challenge. I'm here to help traders build discipline, strategy, and confidence in the markets. And here is a little glimpse into who I am beyond the charts. I've been trading for 4 years, and it's been the most humbling teacher I ever had. At the beginning, I used to chase quick wins, but I learned quick losses hits hard. Trading isn't just charts and numbers, it's a mirror. It showed me my patience, my fear, my strength. Protect my capital and let the patience pay me. Because guess what? In trading, your biggest edge is you. Markets are intense, but it's just like an ice cream on a hot day. It can get messier, but it's always sweeter when you approach it with the right mindset. Enjoy the process and savor the small wins. Of charts, you can find me recharging by the beach, traveling to new places, or hanging out with my pets. I love staying active, but I also enjoy good food and music. Balance is the key. That's a bit about me. Don't forget, life is too short for just work and no play. Yes, even in trading. I'm here to guide you, cheer you on, and make sure we have some fun along the way. So hope to see you in a session soon.
Hola Prime, trade with transparency.
All right. There were two, and one is missing.
Morning.
Good morning. Good morning.
Oh, he's
Coach
gonna jump
Adelina
under some.
and Coach Paul. He's gonna come in with a wig
Oh,
and drop a FOMC WhatsApp or something. I know it. It's gonna happen. Oh, here.
Man.
oh no! He did.
Good morning, sunshine.
There he is.
What's up?
Good morning, sunshine. I didn't mean to wake you up and get you out of bed so early. Oh
There, now I'm
man,
official.
you know what today? You know what Mom used to tell us, Troy. Don't say any four-letter words, and today is a nice big four-letter word that starts with an F. Not cool. We got to watch out for the
Huh?
FOMC.
Oh yeah.
Yeah, man. Yeah, I don't.
Well, hey,
I am. What, Troy?
have I told you this story about when I just gotten a trading job and was coming into the trading floor, and one Wednesday I came in and one of the other guys that was an older fella just wasn't there, and we all kind of had a meeting and we did all this stuff pre-market, and it kind of went, I wonder where Joe is, and it's escaped my mind, and anyway, I'm trading on a Wednesday, FOMC day, and I'm like all excited about the 2 o'clock. I go, where's Joe? I mean, Joe never misses a market day. And we go to the trading manager, and he goes, "Oh, Joe always takes this day off." I'm like, "What do you mean he always takes this day off?" He's, "Yeah, it's FOMC day. It's a crap day. He doesn't even trade it. Doesn't even come in and trade it." And it's stuck in my mind all these years, because what happens in the morning? You may get an hour of good trading, but the rest of the day it's going to be sideways, going nowhere, doing nothing, and then you're going to have this giant pow, and that's going to be the extent of the day. And this guy, Joe, is smart enough not to screw with that. So he just takes that day off every quarter or whenever that day is. So, that's my 2 cents worth. I think we should just take the day off.
Hey, I would say if it wasn't packed with so much insanity between 2 p.m. and close, I would agree. But, hopefully in the morning here, we get some sort of, something. I mean, I think we all expect it to kind of be rangy, just like you're saying, Troy. We expect it to be rangy in this morning and going into 2 o'clock, but it should be fun regardless. From 2 p.m. onwards, we'll get to listen to Pal as well all together, get to hear each other's thoughts on everything. And I wonder, are we going to start the stream at 2 p.m.? Are we going to, or are we going to start at 2:30
I was going to bring
like
that
we
up.
Normally do? Yeah.
No, it's a good question. I was, well, so Troy and I are going to be wrapping up the experts, and I don't think we have anything planned for that half hour right between the end of that and us going live. So, I mean, either like we can all get on, or I was just even going to maybe just stay on for 5 minutes or so just to see the announcement. I do expect a lot of whipsaw action. I really do. After the announcement, and certainly during the conference, but it can move around wildly and then come back to where it started from. It could be everything today. Today's gonna be a wild day. I predict today's gonna be a wild day that we haven't seen in a long time. So we're about to open up here in the U.S. session. We're a couple minutes out, and he had a little profit taking overnight. Had a nice little drop after China said to Jensen Huang, "You can take your chips and shove it. We don't want to buy your chips. We're going to tell all our companies no more AI chips from NVIDIA." And that kind of shook things up a little bit. Had a nice little drop. But then it kind of recovered. So we're kind of back up to where we were prior to that little announcement. And so let's let it open up here, and then I'll share. I don't have a trade going on yet. Obviously, just waiting. And I'm going to try to be patient today, as much as that means for me. But I'll try to be patient.
Right. Exactly. I will say, I've got my levels set here essentially from our previous trading day. Value area low at 66.66 again. And then I've got point of control at 66.70, value area high at 66.74. So small range, like only literally an 8-point value area range in the ES.
Yep.
Which, which says something, which, yeah, exactly. That says something. And that says that we're in a little bit of a more comfortable rangy market for sure. And then on the Nasdaq, I've got my levels set as well. So this bottom blue line, so 24,520 essentially is value area low, 24,528 point of control, and 24,553 is value area high here. So we did reject off of that value area high level in the pre-market around 4 a.m. Eastern time, and looks like we're off to the races to the upside here in the Nasdaq at least, and the Dow. All right, and
the ES. Okay. Everything, yeah. But for a little bit, just maybe just a little swing, and we may get a little pullback. I'm actually looking and thinking we will probably come back down and test that overnight low in the ES when the news about China with Nvidia came out. So that's around 66.53 on the December contract. I am on the December contract today. I've fully rolled everything over, and Project X is showing the December contract. So that's important for people. Let's see. Come on, hold that number.
All right, already rotated through the value. As
got some volume though. Was. Got some good volume. Good morning, Eric. Killing it as always. He was up, woke up to $1,500 overnight. Sent me a little Discord message. I was like, dude, you got to slow down, man. You make it too much. Jose, good to have you here. Yeah. Suckwinder.
Morning, everybody.
I think he won yesterday. I think didn't he win?
Yeah.
Or the day before? Yeah, so cool. Mr. Peeps is here. Oh my God. Yeah, Mr. Peeps, you heard Troy making that little special effect. That was cool. The pachika pow. Whatever he said. However it went, Troy. Oh man. Yeah. We had a lot of fun at your expense yesterday, Troy. I hope your ears are okay.
It doesn't surprise me.
It was all good. It was all good. We just have we have little sound bites. We have a little Panama to play and stuff like that, when we get bored. Put it out.
Always happy to provide entertainment, even when I'm not here.
Yeah,
even when you're down.
Oh yeah, and you missed. So Coach Tony joined us in the chat at I think the latter half of the day, and he wanted to report that he is human and he had a red day after all, and so we were giving him a little bit of grief about that. Yeah, I think Adelina sent him a bird because he seems to have. I don't know, for some reason he's got an issue with birds.
Did you give it to him in stereo, Adelina?
Huh?
Did you give it to him in stereo?
I don't know what's that in stereo.
I know what you mean. Like Flip of the Bird. We were talking about this.
Got it.
You said you gave him the bird. Did you give him one or did you give him two?
Yeah, I know. No, we supposedly sent him a taxidermied bird,
right.
And it arrived at his doorstep and it caused him a red
that kind
day.
of bird. I thought you were talking about reading between the lines.
Well, we did. We talked about that too. That was the follow up. We went there.
Okay, you did. All right. Well, you do a lot of things for other coaches, and Tony, we're doing it for you, buddy.
Yeah, exactly. And oh, by the way, Mr. Tony, if you're going to be listening to us, today's a good day for you to buy us those direct accounts because For all of those in the chat and all of those around Hola Prime land, we have a nice major discount today, Wednesday only. So up to 70% off on challenge accounts and 20% off on all direct accounts. So Tony, we're saving you 20% today. You can go ahead and just throw that stuff in for all four of us. We'd be
Hey, so explain to me a direct account. I'm kind of ignorant on these different accounts. What is a direct account? What does that mean?
It means you don't have to go through any, you don't have to pass it. You don't have to do like a one-step challenge. You just get an account and you can start taking profits immediately once you kind of build up some consistency. So it may take you 2 or 3 days, and then you can start pulling out payouts. And I think it's a 90%, if I'm wrong. Paul, I think, is it 90? I think it's 90%. Yeah. So what it is basically, Troy, is it costs a little more for the account, but you get to the opportunity to take a payout right away and not have to wait to pass and then get funded and get whatever payout percentage you elect to do on the funded account. So the direct is just real simple, 90% payout, go right in. So if you're confident and you can trade like you can, Troy, getting a direct account makes all the sense in the world. And so Tony's done that. Tony's got a couple of accounts, and he may buy more today with a 20% discount. So like I said, for all you guys in the chat, and also Forex accounts too, 70% off, up to 70% off. So take advantage. If you've been on the fence, today's a great day to jump in and grab some more.
Get a sweet little discount. Sweet little discount.
Yeah, who doesn't like a bargain? You know? I took a little tiny scalp during that move down, so that's what's going on with my P&L.
Okay.
All right.
Just a little quick
way to get started in the morning.
Momentum play.
Nice little.
I'm kind of like Daryl. I like to wait till the first 20 minutes is over. Maybe even wait till I always use the 30-minute initial balance, not the 1 hour. So, 10 till 10 o'clock. That's when I like to start. You sort of have your VWAP has a chance to sort of expand, because the volume comes in. Everybody kind of calms down after the open. So, I like to wait at least 15 to 20 minutes. But this thing was moving so quickly to the downside. I'm like going, I'm just going to jump on here and take a few ticks.
Yeah, I don't blame you.
Definitely.
I hate it when I break my own rule.
Well, I'm in too. I'm only we're 7 minutes in, and I'm in already another trade. So I said I was going to be patient.
Right. Yeah.
I was patient. I was patient for 5 minutes. 5 minutes.
5 minutes.
God.
I'm into
It's like Sam.
a bot.
It's like Sam saying, I'm going to hold this longer. Oh, I'm out.
Exactly. So true.
Exactly.
So friggin' true, man.
All right. Well, we got Adelina's in a long.
Switch to the
Troy
1 minute.
took a little scalp short. What are you in, Daryl?
Are you long, Adelina?
Yes, or?
No, I'm short. I'm short. I'm short.
Well, if you look at the Dow, there's a reason why she's long for a reason. If you look at the Dow, it is straight up.
That's cool.
Well, as the Nasdaq is straight down.
ES is just sideways.
Yeah.
Isn't that funny? Yeah. One's up, one's down, and one's in the middle, like the Goldilocks and the Three Little Bears.
Pick your poison.
All right. You guys tell me if you guys want to come in, if we want to do it, come in at 11 or 11 at 2 p.m. Eastern as opposed to 2:30 to get the announcement, and then just if you want to trade through it all through the press conference, or whatever you guys want to do, it's up to you.
I feel like we should. I feel like we should for sure. But the production crew is going to check real quick to make sure that it's possible for us to get that done. And and we'll see.
Oh, I see what you. Yeah, I see. I didn't see you send a message. Okay, got it. Perfect.
Yeah,
You're ahead of me. I love it. Good job. Good job.
He's the first mate.
He is the first mate. Skipper too. Are you? You're. Hey, little buddy.
Gilligan.
That's it. Exactly. Troy,
oh, G.
you
G is for Gilligan.
Dude.
Yeah. You want to know what's funny?
Oh,
so I used to watch
Ginger.
I used to watch Gilligan's Isle. I used to watch Gilligan's Isle religiously. I used to watch that show religiously as a kid, and my uncle used to call me Gilligan all the time.
Oh, that's funny.
Which is pretty hilarious.
That is so funny. Yeah, we can use G for Gilligan or G for Ginger. Pick your poison.
Yeah.
I think Gilligan. I think Gilligan makes more sense because you and Troy are like the Skipper and Gilligan, man. You guys could totally be the duo. You know, Adelina's going to be like. She's Ginger, the model, not Mary Beth.
I'm going to thump Gilligan on the head. Right? You remember that? Skipper was always thumping Gilligan in the head with his hat.
Always. Yeah.
Always. See, if production would switch Adelina and Paul, then I could like literally.
Oh yeah, you could look like you're hitting him on the head.
You know?
Oh my God, that's funny.
Yeah.
That's funny.
That would be funny.
Yeah, man.
Unfortunately for Paul, I mean Gilligan, Adelina's in the way.
I protect you, Paul. No worries.
Unfortunately. Thank you, Adelina. I appreciate that.
Hey, it's Gilligan. It's Gilligan.
Yeah. That's right.
Gilligan.
Skipper too, the millionaire and his wife, the movie star, Professor and Marianne, here on Gilligan's Isle. All right.
Okay.
Man, I remember in the summers.
All right.
Like when I was elementary school or whatever, I would wake up and watch
at 4 o'clock in the afternoon.
Flipper
on the afternoon.
Watch
TV.
Flipper, watch Gentle Ben.
Yeah.
Watch all those shows.
Flipper.
I loved all that stuff, man. Me and my brother and sisters were addicted to that crap. We loved it. It was so much fun.
Yeah. We watched Gilligan's Island and Flipper. That was it. That was the cat's meow right there.
Yep, exactly. Yes. All right, let's go, ES. Come down a little more. Let's come down. Let's come down. Right.
Yeah, come on.
Like I said.
That's that quadruple 6 level coming right up on it here.
Mm-hmm.
See if we can't break through it.
Yeah, like we said. Yeah, exactly. Yeah, so Troy, we talked about this yesterday. Instead of 666, the number of the beast, we got another 6 with it. 6,666 in ES, for what it's worth.
66. Woo, that's scary.
Mm-hmm.
It's been a bit of a support level these last couple days.
Yeah, I know. I was gonna say it likes to hang out there.
Yeah.
Point of control machine.
Yeah.
Believe it or not.
Yeah.
On the 1 minute now? Yeah, I am on the 1 minute. Okay, so.
I mean, traders are almost like baseball players when it comes to superstition.
Yeah. Don't step on the chalk line, man. You know, put the bat down a certain way. Take your unvelcro your gloves. 3, 4, 5, 6, 7, 8. Step out of the box. Tap the home plate. Step out of the box. Oh my God, it's like crazy. Race car drivers are the same. They're very, very like superstitious like that too.
Right.
Thing, I guess.
Yeah. I'll say on a day like today, Daryl, would you generally be more privy to exiting your positions sooner than you normally would? Because you're a patient guy. You like to hold your positions relatively long. Like, would you on a day like today where you generally would think it's going to be rangy, are you going to kind of trade any sort of different? Like, you're going to have like a little bit of a different strategy going into the day, or are you going to just do what you normally
probably
would do.
until I would probably do what I would do right now until about like an hour
11.
before 11 my time, 2
11 to
o'clock
noon.
your time, right? So because then don't forget the book's going to get weird. Like a half hour before the announcement, it's going to get really weird. I probably want to get the hell out and then
Be all
watch it
funky.
do its craziness. Yeah, it's going to get weird. But like for now, I'm okay. I'm okay because I think I don't know. I don't know how much range we're going to get out of this, but I think we're going to go down. I'd love to see the overnight low tested. That would be a good move from here. That's like another 20 points
54
down in the ES. Yeah, 53 and 3/4, 54, call it that. Exactly, whatever it is. Or somewhere near there. Because that was just where we came down hard off that NVIDIA China kind of news, and then it reversed real quick. It came right back up. It was a total, I mean, you can see it on my chart, just right back up. So, yeah, I don't know. I mean, I'm just the market's okay right now. It's okay.
Makes sense.
Yeah, and it's not whippy. It's kind of structured right now. It's okay. It's okay right here. Actually, what I need to do, now that I'm talking to you guys, I need to get in a break even at least, for the love of God. Move in. Where am I? Oh, I moved the wrong. Backwards there. Oh, so I'm right at my overnight. I tried to grab it. I grabbed my overnight high. There we go. Get in here. Okay. Can we see that? It's probably going to come up and take me out now. I'm trailing pretty good. It's okay if it comes up. It came up.
Yeah, we pierced below that value area low and then popped right back above.
Yeah. Yeah, and it may go back up to like point of control and then rotate again. So come up to like 70 or 71. This profile's not right. Let me just see if I go back to the open 630. Yeah, there's no real low volume. It can come up here, maybe.
Yeah, definitely. Well, the Bank of Canada cut their rates 25 basis points. So
I saw that.
Breaking news.
I saw that. Yeah, I know.
Oh, if Powell does not lower rates, we are going to hear nonstop ridicule from Trump. He is not going to stop. He's not going to let it go. He's going to be full tilt, megaphone.
Yeah.
He's going to be too late.
Yeah.
Too late, Powell. Too late, Powell. You know, that's going to be extreme. I got mixed. Daryl and I talk about the fundamentals almost every time we do the prime wrap up. And, the fundamentals do not support lowering interest rates yet. You still have all this hangover from the tariffs. And, that takes such a long time to filter down into the economy. It takes a long time for it to get to your local 7-Eleven or your local Dollar Tree, finally get there, finally get to Walmart. And it's just taken so long. We're not seeing that number in the CPI or in the PPI. We're starting to see it in the PPI, but so if you're even remotely conservative in your approach to managing the economy, you're going to be cautious here about lowering rates, because lowering rates is like pouring gas on the fire, and it's not just a little tiny bit of gas. The interest rates are so important to the economy that just a little bit, boom, you get this giant explosion. So I'm very concerned at the Fed that he ends up lowering because of political pressure, and maybe it's too soon to lower, and we end up getting more inflation, and then they have to backtrack. And there's nothing worse than going up, down, across, sideways, back up. I mean, you want to give the market a stability, right? And so it's really looked down upon that they might lower and then have to raise again, or vice versa. They want to get it right the first time and not have to monkey with raising it, lowering it, raising it, lowering it. So it's a hard decision. It's going to be interesting to see what happens, because I think there's just a maximum amount of political pressure on Powell to lower rates, especially with Bank of Canada. Didn't the ECB lower rates as well? Everybody else is seeing the contraction, the global contraction, because of the tariffs, and they're already reacting, and we're not. So we'll see. We'll just have to wait and see.
Yeah.
So speaking of all that, Troy, Peter Navarro, good old freaking Peter Navarro, Trump's one of his advisors. He came out, I don't know when this was. I saw it when I was going through the news before we got on live here. And he came out somewhere in the overnight, maybe a couple hours ago, and he says the Fed needs to lower 50 basis points today and 50 basis points at the very next meeting. And if they don't do that, they're at least 100 basis points behind the curve, and they need to lower it for the Fed funds rate borrowing window. So, I mean, they're looking at it really from the aspect of paying down the debt for the government, but that's not going to help the economy. You know what I mean? I hear what they want to do, but it's got far-reaching effects. All this stuff. It's just, I mean, God, if they came out 50 and another 50 when they don't need to, we really don't need to. There's no reason.
Well, the only reason we'd be cutting 50 basis points right now is if there was some sort of extreme concern about the jobs market. I mean, I think that's the only reason why we're cutting. I think at this point, it's the jobs market. I think there's a lot of pressure on Powell right now with jobs, and I think he genuinely is just cutting because of jobs. That's basically it for now, because there still is a little bit of worry about inflation. I mean, inflation at least came in line, or was a tiny bit better than expected on that last rating. So there's a little positive there, but the job situation is the scary one for him, and he's going to probably cut a quarter like we see in the Fed Watch tool. But man, if it was 50 basis points and they're thinking we need to get ahead of something that we see that others aren't, we're going to be into a little bit of a frenzy, I think, this afternoon for sure. But yeah, stuck between a rock and a hard place. I think
it's not just what he does; it's what he's going to say going forward too, right? Like where we see things at the next meeting, and going into the next year, and that's going to get everybody all. God, that's where the fun begins.
Yeah,
what he says or what he doesn't say, and everybody tries to read the tea leaves. So crazy.
Well, it doesn't help when you have the Bureau of Labor Statistics that can't figure out how to add up numbers, and it's been a problem for years and years and years. And I don't understand why they don't go directly to the IRS, because the IRS gets paid, collects employment taxes, and if it's going up, labor's okay. If it's going down, labor's coming down. I mean, it seems like you'd have more of a real time, thumb on the number through the IRS, because virtually, I mean, sure, there's companies out there that, like, I get paid as a 1099, so I report my income once a year, and I'm sure some of you guys who get 1099s, that doesn't really get. That's not, you're not paying into tax, so the IRS doesn't know what you're making or not making. Right. But that's a small percentage. The vast majority of people are payroll or W-2. They have payroll, which shows the tax, and the government's sitting here. The IRS is taking in the tax every 2 weeks or whenever the pay period is. They should have instantaneous payroll information, but for whatever reason, they don't tap into that. I don't understand. And that would not be delayed. That would be, it might be delayed by 2 weeks until the next pay period, right? But it not like the Bureau of Labor Statistics that, my God, they come back 6 months later and go, oh yeah, well, it was our number 6 months ago was off by 1 million people. I mean, that's just complete
we have
garbage.
to revise.
You know,
We have to do a revision.
They really need
We
to
were
overhaul.
so sorry.
They need to overhaul how
That's
they
terrible.
how they collect their information. I mean,
Yeah,
for God's
agree.
sake, we've got the internet now. We're real time, people. Let's get up to the speed here.
Right.
I mean,
Yeah,
am I wrong?
boy.
Am I saying
Those
stuff
Troy
that's not
dropping
right?
boys.
I mean,
No.
No,
You're
no,
right.
I
That's why I
think
call it
I think we
the Bureau.
I think our
I would
government
say take the L out of it.
and the banking systems, they're all
Take the L out
like
of it.
government and banking systems in general are just so hard to change, like their structure. They're like foundational
sweet.
structures and advancing their like
Frickin'.
their kind of structural ways. So I think that's that's the unfortunate side of it. But I think it's happening ever so slowly. It is happening, hopefully. Definitely should be if not already. But yeah, I agree, Troy, for sure.
This stupid thing. I got long and then it immediately just absolutely just dropped on me. All right, so now we're getting into the nitty. Now the fun is starting, I think.
Yep.
Starting
Almost 10
early.
o'clock.
God.
Let's start the
Adelina,
party.
That was definitely.
Do.
Did you think that was a?
You got out of your long there.
Yeah.
Did you see that? That's an
It
algo.
took me out. Oh.
That was
It
an
was.
algo, man.
For sure.
All right, let's see. Okay, that's fine. Putin. Yeah, whatever. Okay. Are we going back down now? Like I wanted. Damn, serves me.
I initially wanted to go to 46, 450, but it looks like it doesn't want to go there, so I just got out.
Okay.
Well, at least
Yeah.
you're
Gotcha.
more than 60 cents away.
So far.
You're gonna
anyway.
catch me till the end of the day.
He's kicking my
Oh
ass.
boy,
by
what do
20
we got
bucks.
going on here? What in the hell? That's a big.
This is exactly what we're talking about. This is
Algo.
we're just trading a classic
Yep.
choppy range in the
Yep.
ES, man. This is gross. Absolutely
Agreed.
gross.
I know.
What's that Sam's phrase? Filthy market.
Filthy.
Filth.
I can't say it in
Filthy.
British.
It's
Filthy.
absolute filth. Filthy. utter rubbish. Oh man. What's it gonna? This is nasty. This is just nasty.
Okay.
Oops.
Now, with the, I don't know. I feel like with the cutting of rates, everybody's thought is that the rates are going to be cut, and I feel like the consensus, which it's debatable as to whether you should play a consensus kind of strategy here when you're looking at the markets. I think a lot of people think that when these cuts start happening, the markets are going to go down. But maybe we see with the cuts, I mean, you would think, or naturally when rates are cut, obviously capital is a little bit more abundant. All of a sudden people start borrowing money, try to spur growth, etc. So you can see the markets, rise off of that. But maybe we see like a little bit of a short-term rise followed by then like a longer-term downtrend if we see jobs growth like not pick up, or maybe if inflation picks up a little bit again. Maybe we just wait for that data point to see that, hey, we cut too early, or hey, we essentially are right on time with the cuts or what have you. I don't know what you guys think about that necessarily. I don't know what the immediate reaction is going to be at 2 p.m. I have no idea. Regardless of whether there's a cut or isn't a cut, or if there's 2 basis points or 2 quarter point cuts or 1 or what have you. But
I don't know.
I'm not sure.
I'm going to say the most responsible thing, which is I have no freaking clue, and I could waste my time thinking about it. I don't know, but I think it goes beyond today. I think we'll see the ramifications of whatever decisions are voted on by the FOMC in the next couple days. We've got expiration. We've got triple witch on Friday. We got to get through all this going into next week, and maybe it'll start to shake out. I think it'll take a little while. And I don't know, man. Every time I try to kind of guess or whatever, I'm surprised and I'm wrong. So I don't even try to do it.
Right.
There's so many moving parts. There's so many things at play. I'm with you. I mean, from a sheer fundamental economic standpoint, yes, cheaper interest rates should spur growth, should increase borrowing, spending, manufacturing, etc. Just all trickle down. But I don't know, because we got that whole tariff dark cloud looming and all of this other stuff. So I don't know. And we also have, don't forget, we're in the US anyway, we're trying to avert a government shutdown. I think by Saturday or Sunday morning or something, whatever it is, which I think they'll get it done. Congress will frickin' do the same thing they always do, wait till the last minute and do some stopgap bill that'll kick the can down the road for 90 days. We'll deal with the same crap again. Yeah, that's all they do. They never solve crap, man. They just, it's a bunch of dude. Why do these people get elected and paid to do nothing? I mean, it's such a joke. Don't get me started.
Preach on.
Dude. Oh, we have to stop. We're all going to go on vacation now. Congress is done for 6 weeks. We're not going to do any more work. It's like, what the hell? We're all working. Why aren't you working? We elected your ass, people. Hate it. Hate it. Drives me crazy.
Yeah.
Well, and the other thing that we haven't talked about is what is priced in. That's the unknown. That's another huge unknown, is how much is priced in.
So true.
Right? I mean, we could say, oh, they're going to lower interest rates. So they lower it, and the market suddenly goes, oh, we don't like that. We wanted a half a point. Or they do a half a point, and they were like, uh-oh, we only wanted a quarter point. You just don't know what's priced in already. And so, it's literally it's like being at the craps table and rolling the dice. You have no idea, if you're going to hit a 7 or a snake eyes or whatever. It's complete random.
Right. Yep. I'm with you, man. Lady Luck blowing my hand. 7 or 11.
Come on. Nice little short there you got going. Here. Very nice.
Yep.
Yeah, I jumped in.
Broke through value area low again.
Just
Nasdaq.
Yeah, don't pull up. Stay in it. All right. Came up to me. That's fine. I think today's going to be like this for me. Short, more scalpy than I normally trade, but I still feel like this can come down.
I'm urged to take a long here right at the bottom of this range. that's kind of my
an ES. In the ES?
Yeah, this would purely be yeah, exactly. It would purely be a range play. Looking for
I'm back in short.
A pop back. But
I'm back in because I trailed and because I
can't help it.
I'm not trying to be. I'm not doing it against you. I'm just saying I got trailed out. I was trailing and it came up on me. But I still think the move is.
Oh no, dude, you're good regardless of what I do. But I just was more so. I thought it was hilarious that you're like, I got to get back in. All right, I'm back in. Come on. Downside. Come on, let's go.
All I can hear is Daryl going, Gilligan!
Oh my God. Hey, buddy. What is he calling little buddy? Hey, little buddy. Hey, little buddy.
It's been so long. It's been such a long time since I've watched.
I know.
Man.
What show is that?
Very
Gilligan's
old show.
Island.
Gilligan's Island.
Probably filmed in the 60s, early 60s, I would think.
Yeah. Yep.
Something like that. You ever hear it?
Black
You ever
and
hear
white.
it? Have you ever seen it, Adelina? Gilligan's Island?
No.
No.
Oh.
So basically, it's a whole story around a group of people that took a little boat ride. I don't know, somewhere out of America, somewhere. They went on a 3-hour tour, and they ran into this big storm. They ended up cast away on this island, and they ended up like living on the island for years and years and years. And the whole show was about all their little adventures on the island. And then eventually, they made this big old raft, and then they got off the island at one point, and this great white shark was swimming around them. I remember. Then they end up like in New York Harbor. Or something crazy. If I recall that. Something like that. But it went on forever. Very successful show. Yeah.
That's awesome.
Where did they sail out of? Did they say where they sailed out of originally? Like the 3-hour tour where they came?
I thought it was out of California.
Must have
Never
been the
could
Atlantic.
remember.
No, I would think it's the Atlantic, I guess, because they ended up back in New York, I think. When they finally made it back home after whenever, 10 years or whatever it was. I don't know.
Yeah.
Who knows? Because they did end up on a tropical island, so it had to be like the Caribbean or something.
Right. Very true.
I thought at the beginning, you guys
Alright,
talking
Ivy.
about if you see the show Shameless.
Yes. Okay.
Yeah, I thought you guys talking about the Gilligans. I'm like, why are they drug addicts? Like, why are they?
Yeah. Now I know what you're talking about. I'm like, okay. Yeah. No, we were going way back. We were going way back in time. We're talking about old, like I Love Lucy and all these kind of shows. Leave It to Beaver.
Yeah, we're talking about when like the
These
wheel was
classic
invented,
stuff.
Adelina, back in Troy's and
Fire.
Daryl's childhoods.
What were you doing then, Paul?
Yeah,
What
yeah,
were you
yeah.
doing then, Paul?
Oh,
You're my
I was.
age. How can you
I
know all
know.
those?
Right? So weird. I came
You're an old
across
soul.
the tablet. I came across the tablets
old
and
soul.
artifacts as a child, and the fossils, and I just and yeah. And I think I saw Daryl as a painting on one of them, chiseled out.
You probably did.
Troy.
Yeah, some stick man. Yeah. Troy, they have like some guy like golfing. He had like a stick in his hand. He was swinging, but he didn't know what he was doing at first. He had like a backswing. We're like, oh, now we know it was golf. Trying to hit a tumbleweed or something. I don't know what he was. Whatever.
Trying to
he did.
hit
That
a rock.
That reminds me. I still
A
have
rock,
my portrait from yesterday of Sam off to show Troy a little bit later after when none of us are in a trade. or
Oh,
anything
yes.
Here, I'll
Yes.
show
Yes.
Troy. Yeah.
What did you
It'll
do?
be good.
Screenshot it?
No, it's just still on my gold chart. Funny enough. So
Oh, yeah. Okay, cool.
yeah,
cool.
so you'll find it.
Yeah,
very
Sam was
funny,
an
Troy.
artist
You'll
yesterday,
like it.
Troy. You will.
No kidding.
You will.
No, that's Paul's. Paul's
You
drawing.
always know Sam's up to no good when he's quiet in the stream. He's just quiet and he's sitting there and he's tinkering around and you're like, what the hell's he doing?
yeah.
And he's just quiet and he's like, all of a sudden he starts going like this. You're like, oh my God. He made a portrait of me. He made a portrait of Adelina. I think Adelina made a portrait of Paul with the wave. That was pretty good.
Uh-huh.
It was
Yeah,
good.
was
Did he
great.
do one of you too? Did Sam do one of you, Paul? I don't remember.
No, but
No, no,
Adelina's
no.
was perfect. Adelina's was perfect. There's no need for any other. But I did one of Sam Troy, and it's a bit of a masterpiece. I mean, it's a masterpiece in progress. We'll be adding to it throughout time for sure. I'll be adding to it, but you'll like it. You'll like it.
Yeah, Mr. Peeps. I don't think Gilligan Island ever made it to the British shores. I think you're right. I don't think it made it over there. Yeah, I think that's true. Eric says, Ginger, how does she always have a different outfit? I know, exactly. How does she always have some new model actress outfit? Professor had all these cool little tools. Mr. Howell had like, a million jackets and hats and stuff. I mean, it was, crazy. Yeah. So funny, man. Thurston Howell the third. And what was his wife's name? She always called him Lovey. Oh, Lovey. Oh dear. I forget her name, the character name. It's funny.
Oh yeah.
One of my bucket list things to do is to go to Survivor.
Oh my
gosh.
So
really?
That sounds about right.
Mm-hmm.
That sounds about right for Adelina.
That sounds all right.
Jumping out of planes. Jumping out of planes. She probably wants to do bungee jumping. Wants to go try and survive on an island.
Yeah, she already said she doesn't want to do bungee jumping. She doesn't trust the She doesn't. She doesn't trust the cord or whatever.
I don't trust the elastic.
Yeah.
No, I just don't like the movement. Too much movement.
What you just described, Adelina, is probably what we're going to see later this afternoon. The elasticity and the movement of a whipsaw crazy market. It's just going to be like, whoop, 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 whoop. Everyone's going to get just smacked, and it'll be rough. But, I'm with you on that one. All right, come on.
I think we might go to the downside a little bit more here. We tested yesterday's low.
Yeah, I want to get to the overnight low. We did test yesterday's low. Where are we? Yep, we did. Interestingly, the IB low is right at the low of yesterday, basically.
Right.
Interesting. Where we've come right now, or where we just did. So, Let's get a little extension through. Yeah, I got a bungee jump from the Nasdaq today, Jose. I don't blame you, man. It may be that way, especially the Nasdaq. Dude, the Nasdaq would be
nuts.
Good morning, Tom. Waiting for a sweep of the previous day low. Yeah. What are you looking for? Are you going to get long after it comes down? Enter long. Eric Lake, man, made 2,100 pesos on the day. Congrats. He made $30. No, I'm just kidding, dude. I'm teasing you, Eric. You know I love you. You guys kill it. Where is, let's see, Tom.
What was that? The Bud Light commercials? I love you, man. I love you, man.
Yeah, there was something like that. Yeah. Well, we're at the previous day low, Tom. Are you thinking it's going to sweep down? Are you thinking it's going to like exhaust or just stop pick and come back up? I mean, it could. It could. Definitely he's looking for a long at first, but waiting to willing to shift if structure breaks down. Okay. Yeah.
Then the Nasdaq kind of did its little like juke move of sorts. It looked like it wanted to do a little bit of a rounded move back to the bottom, but kind of found some support here at the 24,460 area. This is going to be interesting. The Dow's giving up a little bit though. It made its run. Okay, here we go. Can we drop? Can we drop?
Yeah, ES is coming down too. So if the Dow's coming down, the ES is coming down. That's a good sign. Sympathy says, Coach Tony said we wait 15 minutes after the New York Open and then mark the previous day high and low, and then we follow the breakout. Yep. So that's how he trades. He trades what's called the IB15. I trade the IB60, which is the first hour. And Troy sometimes follows the 30. All it means is that we're just looking at an initial balance of range for whatever instrument we're trading. And then you can use it possibly as something to lean against or lean on or lean against as a probability, right? But simply, I will say today may be an outlier day, just due to what's coming up later on with the FOMC news. So I would take today with a grain of salt on anything that typically has been happening on most regular days.
Yeah.
But if you waited for the first 15 minutes and marked the previous day high and low, then we have broken down to the downside. So you would have probably already been in a trade short, but you may have gotten out if it's coming back up like it is now. So again, how you trade it. These are just guidelines. It's really doesn't tell you what to do, how to make money, anything. It's just something that you hopefully can find an edge or a probability with to take a trade. That's all this stuff is.
It's a framework.
All right, come on, ES. Exactly. Little structure, little trade plan, little foundation, whatever. Okay, let me see what's going on up here. Did we get an answer yet on what we're doing at 2 o'clock? We don't know yet.
We do not know. And there's been so much focus on these equity markets that I forgot to check live cattle.
No, I just looked.
Man, it's been straight to the downside. And I should have been in this already.
There we go. Breakdown ES. Let's go ES.
I'm short a live cattle contract. So I'm short.
IB extension. I love it. Keep going. Let's get down to about the 57 flat. I've got to take profit there. But I, based on how it moves, I can continue to push it to the overnight low, which I have at 53 3/4. Not too far. 3 points away roughly from where I currently have my take profit. Let's sit in this now. Now it's behaving the way I like it to behave. Let me see. I got
Come on, cattle. Drop for me. Drop.
Yeah, I'm also in a short.
Nice, Adelina. Nice.
All right.
Let's go.
I'm already
Short
out.
the Dow. Casually. Short the ES, short the Dow, short some live cattle. Just need Troy to get short the Nasdaq, and we'll be short all around.
I was briefly.
I don't blame you for being a little touch and go or like touchy there with the Nasdaq, because it could easily just quickly do a little bounce up and reject that low of day of sorts or around that area. So I don't blame you for kind of getting in, getting out real quick.
Man, yesterday I got seesawed to death, and I think I made 64 trades. I was up $150, and somebody was like, "How'd your day go?" I'm like, "I made money, but I'm grumpy." Like you work your ass off for $150, right? You're like, oh God, that's just so painful. It'd be up 100.
I know that's how. Like, I was looking at my this account I'm trading, and on Monday when I had a losing day, I made 50 trades. All the other days that I've been green, 16, 22, 24. One day I had 42, which is, I mean, I trade a bunch, but not like, I hate when I do like a lot and I have a losing day. It's like, God dang, it just drives me nuts.
Well, and you do multi-contracts, and that's what that's counting is the number of contracts.
Those are round turns. Those are round. I know it shows as trades, but they're round turns. Yeah, we've
right. Yeah, so if you're doing a group of three, it thinks it's 3 trades, and it's really 1.
It's 6.
Yeah,
it's 6. It'll be 3 in, 3 out when you close it. So I know it's yeah. That's good pointing out. All right, so I came back on my trail. I'm kind of back up. My P&L's back to where I kind of was after all that effort. I'm just kind of back to where I did on my very first trade. Should have just stopped. Hindsight is 2020.
Yeah.
Very true.
We can share my screen
switch over
for
to
now
Paul's.
and
see
what the scuttle does. See how she operates here. We got a couple of liquidity orders at the 230 half level and 230 level, some larger bids that we could eat into here. It would be a quick down move. If it is to happen, most likely it would be super quick. So
you want to switch over to your screen, right, Paul?
Yeah.
Let's switch over to Paul, then we can, and then we'll.
All right, cool. All right. But yeah, so right here, so essentially I can mark off a couple of lines to make it a little bit easy, but a lot of liquidity at that 23 half line and a lot of liquidity down here at the 23 level, which is actually where I have my take profit. So the thought is just eat up the liquidity, make a quick down move, and we're starting to make a little bit of a move here.
Yeah.
Come on.
Yeah.
Come on. Just ate through the half level, actually. Just fully ate through it. Now, if we can't just see a nice little push down.
What do you have? What do you have? One lot on?
I only have the one lot on.
You want? Okay.
Yeah.
Come on, yes. Let's go too. Let's go. Get through this.
Ooh, a couple of bigger lots got put up here. Okay. So we ate through that now. Now we've got a large lot at 230.20 and 230.10. Dang. Okay. Bunch of big bids at those levels down below. So might move my take profit up here a bit. Okay. But yeah, got to play the waiting game with this one a little bit. Sometimes this liquidity, it just drops in an instant, or it'll pick it all up in an instant, or it'll pick it up level by level, and but it'll take like 1 minute to just absolutely crush a level, rebound, then 5 minutes later it will crush another level, rebound. So got to be patient. Got to be patient in these illiquid markets.
Come on, ES. 5 minutes till my IB is set. Let's get an extension. Just a little bit. Come on, you can give me a little more.
What, I saw gold hit an all-time high yesterday.
Yeah.
Yeah.
No, yeah, correct. Yes, again.
37.
ES did too.
$3,700.
Yep.
So you got to have to
ES
look
did
at gold
as
as well. You know, gold's a fear and greed kind of thing. So if gold's at all-time highs, that tells you that the amount of fear in this market is way higher than we're all willing to admit. I mean, here we are. Markets are at all-time highs. VIX is relatively low, but gold's at all-time highs, which tells you the real story, because the VIX is garbage in my opinion.
Yeah.
But gold being this high tells me that there is a lot of concern, a lot of fear that is in the markets. I don't think the VIX, I don't know what's going on with the VIX. I don't understand the formula. I don't think the formula works anymore. I just can't imagine the VIX being, what is it? See, it's at
they keep changing it.
35.
The problem with the VIX
formula?
is they keep changing it up. Yes. And they're and it also goes with well, I mean, look, the bigger players of the index changes things too. So I mean, it's usually pretty good, I think. I don't really lean on the VIX, but I think, Paul, you do, don't you? Do you look at the VIX sometimes for volatility?
I used to look at it a lot. I usually what I do is I keep a chart of it up, on like a 5-minute chart of it up, just to kind of see how the VIX like futures are playing around, but like what the trend seems to be in the VIX, and I'll look at the VVIX too, the VIX of essentially volatility of the VIX every once in a while, which is interesting. But I don't like use it to like as a indicator to get into a position or out of a position. It's more so just to see if there is any possible confluence with anything that I'm looking at. But very, very little do I take it into account at this point, honestly.
Yeah, I know some people that are real religious about using it, but I've never found it useful for me.
For options trading, that's a whole
other
thing.
I think it's
taking volatility
options or
that's
swing and swing. Yeah, I think swing and position would be more vital.
Well, I mean, the traditional thing is if you have a low VIX, you buy calls. If you have a high VIX, you buy puts, right? And that's sort of a general idea that's been going on for 1,000 years, or it feels like it. But that's just not the case, because you've got a really low VIX right now. I mean, 15, 16 is nothing. If we go back to COVID times or back even further, you see VIX that correctly, show the market fear and greed, where you have a VIX value of 80. Where when that's when you want to buy puts like crazy, but the buying, I think the VIX is just not showing the true risk. We're at all-time highs, and it keeps, the VIX keeps going down. It seems like it seems counterintuitive. It seems like as the market continues to go up, the risk becomes higher and higher that it's going to come down and correct. But the VIX doesn't show that at all. Whereas in COVID times, the VIX spiked appropriately. It was appropriately spiking to show the fear. But yeah, I don't know. Like I said, I don't understand the formula. I used to watch it on a regular basis, almost every single day, and now I have it on a blotter on my other screen, and I glance at it every once in a while. It's not something I follow because I just don't believe it. I think that anybody who thinks the VIX that the volatility is at a 16 is crazy. The number should be in the 30s. It should be in the 30s right now.
Yeah.
I'm just saying it should be in the 30s based on volatility that I see in the market. So I don't know. It's one of those things that's eluded me. I really like the idea of tracking volatility as a risk on, risk off kind of thing. But I just can't find a formula or find something that seems to be closer to reality.
Yeah. I mean, to take your earlier comment about, like buying calls and buying puts depending on the the environments, buying calls when you're in low volatility and buying puts when you're in high volatility. I would take that even one step further, is more even like, basically sell premium in high volatility and buy premium in low volatility. Just like but when the thing is that the key though is when you are a seller of premium in high volatility environments, you really got to be careful. You got to have the risk management down in the options markets. That's for sure. Like, you can't expose yourself to the infinite loss side of things. It's got to be calculated credit spreads and all that. And super calculated and strategic credit spreads and all that. That's that good stuff. That's a conversation for a whole other time. But yeah, very interesting to see, the volatility, because I don't remember how long ago it was. I was talking to a friend about volatility and how, like, I was like, hey, volatility, just because, like, we know that the VIX is the fear index, right? And that volatility is based off of essential, like, drops in the market. The VIX spikes when we see drops in the market. But I was telling him, I'm like, there are times, believe it or not, there are days where we have volatile up days, and the VIX does act as like it does increase a tiny bit. There are days where you can have volatile up days. It's just not as pronounced as the volatile. Yeah, the volatile down days. Yeah. It is possible. And for whatever reason, I guess that boggles people a little bit, but at times, but it's possible. It is possible. Come on, cattle.
All right. Well, let's make a little announcement here. We're going to be doing a little coaches challenge on Friday. And I'm going to wait because we're going to have a little screen pop up here. Here we go. 4 coaches, 5 hours. Who's going to come out on top? So these 4 coaches here are going to be battling it out, mano y mano, on Friday. So the 4 of us will just be, just for bragging rights, we'll be trading our normal instruments that we trade. And whoever makes the most by the end of the day will be the winner. But we're also going to have, I think, the ability for you guys to vote for whichever coach you want. And then you can get some prizes that way. And then a week from Friday, we're going to do something that's super exciting, where we're going to have the Traders Takedown, where viewers, our subscribers, get to battle their coach of their choice. So 2 viewers get to battle 2 coaches head to head, same instrument, and it'll be the same kind of thing. And there'll be some really great prizes for the viewers if they win and they manage to beat any of the coaches. So if you want to apply for that, please go to your email and send an email to contact@holaprime.com, or you can go and DM a moderator in the Discord server and let us know that you're interested in getting involved in a Traders Takedown, which starts Friday, September 26th. So like I said, this coming Friday will just be the 4 coaches battling it out. And then next week, Friday, we will have subscribers and viewers versus the coach of their choice. Should be pretty fun.
Yeah. That'll be a fun one for sure. Both of them between this Friday and next Friday. It'll be very interesting. This Friday's, I think going to be hilarious, to be quite honest.
You need
I
to
think
call
we're
MGM,
the
put
coast-
bets on.
Yeah, right.
I know.
Right.
Tony's chomping at the bit. Tony's dying to get it. He's just like,
Yeah.
so.
Yeah, it's gonna be hard. He'll be hard to beat.
Yeah,
He's such a
well,
wild man, and he's not afraid of
Yeah.
size. So that's a dangerous
no,
situation.
he's not. No, but he's only trading one account, so he's been posting those big numbers because he's been stacking accounts. So a little bit of a misnomer. We'll see. We'll see. Chaco Trade is asking Coach Troy. He says, Coach Troy, can I get a WhatsApp? No, he says, Coach Troy, did you used to trade news?
I still trade news.
I think we all trade. I was going to say, we all trade news.
I love trading news. But I like to wait until the news actually comes out. I don't guesstimate where it's going pre-news. So I wait until it comes out, and then if I do the opposite, I'm a contra trend trader. So if they spike up, I'm going to go short. They spike down, and I'm going to be, Johnny on the spot, super fast, in and out, trying to take advantage of the imbalances that are created when the news comes out. Not everybody knowing what's going on. So you have that first group of people that just, they say news, sell, and that the market just drops like crazy for no reason. And then they look at the news and they go, wait a minute, that's not actually bad news. Yeah. And then they right. And then you have that giant rip to the other side. It's another way to say it is a revision to the mean type trade, where it is very much wherever so. Direction it goes initially, you're trying to get it back to the mean, whether you're going short or going long. And what I have found is that your sweet spot is about 50% of the move. So if you have a big move up, you short it near the top, you want to cover that position near the 50% of the move, because for whatever reason, if the news is really good, it spikes up and then it comes down to about the 50% area, and it levels out and goes back up. If it's truly a miscalculation, it will revert to the mean, but I never hang around to see if it will actually revert to the mean. I try to get as short as possible at the top down to the 50% area, cover, and vice versa. If it goes down, I want to be long, and if it recovers to the 50%, that's kind of the money trade. I mean, obviously, if you are the easy trade, I should say, the harder trade is holding for the reversion to the mean. I've done tons of research on this, and on the ES, approximately 85% of the time it reverts to the mean. So it's a pretty high probability trade on the ES. And what you do if you really want to get into this,
it's the algos
type trading,
that do it.
Yeah, if you really want to get into this, what you do is you set up a little spreadsheet and you measure what happened last time. So last time we had the FOMC meeting, it spiked up X% or X number of points. And you get an average for what each event, news, retail sales, unemployment, you can do all these news items, and you make yourself a little database of what the average move is, up or down, and then you park an order. And this is sort of the anti-trade trader talk, because most traders, I never park orders, except when I'm doing news. And so I know that the FOMC, it moves approximately, 45 ticks. So I put my order at plus 45. I put an order at minus 45. Right. So if it spikes up, it trips me in. And I take that little move. If it goes to the downside, it trips me in, and I'm playing averages, average move based on history. That's the way I trade news. So it's very mechanical. And the other thing you have to do is you have to have a pretty wide stop. I use a 1-to-1, and usually I'm looking for on the ES, I'm looking for 30 to 40 ticks. On the Nasdaq, I'm looking for 100 ticks. But that means that I have to risk 100. I'm using a 1-to-1 strategy. So I'm risking 100 to make 100 on the Nasdaq, and it's about 25 to 35 on the S&P. And it can be very mechanical, and you can make it into a really tight strategy. It sounds like it's high risk, but you can make it so it's not high risk. The downside is most prop firms will have some sort of rule around news. Either they completely ban it, you can't trade during a certain window, like 1 minute before to like 5 minutes after. Sometimes they'll do that. So you have to be careful if you're doing prop trading that you have the ability to do that type of trade. But if you're in a cash account, I've been doing this for years, and for my cash account, I use the micros, so it makes me an extra couple $100 every time there's a news item, because it's so wild. Especially on the Nasdaq, you can make 100 ticks, relatively quickly. And your risk is obviously lower than it would be on a full size contract. So, hope I answered that question.
Yep. Yeah. No.
Well,
it's basically a way to enter.
Real quick, I am out of my cattle position. I got stopped out originally for a break even, and then I re-looked at the order flow, and it started getting weak again, and I got in. So I got like half of what I was looking for originally, but literally exactly what I was talking about occurred, where on the order flow, I marked out the lines for everybody to see before this drop happened. I marked out the lines where I saw big bids just sitting, large liquidity sitting at these three levels: 230.20, 230.10, 230 even. There was one at 230.50 that we took out, which was happening when I had the screen shared as well earlier. And essentially, in a illiquid market like this, kind of one of my strategies is essentially just the liquidity hunt. Is if we're bearish and the trend is bearish, and then you see more higher liquidity nodes pop up on the bid side, look for sellers to hunt those down and get out around where those bids are. And that's what I did. I got out at like 230.10-ish here, and then we spiked back up, which is very normal for this kind of behavior, to see the push through the liquidity, sweep it, and then pop back up, and then decide whether it wants to continue downwards, see if any more liquidity pops up on the bid side, or if we kind of just make the low for the day or what have you. So that was a pretty simple one. Made $100 or so on that, so not too shabby on an FOMC day. In order for me to make money on an FOMC morning, I gotta go to cattle. Got to go to cattle or soybeans for myself.
No, you got to go chicken feet. You got to go to chicken feet, man. That's your new instrument. We're gonna create a new one with the CME. We're gonna register.
Exactly.
We'll call it We'll call it CF. Chicken feet.
CF.
We'll do an MCF. We'll do a micro product as well. And and then you get a royalty. You get a nice royalty from the CME or ICE, wherever it's going to be traded, wherever you want to put it.
Definitely, probably ICE. Probably going to submit. I think ICE would be better. I have in the works already to submit some paperwork. I've got paperwork ready for some the FL contract, frog legs. We will be getting that on to the exchange soon.
Perfect. I love it. That was well done.
Good old
frog legs.
We'll be based out of Louisiana for the most part.
Yeah.
But
we oh my Lord. We'll get France to hedge. Basically, the whole country will hedge frog legs off of you and make a kill.
Right.
We can do an ETF as well. A lot of ways to play it. Lots of ways to play it. That's so fun.
Oh yeah. Man. You're gonna be.
That might be hard to trade. It probably jumps around.
Ooh, touche. That was good, Troy. That was good.
That was like
good. I don't think he's had a Mountain Dew yet, and he's on it.
That was easy, man. That was too easy for you.
That was too easy.
Man. Good. That's so funny.
All right, I'll get off the live cattle here, and oh my god, the ES is just terrible.
No, it's flat.
Absolutely
It's dead. It's
terrible.
dead. It's dead. Yeah. No,
Yeah.
the IB got set, and it one ticked it right at the hour, literally right at 7:30 or 10:30 for you, and it pulled back and it hasn't come through it yet. I'm holding for it to go down. I still got to take profit at overnight low if it gets there, but it may not. I mean, it may just.
Yeah.
We could see it ugly like this all the way through till.
Oh man, this is
announcement.
typical FOMC, right? Typical.
Yep. It could be flatlined all the way through for 3 hours now.
Yep. Have a 12 tick range. You know, goes up 5, 6, 7, 8, 10 ticks. Return. It's bigger than since 10 o'clock. We got like a
16-point range on the ES. No, overall for the morning we've got a 16-point range, which is I mean, it's not going to stay this way, obviously, but right now it's just kind of. But yesterday was a pretty tight, rangy day. We had like 25 points or something. Maybe we had more. 88 to. Yeah, like 28, 27 points yesterday. Wasn't great either. Although we did manage to get to new all-time highs in the overnight. Almost to 6,700, but that's the December contract adjusted. If you're looking at September, I don't know what it would be at. I got to go back. What's it September at? Right now we're trading at 6602. See, we're almost below the 6,600 in the September contract, but I rolled. Mm-hmm. This is where it gets tricky also with rollover, because I don't know really which one's taking the lead on the volume still. But this would be the same with the Dow or the Nasdaq as well. Don't know.
Yeah.
Oh, what did I just do? God dang it. What did I do that for? There we go. My thing's all screwed up.
All right.
I said, fella. See, Sam's not here. We have no music. We have no nothing. We got. All right. Let's get.
I know,
guys. It's slow enough now. We can do some. We can do.
Adelina was.
Yeah, she was humming.
Earlier. I heard her.
Yeah, she was. She's very, very good. She's a good girl with that stuff. She's very good.
I was looking at Nvidia stock, and I was looking at we're down $5.
Yeah, that was good.
I love that so much. Dude,
so good.
I need to figure out a way
Troy,
to
you're a legend.
Auto mute myself whenever I start being an idiot.
I didn't get your hot for teacher
Panama
on there.
Stuck in my head.
You should ask for those how you call it? When an artist makes music, you ask for the rights.
Oh, a request
when he uses you.
The copy. Oh yeah,
that's right.
The
that's
the
right.
royalty.
You owe me. Every time you play it, you owe me, buddy.
Oh man! All right, fine. I've only played it like 35 times, so.
Is that all?
It's good. Send me your invoice. It'll be a big one, I think.
Oh man.
No, I haven't played that.
All right, Daryl, you're in a short. You've been in a short for a while, I assume, right? At this point, you've just been.
I've been in this short, right yes.
Yeah.
I've been in this short for a bit. I'm It's hanging out. It's hanging. Point of control came down here, obviously, to around 61.25. So it's been hovering, and I'm, the IB low is right here, and I'm just obviously I want to range extend to the bottom somewhere. You do whatever you need to do.
Yeah.
Just get down here. Hopefully get down here.
You have the Dow fighting in the upward direction. You have the Nasdaq trending downwards, and the ES just flat, like they're essentially doing nothing.
Strange
so
the Dow's.
At least,
yeah,
right. It is strange. It is
a little strange. I'm a little surprised that the Dow is moving that. What's up, Robert? I'll be here. Just another no sleep late morning. Figured it could be a crazy morning anyway. I'm heading to work, so I'll be back. No problem, dude. No problemo. Remember FOMC today. Probably sit on your hands, dude. You don't want to do anything crazy and blow anything. Smart move is no move today. Like Troy always says, not taking a trade is taking a trade. It's a decision.
That's right.
So we have to remember that, folks.
That's right.
It's still a decision.
It's the hardest decision a trader has to make, honestly. It's easier to go long. It's easier to go short, but it's hard to sit on your hands.
Literally.
I sat on my hands for a good 6 minutes or so in the open.
This morning, yeah.
I'm like, I'm gonna sit for a while, and I'm like, yeah, I can't take it anymore. I can't take it. I mean, what can I say? I'm a trader. I mean, I do what I do. I just got to do it. Jose's asking, guys, if I were to set a take profit and forget on the Nasdaq 100, but I would want it to close before FOMC, what level would you recommend? What direction are you going? Long or short, Jose? If you were to set a take profit and forget about it, so yeah, you could set a bracket. You could set a OCO, order cancels or other order. You want to go short, okay? So
short on the Nasdaq.
Yeah. Who wants to take a stab at the Nasdaq? I mean, I can even do it.
So apologies, I was looking at Nvidia for a second.
No, it's okay. He's just looking for what do you think is a good level maybe for him to set a take profit that could realistically be hit before FOMC, right?
All right, let me look. Let me give it a look real quick. I've got some levels.
What did Adelina say? What do you think?
325.
Okay.
325.
Just closing the gap. Just a little bit above.
I like that. I like that logic right there.
Yeah. Honestly, if we look at the 30-minute chart here, I'm on NQ right now. Look at the 30-minute chart. We had some previous resistance last week at the 24,400 level on the dot, and we're only 20 points above that at the moment. If we are able to just break through that, that area that Adelina was just talking about, that 40, you were talking about 325, right, Adelina?
Yeah.
Yeah. So that area is literally, I think that's a great area, honestly. If I can draw a little box here.
Let's switch over to switch to Paul, so he can show. His screen.
I thought we were on my screen.
Por favor.
Yeah.
I know, it's okay. I didn't realize.
All right. So on the 30-minute here,
yeah.
I've got the blue line drawn out. 24,400 is the first level where we'd want to see a little bit of a breakthrough. And then below that, right where Adelina was essentially talking about, anywhere between 24,320 and 24,340, you could see a little bit of possible support. But I think those essentially those two levels, 24,400 and that range of 24,340 to 24,320. I think that's where I'd be looking. But that's a far ways down. I mean, that's, if especially in that, that's about 100 points down from here.
That's
the purple box.
That's the thing.
Zone, so.
That's the thing. I mean, you want to make sure it gets hit, right? Because if it doesn't get hit and you're open and it whips against you, then that could be a bad thing. So you may want to be a little more conservative just to capture some profit. But again, if you're going to set an order and walk away, unless this is something you do all the time, I don't know if today's the day to do it. You may think because we've got some pretty, potentially whipsawing news that could come out that it'll give you a good opportunity to make more profit. But that's the fallacy, really. You can do more damage than good. So just be careful. I mean, it's your account, your trade. You got to do it. But this is just.
I like to use a trailing stop occasionally. Where you're trailing by 50. Yeah. I know you do, but I mean this is like an auto trail, so it automatically adjusts.
Yeah, I know. I do it. I do it on my other software.
You do it manually. Mm-hmm. You do it manually. Right.
I do it manually on Project X, only on Project X.
Right.
Because I can't trail it on my other software. I have it set to trail. Yeah.
For trailing.
Set whatever ticks I want, and it goes for however
that way
the gap
you
is.
Can do a set. Yeah. Then you can do the set and forget. Because you're sort of covered from any kind of wild whip to the other side. Mm-hmm. Right.
Exactly. Yep.
Yeah.
It just depends on what platform you're using. So
it took me out.
Dow was breaking out, man, to the upside. My goodness.
Took me out too.
Jeez.
Took me out. I do not have IB extension. I do not have an overnight low. God, what are you doing?
That's all the algos are doing right now is they're just expanding the range above and below just to do the fishing for stops. That's all they're doing.
Yep.
They go down, take out the low by 2 ticks. They go up, they take out that little range by a couple ticks. They just repeat, rinse and repeat.
Yeah, stop picking like crazy. I hear you. I know it.
Yeah.
Come on.
I mean,
3 minutes till London's closed. I don't know if that'll do anything.
It could. Good.
Yeah, once you get those pesky Europeans out of the way, then the market can do something.
Man. Dang, a lot of liquidity is coming in though. I don't know if this is algo.
The Nasdaq is just still in its little bearish channel. It's respecting the
Mr. Peeps. We're all European though. All of us here. We're all European. Adelina was born in Europe. He says, "How rude, Troy." Calling those Europeans.
Hey, my heritage is German, so I'm.
I know we're all. That's what I said. We're all European ethnicity. We're all Europeans.
Yeah.
Mm-hmm.
Yeah, my great grandfather immigrated from Germany to the U.S., so that's only 2 generations back. So just before World War One.
Yeah. My grandfather escaped Poland from the Nazis. So, yeah, fun times.
Wow. Yeah.
Yeah, I was trying to be European cheeky there, and didn't come off well, I guess. Sorry, I apologize. No, trust me, I'm not
You
slamming
don't need
on
to
the
apologize
Europeans
to
at all.
Mr. Peeps. Mr. Peeps has tough skin, thick skin. This guy, he's a legend. Yesterday he was in the chat, Troy. He was like doing body work on a car. He's like painting it in a spray booth. He's taking like some kind of Forex trade. He's in the chat, mucking it up with us. He's like dancing to music. He's doing it all. He's a total multitasker. So yeah, he can handle it.
Oh yeah.
He can handle it.
Oh yeah.
You never told us, Mr. Peeps, what kind of car it was. I know you said it wasn't that old of a car, but I don't know. Maybe it was a cool little fun toy you're working on.
Maybe he's repainting your Pontiac Aztec. Maybe getting your Aztec ready to go to start making some more deals.
I told you, man. That is the cleanest Aztec I've ever seen. Ever. I've never seen. I'm literally when I see them, they look like a POS.
1977 Pacer.
Gremlin, Pinto, Corvair, any of these awesome cars of the day.
Was it the Pacer where if you bump into the back bumper, it's like ting, boom, it blows up.
Boom.
Remember that?
That was the Pinto. I think that was the Ford. That was the Ford Pinto that they said the
Pinto?
gas tank would blow up. Yeah, it was the Pinto.
Yeah.
No, it was a Corvair. It was a Corvair. That was Charles Nader. That was his whole deal. Remember? Wasn't it?
Oh, I thought
Ralph
it was
Nader.
the Pacer.
Ralph Nader's deal. I don't know. Let me Google it. It may be right. Mr. Peeps. Honda Prelude. Oh, sweet, dude. Yeah, we have these. We have Preludes for sure,
There's
man.
a bolt on the bumper, and when you hit the bolt in the bumper, the bolt would then go and pierce the gas tank. So it was a really poor design. I remember that. I don't remember if it was a Pacer or a Pinto.
It could have been the Pacer. It's a Ford Pinto. Yeah, Ford Pinto.
Was it the Pinto?
Exploding the gas tank. Yeah, Pinto.
Yeah.
The explosive history of the Ford Pinto. They even made a YouTube documentary on it called The Explosive History.
Oh my god.
Oh shit.
Yeah, basically, if you got rear-ended, you blew up.
Yeah, I know, dude. You got rear-ended. You were toast. But I think, damn, what was the Corvair? What did Ralph Nader? Remember, he was like petitioning Congress. He had some whole thing going. He had Ralph Nader. What was his deal with the Corvair? The Corvair was a rear engine, another piece of crap design. He famously criticized the Chevy Corvair in his 1965 book, Unsafe at Any Speed, highlighting its controversial rear suspension. Okay, he argued that it could lead to loss of control or rollovers. Oh, okay, so that was the deal. It was the suspension, not the... Okay. Whatever.
Ralph Nader was the current day Elizabeth Warren.
Oh, tell me about it. You got it so true, man. Pocahontas and her brother.
I know.
Exactly
I love
right.
What's even funnier is that Adelina and Paul are like, what?
Yeah, I'm not a big car guy, to be quite honest. I'm not big into cars. I know very, very little. I actually I had a friend who was like one of my best friends is like the car guy, and if I ever have any questions, I just talk to him about any, and he'll enlighten me every once in a while about car stuff. But yeah, not too much of a car guy, honestly.
No, that's cool. Yeah, the Preludes are cool. What year
Not that I
Prelude
don't
do you have,
wanna
Mr. Peeps? You got a VTEC in it? You got a VTEC motor? Or did you put anything? GT3 RS. Yeah, my son loves that car. That would fit me. I think Adelina has a 911 picture on one of her videos, don't you? You have a red.
Yeah, that's a GT3 RS.
993. It is a GT3 RS. Ooh, look at that. See?
Mm-hmm.
See.
That Miami lifestyle.
That's the car that she takes out just to run errands. You know, she's got like she's got a Rolls Royce Phaeton that she takes out for nights on the town. She's got
No,
McLaren,
Rolls Royce
720S in pink. I'm giving you a variety of cars. You got the luxury, you got the sport car, you got the race car, you got the
Yeah.
You got
The
one you
Porsche's
can take the
the
cat.
beater, the
The
daily
Rolls
beater.
Royce would be perfect for the cat. White pearlescent on the outside, suicide doors, right?
No,
Black
white, no.
with all the little diamond lights on the seat. No, you don't like white? You like red only? Are you
No,
a red?
not
Are you a red?
No, white cars.
You don't like white cars?
White cars.
All right.
It's too simple, too plain. For me.
Yeah, but on a car
I
like
like-
that. Okay. All right.
On the Porsche 911s, I like seeing the white body with like the tinted, like black tinted windows with like black rims and stuff, like the white on black kind of.
The contrast,
I love
yeah.
seeing that.
Yeah.
Yeah, I love that contrast.
I'm kind of sick of the black rims. I have black rims on my car too. It's it's great. It looks good on certain colors for sure, but now it's kind of played. I think it's played out. All the black.
Oh yeah, of
charcoal.
course. I mean,
every car seems to have it now, but
Oh, really?
yeah. Yeah. All right, let's go. ES. Can we get a breakdown? Can I get a what? Can I get a what? Let's go. Let's get in. Let's get in short. All right, here we go. Let's get a little breakdown. Still gunning for the overnight low. Still gunning for the overnight low. How low can you go? How low can you go? How low can you go?
oh,
Oh boy, I got my Beastie Boys. I play my Beastie Boys. Kick it over here, baby, pop. Let all the fly. Where is it? Where is it? Where is it? Where is it? Where is it?
I thought you were still in your short, which is why I had switched to your screen there,
Oh.
but then I saw you were out of it. But then you
No,
got
no,
back
I
into your
it,
short, so
it
at
came
least-
up on me.
Yeah.
Yeah, no, it came up on me. It took me out.
Yeah. No worries.
Shoot, where is it? Where the hell did I put it? Now I can't find it.
Oh man, cattle is dropping hard to the downside now. After it collected all that liquidity, bounced back up. Now it's dropped even further, and it's
That
trying
sucks.
to. Yeah, it's trying to go. Wowzer.
Have you ever noticed, have you ever traded through FOMC or like non-farm or any of these
No.
big news events? I wonder what it would do. I wonder what the reaction is.
Well, it can't do anything because it closes at like 2 o'clock.
Oh,
so
it's
it wouldn't
closed
be
at
able
12:05. Yeah,
Yeah.
that's right.
Yeah.
That's right. Duh. Yeah, that's right.
Yeah.
Well, maybe on the open, it may jump around.
Right.
Okay, here we go. There we go. There's my little stuff. Come on. Let's drop now.
Mr. Peeps. Have to go give. He's going to give his daughter a driving lesson real quick. Might not be here tomorrow.
Oh yeah. She said she's driving. Drop. Come on. Drop. I need you to drop to the overnight low. Let's go.
And we're gonna have to get production to get you a soundboard, like Kramer has.
I know.
Booyah, booyah.
Yeah, exactly.
That you
sell.
You can have a soundboard.
Beep. Yeah.
Yeah. You definitely need that. You need that.
It's very nice.
I love it. Very nice.
It's very nice.
What did you decide? Are you Diamond Daryl?
No, I'm not. I was going to. Okay. I struggled with this.
I like
I'm glad
Dr.
you're bringing
Demento.
it up.
Dr. Demento, that's you.
Oh,
Dr.
dude.
Demento.
Dr. Demento.
That's what
I totally forgot about Dr. Demento. I totally did.
That's totally
no, I'm
you,
going
man.
with.
That's.
I know,
funny
but
stuff
I'm
there.
going more docile. We're all kind of going docile. I know. Paul, what are you? You're the market. What are you? The market.
Probably going to be
What are you?
the market wrangler or something. Maybe.
The wrangler.
That's good. I like that. Market wrangler.
Especially because he trades cattle and hogs and things. You can lasso and rope them, get them, wrangle them.
You wanna be a cowboy?
I think Sam's going to be the market oracle. I know Troy is going to be. What was he? The
I'm not in.
He was.
I'm not in. I don't do it. Tony, you mean? Tony's gonna.
Tony. Not Troy. Tony. Tony was going to be something. Little Boy Blue. I have no idea what it was.
No, I don't think he'll like that.
I know.
Oh, that's good. I like that. That's funny. Little Boy Blue.
Little Boy Blue. Where the hell is it? Futures.
Something like Nasdaq Navigator.
Nasdaq Navigator. That's right, Nasdaq
Yeah,
Navigator. Because Sam was saying it sounded like a Lincoln Navigator. That's right. Yeah, Nasdaq Navigator. I'm taking one right out of Gilligan's Island. I'm gonna be the professor.
The professor. Nice.
Yeah.
Only because I don't know. I just figured it was just something to do. I don't know. I'm not really the professor, but I went with it. Oh, you came up on me, this stupid thing. All right, I'm in the red.
Unfortunately, I'm not paying too much attention to the Nasdaq, and I feel like that's the Nasdaq and the Dow are where the most of the opportunity is today between the indices. And I just have been more focused
ES
on
is sleepy.
The ES. Yeah. Oh. Oh, you know what we can do real quick? I'm gonna. We can show my screen really quickly, and and I can show Troy the masterpiece. I meant to do it earlier, actually. Let's see.
The Mona Lisa.
Chart view.
Mona Lisa.
That was Sam. Fresh natural ingredients. Whatever. Fresh local ingredients.
Yeah. And so it was Sam on a jog during the day to go get his fresh local ingredients. to make himself a nice meal, Troy. Go pick some oranges, harvest some carrots and broccoli.
What do you got? Broccoli, carrots, peppers. Oh my god!
Make a little omelet.
Poor Sam.
Got to keep myself healthy.
And I wish I would have had time to think about, when you're getting ready to do those videos, how people are going to make fun of you. Before you
dude, I want to redo mine. I want to redo mine. I think we all want to redo ours. Sam wants to redo his.
And who knew they were going to play them like, I don't know, 6, 8 times a day. Right?
Exactly.
I think that's going to change. I think not even around.
They play mine when I'm not around too. They play them all. They play them all the whole damn time. Yeah. Yeah.
They're great. They're great.
If I'd have been thinking, I'd have jumped out of a freaking airplane, but I don't know. That did not cross my mind at the time.
I cannot see that happening. Would you do that? I cannot see that happening. You may surprise me though. Maybe you would.
No way.
I have a backstory behind not jumping out of an airplane, but I'm not going to tell it.
Oh man, leaving us on the cliffhanger. Shoot.
Yeah, I know. Shoot, I know. Jose, you can buy your Porsche through trading, man. You can do it. You can do it. You can do it. Oh, come on. This is rangy.
Yeah. No boy.
We'll just play. We'll just scalp. We'll scalp.
Yeah. Yeah. I don't know if I'm not going to jump into not jumping into the Dow, but if I am going to jump into anything that's not the ES or gold, might be the Nasdaq here.
Come on. Whoa. No. Why would you do this to me? Why, when I put myself at the high of the range, you got to go up and tag it? Why? You're not supposed to do that. You're supposed to roll over. Wow, wow, wow. Nice and nice. Come on.
Jose.
Actually, the beginning of the movie, it was shot in Romania.
Was it?
All those.
Was it?
Really? Yeah.
When he was like pretending to be in Kazakhstan or something?
Mm-hmm.
Borat.
All those people around, they talk in Romanian.
Uh-huh. Oh, is it? That's so fun. Oh, wow, that's funny. Yeah. Oh, dude, that movie was not politically correct in any way, shape, or form. But it's funny as hell.
I haven't seen it in so long either. It's been such a long time.
I haven't either.
I can't remember half the movie, if I'm being quite honest. So
no, I don't remember half. I remember it came to the States. He was like interviewing. I don't know. It was just goofy as hell.
It's so funny.
It is funny.
The Romanians didn't like that part that they put it, but
yeah, I bet
the movie is funny.
But see, we didn't know. We weren't really trying to make fun of the Romanians because we didn't know.
No, yeah.
They thought it was like Kazakhs or something.
Mm-hmm.
Yeah.
Oh, you freaking ES! You freaking ES!
Yeah.
Is the Dow still going long? Is the Dow melting up?
It's not going
Yep. Yeah.
nowhere for now. It's
making
uncertainty.
little stair steps upwards ever so slightly. It's a little melty. I mean, looks like it's trying to consolidate to break through the high of day of 46.55, but might take another
Come on,
10
ES.
minutes.
Come on, ES. Just freaking cliff dive. Cliff dive. Just sweep. Just do a stop pick down here, the overnight low. Just rip. Rip it good. Whip it good. Do, 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 do. Dun, 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 dun. Correct that whip. Dun, 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 dun. Break your mama's back. Dun, 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 dun. Dun, 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 dun.
I do like
When a problem comes along,
I kind of like the short in the sense of like you're basically hugged up against the value area low level at least of
yeah, exactly.
66.
Exactly right here. Yep. Yeah, good looking out there, man. See, that's why I'm holding. I just put the stop. I wanted to stop tighter, but I put it up here. So obviously but it was moving and I was like getting a little nervous, but I needed to come down. Come on back. Come on back to earth.
Yeah. And I mean,
come back down to earth.
I'd probably be looking to be out by 66.60 at the latest. I mean, probably that's where so much support has come in.
You get out that soon, huh? You get out before the IB. All right. Well, I got my stop at 6666 on the nose for whatever that's worth.
Mm-hmm.
Come on.
Because you can just see like on the 1 minute in the ES that anytime we break the 6660 area, it's like 50% of the time it's a wick through it and then we pop back up. So that's kind of why I was talking about that specifically.
So far it's been like that, but I mean, I know what you're saying.
Come on, Nasdaq, come back down for the ES. Come back down. Come on.
660. And you can see it right here. Like you're saying, everything in here is little wicks for the most part. No bar, no bodies. But same can be said at the top.
You can definitely. Oh yeah. I mean,
I don't know. Just come on down. Come on down. Oh, that reminds me. I got an idea. This will be another sound bite.
Come on, Nasdaq. You got to break here. You got to break down. Got to print Daryl short. There was, I guess, a news conference with Bank of Canada's Governor Macklem just like 10 minutes ago. Not expecting recession, expecting growth of about 1% in the second half of the year. We're not being as forward-looking as normal. So Canada's making some interesting comments. I mean, Bank of Canada's Governor Macklem, we're a long way from even contemplating QE, but your rates are already at 2.5%. I guess I'm maybe
how low are they going to go?
Yeah.
Well, Carney, the current prime minister, is he's the former chair of the Bank of Canada, of their central bank, right? Carney was their long time, and he's buddies with frickin' Jerome. They're like frickin' buddies, man. But now they got Macklem in there, and they're all doing the same thing. But I'm with you. Like, what does he mean by quantity? Dude.
Like you're a long way from doing that. It's like, wait, I thought you are literally doing that now. Like you're getting, at least you're on your way to doing it seems, but I don't know.
Their rates are already low. 2.5%. How much lower? That's what I'm saying.
Yeah.
That's half of where we're at right now. If we dropped halfway, we'd be quantitative easing.
Right.
I don't know. Weird.
Exactly.
These central bankers.
All right, here you go, Daryl. Dow's giving you, or the Nasdaq's giving you a little bit of help here. Let's get you down to that.
Right, cool.
Let's get you down to this lower area.
You can tell I'm really staring at the screen. I'm like just kind of like whatever. Today. Let's go. It's so friggin' slow, man. I think I got to put the sloth back in from yesterday. Grab my sloth.
You do. For sure. For sure. And I'll say that short was a classic range kind of. That was a good short in terms of trying to play a range.
I held it.
Trusting that the range is continuing over that we've seen over the last hour. Get short close to the value area low, and then get out close to the bottom.
All right, come on.
There we go. Pushing. 66.60. Push more.
Come on down.
Come on down.
Come on down. Come on down. You're the next contestant on Price is Right. Let's go. There we go.
Here we go. Come on.
Continuation. Yeah. That's
let's go.
I'm gonna trail right to here. If it can go further, maybe it'll go further this time. If it doesn't, it doesn't.
Get there.
Yeah, keep going. Push through.
At least push through 59. Come on.
Just shake it. Come on. I'm right at 66.60 with my take profit, so, or with my trail, my trailing stop. So
right.
I'm right where you told me to go. I'm doing what you told me, Coach Paul. I'm merely your protege.
Yeah, right.
Or your apprentice, or whatever you call it. Wait, protege? No, apprentice. All right, let's go. Here we go. Get more. Get more. Get more. Get a little more. Come on. We get down.
Get down.
Get down on
down
it.
in the den.
Get down on it. Get down on it. All you want to do when you're doing it.
How are we we're breaking through the range?
Oh, I gotta save.
All right, come on. Go.
Cool.
Broke. Oh yes, let's go. Go.
There we go. See? That's okay. I'm gonna tease it. Let's keep going. Come on down to overnight low, man.
Go.
Yeah, you're not done. This move's not done.
I mean, yeah.
This move's not done.
Yeah,
I mean, if it takes me out, it
this
takes me
point,
out.
overnight low. It's possible for
It
sure.
takes me out. It's fine. But now it got down this far. Continue. Let's get a nice little sweep. Come on. Oh, yeah. Delta's getting good. There we go. Delta's getting negative. Oh, yeah. Come on. Rip, rip, rip. No, don't come back.
Nasdaq bouncing a tiny bit.
All right. All right. It came back on me. That's cool. That's cool. I'm back in the green anyway.
Good trade.
All that work for a little bit.
Trade.
For a little bit.
Yeah.
I do love when those rotations work, though. That rotation was nice. It just kind of came up and just did its thing. But this is how I use, and you know this, Paul. It's how I use volume profile. That low volume area here just kind of came to the outer edge and maybe rotate down, and maybe we'll go back up and do the same. I don't know.
Right.
All right.
For as slow as the markets have been this morning, it's time has gone by decently. It's already 11:30.
Oh yeah,
Eastern here.
Yeah, it's true.
30 minutes left.
That is true. I'm back long for the upside.
Love it. Range Trader McGee over here. They're calling him the professor of the range.
Home on the range. We should do that with you with cattle, where the deer and the antelope play, where seldom is heard. Coach Troy.
I don't know why, but I feel like I need to be drunk to sing that song.
We need to sit by a campfire and get like a banjo or something. All right, don't roll over here. Don't roll over. Keep going up. Maybe I want to get out. Maybe I want to flatten.
No rolly.
It may continue down.
Yeah, maybe.
Maybe.
Might catch support here on the Nasdaq.
I think it may. Come on, buyer. We need a buyer. One buyer to hold it up and another couple to come in. This is going to be ugly. Sam picked the right day to take off, I tell you. He would be going crazy right now. He'd be like, oh, such a slow market. Oh, such a freaking filthy market. It's terrible. Market's not going anywhere. Robert says that, Troy, you got the cool shirt today. I guess he likes your button.
So, a funny story. So, you can't see it, but I have one of those old style coat. It's a pedestal that you put hang your coat on.
Yeah.
And it's outside the office, and I have all my Hola Prime shirts there. So I feel like Mr. Rogers walking down the stairs. I mean, in my neighborhood, right, Mr. Rogers. And instead of taking off his jacket and hanging it up, remember that? I take off my shirt and put on the Hola Prime shirt, and I come into my office. Today, I obviously forgot to put on my Prime shirt, but it's like right there. And anyway, I always tease my wife. Yeah, I'm doing a Mr. Rogers today. changing clothes in my office.
We caught you when you came on the camera. You didn't have any. You were shirtless, and then we saw it. You threw it on, so I didn't want to embarrass you too much. I'm kidding. You're like,
You see all those muscles?
yeah. No,
My gun.
No, it
To pump you up.
Oh, there it is. There it is. My name is Hans, and I'm Franz. We're here to pump you up.
Pump it.
You up.
Adelina's going, what in the hell? These crazy things.
That was a skit from Saturday Night Live from like 1980. I don't know. A long time ago.
Yep. No, maybe. I like the 90s, I think. What the hell is this?
All right. This long is looking pretty decent for you, Daryl. I think it's.
I know.
We could.
I know. I was hanging.
Could do a little bit of turnaround. The Dow is turned back up again at 46.
Oh yeah, let's go.
435 at the moment. Trying to
Let's
get
go.
up.
This is good. This is good. I thought I was in a losing. See, this just tells me I was about to flatten. I so rarely flatten. I was about to get flat when it was coming down here, and I was just like, I'm just kind of glad I just wrote it out because, you know, I mean, I had a tight stop, and it's like if I was going to get taken out, what's the big deal? What's right here? This gray coming down, right? I was going to flatten, but like 2 ticks away, I'll let it get. You know, if it takes me out, fine. And I sat, and it just turned around. I won't call it luck. It's just like trade management, basically, right? It's just. You know, like I was prepared to go long. If I was going to be wrong, it's going to come down and hit my stop, and that's all she wrote. But you know, if, otherwise, I would let it play out one way or the other. And it wasn't like I was going to risk a lot anyway. I don't have a lot to risk. I don't have a lot to lose right now. I'm only up a couple $100. It's a pretty freaking crappy morning. It is what it is. So that's how I see it.
Yeah. Oh, man.
It's a beautiful day in the neighborhood. A beautiful day in the neighborhood. Won't you be mine? Could you be mine? Oh, I see Troy and all my friends here. Oh my God, dude. What did he used to talk to his little puppets and all the little train would come around, and it's creepy when you look back as an adult, but when you're a kid, you love that. Oh yeah, man. Dude. Him and Captain Kangaroo. Mr. Rogers and Captain Kangaroo.
Creepy.
Sesame Street.
A lot of creepy.
I know, man. Oh man. Favorite music. Jose wants to know favorite music artist. Everyone, let's go. 1, 2, 3, go. What is that? Is that an artist? 1, 2, 3, go. I don't know.
I think it was more like him counting us down to then do it.
Let's go. Gotcha. Okay. Favorite music artist? Favorite all-time favorite? It's tough. Very tough. Very, very tough. I told you guys Rush is
fluctuate a lot.
Yeah.
If I like the song, it
It's
becomes
hard.
my favorite artist, and then I like another one, it becomes my favorite artist.
Yeah.
Yeah.
All right. So my favorite, I would say, I got like
Boston.
different eras. I feel like
Boston.
I've got different.
Dire Straits.
Well, I would say, well, Boston's not a favorite band of mine. I would say that they've got one of my favorite albums of all time. I think it's one of their original is one of the best albums of all time, but not my favorite band of all time. Or in that era.
I gotcha.
But modern or like old, like classic rock, probably would be. Boy, that's kind of a tough one. It's probably between, it's like a tie between Pink Floyd and Dire Straits, and then modern would probably be 21 Pilots, and then I'm trying to think like, yeah, I mean, those would kind of be mine. Those would be mine. What about Troy?
Nice. Troy, we got to go way back. We got to go like, what was playing?
Van Halen, Aerosmith. Oh, I like Lenny Kravitz.
You like Lenny Kravitz?
I would say those three.
Kravitz.
Those three. Probably my favorite bands.
Ooh.
Oh man. I don't know what I would do. I don't know what. I got Judas Priest.
Oh.
Rush.
Boy.
Maybe Maiden. No, not. I mean, they're so talented. Nah, they're not. I'm thinking about stuff I go listen to all damn day.
Favorite, so would for metal bands, like so
maybe
Ozzy,
Ozzy, Rat, Motley Crue, these kind of bands. I mean, but I mean, like, yeah, it's hard. I mean, that's what I listen to a lot. Like, I just listen to all that stuff.
Definitely
but I play a lot. I play
big hair bands. Is that what you are?
Yeah, big hair. Yep, hairspray band. All the hairspray ruined it for me. It clogged all my follicles. I put too much Aquanet on. Back, when I was going to parties in 84, 85, 86. It's like, Troy, what kind of problem do we have? It's like, do you grab the blue Aquanet or you grab the pink Aquanet? Which can did you want to grab? I don't know why, but everyone had their favorite color. It was so weird. Yeah. Yeah, no, man. That's my. I mean, I grew up to that stuff, so that's what I listen to.
You said Aqua.
It
made me think of
Aquanet.
It made me think of Aqua Velvet. Aqua Velvet.
I knew you were going to say it. I knew you were just going to say Aqua Velvet.
Remember
of course.
The 1980s.
Of course, man.
In the 1980s, it was like
that
the
stuff
cologne.
stunk, dude. Oh, that stuff stunk.
Man.
That was
Aqua
terrible, though.
Velvet. No, but it was like a thing, man. It was it was like in the mid 80s, wasn't it?
I know.
It was like all these different colognes. It was like you'd walk into a party or something, you're like, oh dear God, dude, you didn't have to use the whole bottle. Right?
They doused themselves. They sprayed it all over, doused themselves. Like, dude, back off the frickin'
Are you an
whatever.
Aqua Velvet man? Remember that?
No, I don't think I ever put that on ever. Do you remember Skin Bracer, the aftershave?
Yes.
All right.
I think my dad used to use it. And then when I was a little boy, I would go in just before I was shaving, and I would put it on my cheeks like my dad. I try to imitate, put a little bit on, and I'm like, ooh, it's kind of cold. It burns. He's like, yeah, it's evaporating. And I'm like, oh, but I was all alcohol back then. It was crazy. It was probably did more damage than anything after shaving. Throw that stuff on.
You remember the first time you used it after you shaved, and you put it on, you're like, it's burning.
Oh man.
Daryl,
just reminded me of Macaulay Culkin in Home Alone. You just reminded me of Macaulay Culkin in Home Alone, like, wah!
There's a reference I can.
Oh my God.
I can relate to. There we go.
Yeah. Yeah. Like he wakes up and he realizes they're all gone. And he's like, come on, Long.
Classic.
Get back up. Get back. That's another great movie, too. Talking about movies.
Home Alone.
Cool.
I like all kinds of different genres, though. I mean, I like a lot of disco stuff. I like some country stuff. I like some rap stuff. I'm not big on classical too much. I can't I don't know. Which is weird because my daughter plays violin and she's in an orchestra and she plays like 3 days a week and I hear it all the time. I go to all the performances, but I'm not a big classical guy. I can't get there. Yeah.
Can't get there though. It's kind of hard to get down to Bach.
Yeah. I mean, I could see it as being very relaxing and maybe drive to it or something, but
right.
Yeah.
Let's jam to Mozart.
I would assume you guys don't really like the 90s decade of music very much, right?
So like we talked about this before, like, I mean, yeah, dude, I do not like Pearl Jam. I do not. But I like, hang on. My battery.
Like you don't like the 90s rock, but so what you're saying is you guys don't like 90s rock, but you like other 90s stuff. Like you can do it.
Oh yeah. Yeah. Well, I mean, I like the 90s rap.
Right.
Yeah,
right.
I like the Beastie Boys. I like Public Enemy. They're kind of 80s, 90s. I like Biggie. That's all 90s. All the stuff we keep playing on here. No, I mean, yeah, I think it's just the whole freaking flannel rock, dude. The whole Seattle grunge movement kind of just irked me because my metal as I knew it went away, and MTV started playing all this crap, and I was so mad, and I was like, what the hell? What is this junk? But then there was some stuff that was good, like Soundgarden was good. And some were had a little kind of good edge to it, so I started to like. I kind of got into Dream Theater a little bit too. My brother was big into Dream Theater, so that probably helped. I don't know. I mean, my brother's like 3.5 years younger than me, but he liked the same music I did. But he definitely liked more than 90s rock because he was still like, I don't know, he was still of that age. And I was just like, kind of at that point, I was like, nah, dude, this is junk.
Oh man,
but
man, like that. Yeah, I mean, I don't know.
But you like, what did you tell me one day? You said you like, who was it, Joe Satriani or Steve Vai? You like Steve Vai, right? You're a big Steve Vai
big time, big Steve Vai, yeah.
So see, Steve Vai, that's part of like when Diamond Dave left Van Halen, he had his frickin' Yankee Rose album. That kicked ass, dude. That's good stuff right there, man. That whole because Steve Vai was his guitarist for that whole album, at least I know that. That's cool, man. Steve Vai is super cool.
Steve Vai is just a legend. Dude's a legend. Guy is an absolute legend. Yeah. Can make the guitar talk however he wants it to.
I know. Exactly.
Yeah, man. So he's doing collabs with like newer like progressive metal bands and stuff right now and everything. And I don't know. He's just the man. I think he's freaking awesome. Definitely one of the better guitarists, I think, that's graced.
Oh, for sure.
Us.
Oh yeah, for sure. Like Yngwie and like all these guys that are. Oh yeah.
Yeah,
for sure.
But I can. It's funny because, like, with the '90s, grunge movement, like you guys are, like you're saying, like you're not a big fan of it. I definitely see why. Like, I know when I listen to it, it's like a very specific sound, right? So it's a super specific sound, and it's usually got a tonality to it.
I didn't like Nirvana.
Like sad. It's kind of sad. I
didn't like Nirvana at all. Nirvana, it just sounded so depressing and so like freaking suicidal, dude. Like terrible. And what did Kurt Cobain do? Like, God, I mean, jeez.
But like
But
there are some
I don't
songs
know.
like you know you can get like I mean there are some like with Nirvana. I mean it's hard to say like oh man I hate Smells Like Teen Spirit or something like that's just an absolute classic of a song that most people would you know be okay with listening to. But there are some but I agree though the sadness
not me.
the sadness of a lot of it is like kind of can be irritating.
Yeah. But there's good. I mean, you know, and then stuff grows on you over time, like anything else.
You know what? You know what's funny is I have the same the feeling that you're talking about with grunge stuff. I have the same feeling towards stuff like I don't know, like maybe you could just call it like pop acoustic or something. But the like the Counting Crows style of me, I can't stand.
Yes,
I can't.
I don't like that stuff either. I don't like it. Or like what, like maybe Cranberries or any of that kind of stuff. But I do like see there's some stuff like some songs like Smashing Pumpkins came out. That was pretty good. There's some stuff that I like. The Red Hot Chili Peppers is okay. Yeah, you know, like some of that stuff. I like Garbage. You know, Shirley Manson from Scotland. That's some of those albums were cool. Some of that stuff I kind of got into. I don't know why. I don't know what it was about it, but I kind of like just liked it. I don't know. I'm eclectic, man. I'm weird. I'm demented.
Yeah.
Like Troy said, Dr. Demento. Maybe I should be Dr. Demento.
Hey, you gonna do the giveaway?
Oh yes, Captain.
Yeah.
Captain, our captain.
I have to do the giveaway. I'm the captain today. I have to do the giveaway. I'm looking for, where is it? Hold on. Oh, yeah. I'm going to sleep at the switch, boys. All right, cool. Are we ready on the back end? I think we're ready. Okay.
Drum roll. Here we go. Come on,
and Jose says his favorite is Eminem. All right, that's cool. All right, so the winner of our $25,000 one-step challenge account is, drum roll please, Chaco Trade. Bring it home, Chaco Trade. Let's hear it. Good job, Chaco Trade.
Congratulations, Chaco.
That's awesome. So keep an eye out in your inbox on your email. We will be reaching out to you with instructions on how to set up that account. And if you're still in the chat, if you want to confirm that you heard, otherwise we'll remind you later if we see you back later on. But congrats, Chaco Trade. All right, cool. Coolio. Yeah.
And back to
Robert said his son played the viola, was majoring in music education. His professor was attempting to push him to music composition. Wow. Yeah, that's tough. She played an orchestra.
Dang.
Oh, the professor played an orchestra for a living most of her life. Yeah, cool. I know, it's cool.
That is cool.
That's very cool.
Such a
man, this stupid trade I'm in is just doing nothing.
Such a specific career path, to go down that's like unique and not heard of often.
Yeah.
So.
Yeah.
Cool. Yeah, this is this market is utter filth. Absolute utter filth. Very boring. There's not a whole lot we can do here. Even the Nasdaq is chilling out now. Now the Nasdaq is just forming a support area at 24,410. Funny enough, I mentioned 24,400 as a level to like possibly get out, and we like hammer candled down to it and got to it by like 4 ticks below it or whatever, and then we popped back up and we're forming some support here at like 24,406 or so.
That was a good call.
But this is going nowhere quick, man. This is going absolutely nowhere quick. So,
Jesus.
if you, Troy, if you could never hear one band again, and the same with everybody, I think what's everybody's least favorite band or musical group or person or whatever? What's everybody's least favorite? Like that you never want to hear again? You'd never want to hear it.
And that's so easy. It's so easy.
I don't hear them if they. I don't want to hear them.
But I can't
Yeah,
stand
I kind
Madonna.
of agree with that, Alina.
Madonna?
What's that?
I can listen to old. I can listen to old Madonna. I can listen to old Madonna, but the new stuff, for sure not. Yeah, I don't know.
Man, when
That's a
the
tough
intro
one.
comes on, I go, "Oh God, we have to listen to that again." They played it so much, you know.
Again. That's so funny. I have no idea, man. I have no idea. What would I?
It's a guy, like he has his face paint like white, and he has a lot of.
Oh,
I
you're
don't know,
talking
like
about
hearts.
Marilyn Manson? Marilyn Manson?
Yeah, that one.
Yeah,
I actually like Marilyn Manson a lot. I like Marilyn Manson. That's crazy. I like Marilyn Manson, man. That's
terrible.
That's
I can't
funny.
believe they play it on the radio. It's not even music.
That is fun. Yeah, I like Marilyn Manson. That's funny.
God. Terrible.
That's so funny, man.
What would I listen to where I was just like, I mean, there's a lot that what do I? You know what I'm really big on? I'm really big in K-pop because my wife listens to it. My daughter is like obsessed. I have like a K-pop playlist when I pick her up at school that I play, right? And I know like I know all the stuff. Like I know all the Blackpink songs, I know all the Baby Monster songs, all the freaking I know all the dude. My wife took my daughter to see Blackpink at Dodger Stadium a few years back, and then they're like, "Dad, you should get a ticket too." And I'm like, "Nah, I'm not gonna go to that, man. Just let the girls go." My sister-in-law went, took my niece, and then all these dudes are in there. And I'm like, and then she went and saw. She's been like to a bunch for a young age, but my nephew likes to take her to play because he's all big on it. Yeah, so I'm big on K-pop because that's kind of just like I didn't really love it, but now it's like in my head.
Lucky you.
I know. I don't mind it.
No wonder you're demented.
Yeah, no, but I'm like
Starting to
that's what I said. I'm
make
very eclectic. Very eclectic music. Very weird tastes.
You said K-pop. I thought, is that a new type of popcorn?
Yeah, no. Korean pop. K-pop.
It's popcorn from Kmart. That's
exactly from Kmart.
K-pop.
I love it. That's great. K-pop is popcorn.
Oh, dude,
that's great.
Oh my God, Hanson. Tom said Hanson. That is so freaking funny. That is so funny and true, dude. I'm with you on that. I'm with you on that.
So bad.
Oh my God.
Uh-oh.
Yeah, it's
you don't even know the song. I don't even know what they. Damn.
Oh, man. I feel like that's the only one that everybody knows, though. So
I guess that is.
Which they played 5 billion times. Yeah.
That's true. That's true.
Oh,
I know for Sam would be whoever plays that Baby Shark. He would probably go crazy and hate that. He also hates Culture Club, so I know that. But he really loves it. See, I think it's a love hate. He says he hates it, but he loves it. He loves to sing Karma Chameleon. That's all he ever sings.
For me, it's like
Sam,
between
needs to work.
it's between like counting crows and the Doors. I can't handle listening to those.
I can
two,
listen to the Doors. I can listen to the Doors.
Oh yeah,
I
it's
can hang
very
with the Doors.
unpopular opinion. My opinion's very unpopular.
Yeah, I know.
Let's put it that way. So.
Oh.
But it's very consistent with the sad demont. Like it's very much like what we said about Nirvana. I mean, Jim Morrison, dude, everything was just like dreary, going to, my life sucks. I'm ready to die. Like that was his whole thing, right? So not very uplifting.
Right.
It's not Christian rock for sure.
So are we coming back at 2:00? Does anybody know?
I don't know. I'll message you guys in Slack. So pay attention. Look for something in Slack if we're on. I'm going to find out.
Stay tuned, chat.
Production crew. If you guys want us back in, let us know. We can come back in. Okay. We're waiting to hear, guys. We're waiting to hear. I'll let you guys know, but we're going to jump off. We got to go because we got our awesome performance coaches coming up next. Laura Leone and Stanislava Puach with Mind Over Market. I was blanking for a second. But anyway, we'll be back. Maybe we'll be back at 2:00 Eastern or 2:30. So, but we'll be here for FOMC.
We'll definitely be back.
So come back and see us. We will. Take care, everyone.
Bye-bye.
Awesome. See you guys.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hello.
Hello. Good day, everyone. Thank you for joining us away from the charts and into our minds for this 30-minute session. My name is Lara, and I'm joined today by Stanislava. And today we are going to explore one of the most powerful and often invisible forces in trading, social proof and herding behavior. At first glance, the markets look like a collection of independent minds making rational decisions. Prices move because traders weigh information and act on it. But in reality, much of what drives price movement is not pure logic, it's psychology. Two of the strongest psychological forces at play are social proof, our tendency to look to others for cues on what to do, and herding behavior. When large groups act in the same way, often without direct coordination. In everyday life, these forces help us. If you're in an unfamiliar city and see a long line outside one cafe, but an empty one next door, you'll probably choose the busy one. Social proof is a mental shortcut that really serves us well, but in markets, those same shortcuts can work against us. Research shows that traders who appear to be acting independently are often unconsciously responding to what others are doing. And this can create a paradox. Each trader is acting rationally based on the information available, yet the group's behavior becomes collectively destructive. Think bubbles, flash crashes, and panic selling. Today, we're going to show you how this happens at three levels. In the brain, where standing apart literally feels painful. In the markets, where rational individuals create irrational outcomes. And in modern technology, where herding accelerates at an unprecedented speed. Understanding these layers is the first step towards using them to your advantage as a trader. So to understand why we struggle so much with independent thinking in the markets, we need to look at what is actually happening in our brains when we go against the crowd. So Stanislava, I'm going to hand over to you because you're going to walk us through some fascinating neuroscience research that explains this biological reality.
Gladly. Thank you for this introduction. So as you suggested, and we will now understand why, disagreeing with others doesn't just feel awkward, it's literally painful. And we do often imagine that following the crowd or agreeing with the majority is purely a rational choice. However, you will see that most often it actually is not. Neuroscience shows us that this is deeply biological. We are hardwired to agree with the crowd. Gregory Burns and his colleagues at Emory University ran brain imaging studies, and participants had to make simple judgments, perceptual judgments. So something that if you are not in a crowd, you will definitely see clearly. And I'm sure you heard of such experiments here or there. They're actually classic psychological experiments. I will tell you some more. I do not know the authors. I forgot. But here, MRI was used to map what is going on in the brain. And it was matching shapes or something similar. So really simple tasks. However, because it was an experiment, one person was actually monitored. And when group disagreed with that participant, their brains lit up in two surprising places. One was anterior cingulate cortex, which detects conflict and errors. So the brain was telling them that this is an error. All of these people are saying, I don't know, blue triangle, and you're saying red circle. So this is an error, even though you see it clearly. and the insula, which actually processes emotional discomfort and pain. So as you said, it hurts. The center in your brain that is supposed to tell you that this is painful and emotionally discomforting lights up when you disagree with the crowd. And this explains why independent thinking in markets and in life is so difficult. Even for seasoned traders, it's in our brain, and it's really uncomfortable to disagree with all of those people around you, which is sometimes misused and abused. As you know, we won't get into such examples where actually this herding mentality is used to suggest some ideas to people. But maybe if you think back to, for example, a group setting in a restaurant when everyone is ordering pizza or pasta, and you were about to order a steak, but at that point, it suddenly feels very uncomfortable to stand out, to be the only one who will order that steak. And this is that same mechanism, but that same pull not to be the odd one out shows up when you're tempted to buy into a hyped stock or close a position too early because everyone else seems to be doing that. So this is the same mechanism. And again, as we always emphasize, in markets, it costs a lot. Here, you will just eat something that you weren't planning to eat. But in markets, you can really lose a lot of money, or at least not follow your rules and not do what you thought was right. And from evolutionary standpoint, this is actually rather understandable. In hunter-gatherer tribes, going against that group meant exclusion, and this was life-threatening. Being alone was life-threatening, and this is why we have such a strong urge to stay with the crowd. It persists in markets today, and as we always say, we develop much slower than technology, than other inventions. So this is where we need to go against our wiring. And Lara, I know you'll take us into how these individual decisions actually snowball into a full-blown cascades.
Yeah, thanks, Stanislava. So what we've just heard about is how our brains register social exclusion as pain. And this makes contrarian thinking, thinking independently, uncomfortable at a biological level. So now let's see how this discomfort translates into actual market behavior through something called an information cascade. The term comes from economists Banerjee and Bikhchandani, who studied situations where people made decisions not only on their own information, but also by observing what others are doing. And so let's see how that would play out in a trading context. Early on, a few traders might have a genuine insight into an instrument or asset, and they act on that insight, pushing the price up ever so slightly. But other traders, seeing the price move, but lacking the original information, assume the early movers know something they don't, so they join in. Each new entrant increases the signal for the next trader. Soon, a cascade forms where everyone is following everyone else. Individually, each trader appears rational. They're making the best choice with the information they have because the crowd seems to be right. But collectively, this can produce bubbles or crashes disconnected from fundamentals. Once the cascade starts, even new private information struggles to break through because the social signal is so strong. And this is why markets can overshoot. If you think about tech stocks in '99 or meme stocks more recently, at the time, each participant can justify their position, yet the group outcome is unsustainable. Recognizing an information cascade is really powerful because it tells you when prices are being driven more by imitation than by fundamentals. And it also explains why trying to fight the market without a plan can be really painful and costly. You're going up against a very powerful social force. These information cascades don't just happen in academic models. They're playing out every day in professional trading institutions. Understanding this gives us insight into how the even so-called smart money can get caught up in herding. Stanislava will show us how this institutional behavior creates real opportunities for independent retail traders.
Yes, it's tempting to think that herding is just a retail trader problem. However, and this is really important to understand for individual traders, research shows that institutions fall prey to it as well. Probably because institutions are made of people, so we all fall under the same neurological mechanism. But fund managers often cluster their decisions because being wrong with everyone else feels safer than being wrong alone. There is, in fact, some of them admit that if they underperform with the crowd, they know their jobs are secure. But if they take a bold, independent position and fail, then their careers are at risk. That's that one person who made a mistake instead of being one of the herd who just somehow made a wrong call altogether. But that same safety in numbers mentality trickles down into online communities where retail traders seek comfort in consensus. And Lara, you will later tell us a little bit about social media and that influence, that hype. But bear that in mind, that all of this happens. And for example, when you think about institutional and individual traders, there is that career versus capital risk. For institutions, protecting reputation can matter more than protecting returns. But retail traders, ironically, may have an advantage in being free of those pressures. So there is more to it than just simple constatation that, yes, we all do this, we all have this instinct. And again, I will remind you what came to my mind is that a situation when you were back in school and teacher would ask a question, everyone hesitates to answer, of course. But once that first student responded, suddenly hands shot up. Not because everyone suddenly knows the answer, but because that fear of being wrong alone had been diffused in a way. And traders in forums behave much the same way. They mirror each other for social protection. So going back to that first segment, contrarian strategies like whatever goes against what the majority is doing requires not just your analytical skills, not just something you have already learned about trading, and not just your intelligence. It actually requires that ability to tolerate discomfort, that neurological discomfort you are facing. You need to grow that muscle to sit with that discomfort. And we will be talking later on about options, how to reach that place. One of them is mindfulness, but let's get back to that a bit later. And one other thing that came to my mind is that studies also show that mutual funds show clustering around certain stocks, even when fundamentals don't justify it, which is what you suggested, Lara. It's amazing that it's actually something that you can see. It's in the numbers, but still that pull is too powerful. So if professional institutions with all their resources can still fall into the same traps as retail traders, what then happens when we add social media into the mix? I'm really curious to hearing about this because social media do affect our lives in so many ways and in trading as well. So Lara, I know you will show us how platforms like Reddit or whatever else, Twitter, accelerate this dynamic.
Yes, absolutely. And I think all of us, as traders, you can probably relate to the idea that you have done your analysis, or you have an idea But then when you're in a community or when you're in some sort of a forum, if the majority are thinking differently, it can get you to questioning yourself, even if you were feeling reasonably confident. So I think we can all relate to that in some way. But thanks, Stanislava, for handing that over. And I think what you've just explained there, being about being trapped in herding because of institutional pressures, is absolutely there. But in the last decade, what has supercharged this tendency is definitely social media. There was some research that looked at how online platforms changed investor behavior. They found that information travels faster, group sentiment forms quicker, and trading decisions cluster more tightly in time. So, in other words, social media doesn't just spread news, it compresses the timeframes in which the herding develops. We all know that, news is just instant these days, isn't it? Because of the way we all have access to information so quickly. 10, 20, 30 years ago and beyond, something that was happening on the other side of the world wouldn't reach us for a really long time. Now it's instant. And that is absolutely changing our psychology and the way that we respond. We saw this really vividly with meme stocks and certain cryptocurrencies. As a post goes viral, millions seeing it instantly, and what might have been a slow build-up of enthusiasm happens in hours or even sometimes in minutes. Prices can spike far beyond fundamentals before most traders even have time to react. So what this speed does is it creates both danger and opportunity. The danger is obvious, being swept up in the hype and buying at the peak. But the opportunity is more subtle. If you understand how quickly consensus now forms, you can design rules to step aside early, take profits faster, or even position yourself before the crowd arrives. Another change is visibility, which I touched on. Social media lets you watch herding happen in real time. You can see sentiment shift on Twitter, as you said, Stanislava, Reddit or Discord, but it also increases the pressure to conform. Your brain is giving you those signals about the herding behavior, and the pressure in your mind to conform is absolutely powerful, because people are posting screenshots of gains. It becomes really hard to hold back when thousands of traders appear to be making easy money. So the question then becomes, how do we protect ourselves and maybe even try and benefit from this acceleration? So as we've covered the biological, the psychological, and the technical forces driving herding behavior, Stanislava, the question then for us to be, to be able to be aware of this and use it to our advantage is what can we actually do about it? What are the practical strategies that have emerged?
Mm-hmm. I will get to that, and if time allows, I'll go back to the social media because it's a much wider topic actually, and we also need to be aware of even in trading how, for example, false information and the propaganda can make us make bad choices, which is why we need to really invest time and energy into these strategies and these actions you can take to protect yourself from this powerful instinct. Because more than ever now with social media, misusing someone or something is much more accessible. So the good news is that research points to very concrete strategies that help resist social proof pressure. The first is to make an independent analysis first. So before you check forums or social feeds, do restrain yourself from doing that before you make your own trading plan. It's very straightforward. When you don't know what the herd is saying, you will be thinking with your own head, which is what we want here. So even if you make mistakes, let them be your mistakes and not just because you follow that herd and something that happened just because you went with that instinct instead of thinking, and you would know better. This actually prevents your brain from anchoring in group opinions, because as we spoke earlier, on some occasions, our brains require to attribute meaning to stuff. So if you make a decision because it was something that everyone is doing, even if you are not aware of it, your brain will find rationalizations, and it will give some meaning to what you're doing, but it wasn't your decision. You just followed the herd. So this is why you want to first make your plan and only then check those social media or just see what others are saying or doing. The second option is position sizing for endurance. If you want to hold contrarian trades, size them so you can withstand short-term discomfort without panicking. So prepare, there will be some discomfort. This is expected, this is completely natural, but do help yourself by sizing that to that level you can endure. This will prevent you from going and panicking and doing stuff you didn't plan to do because you overestimated your tolerance to this discomfort. We also spoke about process many times. Judge your trades not just by profit and loss, but by whether you followed your strategy, by the process, how it all evolved, what you were doing, and focus on this, because this shift of focus from social validation to self-validation. So you are building yourself as an independent thinker, as an independent trader. And again, if you are making mistakes, make them your mistakes, because then you can learn from them. And you go with your own identity build up. And this is where you will gradually develop a solid base so you can then more easily tolerate that discomfort that we mentioned before. Also, one thing you can do as well is building diverse networks. You can actually talk to traders across different asset classes, time frames, and strategies, because the more perspectives you are exposed to, the less power a single herd has over you. And it does work as a medicine for herding, because once you see different perspectives, once you see that, okay, this can be seen from another angle, that does diffuse the call of a single herd. And one personal input here, this is why I adore anthropology, because it gives you that sense of, okay, this doesn't have to be necessarily done in this way. In some other culture, it's totally different. That's the same thing. You are exercising cognitive flexibility. Basically, you are expanding your world by noticing, okay, there are different perspectives, and you will feel less insecure in following your own perspective, because you see that you're not one that's wrong among hundreds of those who are thinking the same, but okay, it can be seen in another way. It's like dieting when surrounded by friends who are all ordering dessert. If you have already planned your entire meal, at that point, it's easier to stick to your plan. But if you just went into the cafe, you will be easily pulled into that call. In trading, that same principle applies. The pre-made plan beats the momentary temptation to copy what others are doing. And I promised to mention my favorite, mindfulness. But yes, everything we spoke about different mindfulness exercises can be also implemented here, because it snaps you away from that neural network that pulls you into where everyone else is going. You will return to the present moment, calm that chatter in your head, and then either remember your preset rules or make an informed decision at that point. So, Lara, while herding is hardwired, there are ways to design systems that make independent thinking easier. And please close our conversation up by showing how this paradox isn't just about trading. It's about the way we live and make decisions far beyond markets, right?
Yeah, 100%. I think to become an independent, autonomous thinker is super important. I mean, there are obviously there are evolutionary reasons as to why it was developed like this, and the society has evolved so much. There are still times where it's really helpful to follow the crowd, but actually, in terms of getting ahead, it's often much more rewarded to be an independent thinker. But just to step back, we've got to remember that social proof and herding are not flaws. They're part of this survival system that we refer to. Sticking with the group for most of human history increased your chances of living in the markets, as we've said. And to summarize, though, this same instinct can cost you money. But what's important is to say that no amount of sheer willpower will completely override the force. The research that Stanislava just shared shows us why, because our brains, institutions, and technologies all push us towards imitation. The solution isn't to be stronger, but it's to build structures that support independent thinking, clear analysis of our own before checking social cues, disciplined position sizing, and accountability systems. It's all about the systems that focus on process rather than outcomes. So, just remember that markets are most inefficient at the very moments when herding is the strongest. And that's when price moves furthest away from fundamentals. If you've done the work to identify those moments and manage your risk, you can step in when others are fearful or euphoric and capture those outsized returns. So rather than seeing it as a threat, think of it as a signal. It tells you where emotion is high and rational analysis is low. It tells you when to be cautious and when opportunities might be ready to appear. Thank you for being here. Hope you have found this useful, something to take away and think about and to reflect on. If you're part of a community or part of other kind of learning group, understand and be aware of how your brain is being influenced when you see decisions that other people are making, and try and get those structures in place for yourself. Thank you so much again, and trade safe, and we'll look forward to seeing you again next week. Take care.
Thank you. See you soon.
See you soon.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
So you have a 300k account.
Yeah.
How did you find the challenge phase? Did you pass the first time? Did you take multiple? How did it all go for you?
So I didn't pass first time. I took a few goes. For me, I've only bought a 300k account. I want to gain access to the highest capital possible. I am just looking to kind of play the long game, trade with a bigger account, and slowly see those returns, compound.
Hello everyone, and welcome to another Trader Story podcast here at Hola Prime. Today I'm joined by one of our 300k funded traders, Oliver from the UK. Oliver, thank you so much for joining. How are you doing today?
I'm doing really good, thank you. Thank you for having me on the show. It's
our pleasure. So Oliver, 300k account, that's pretty huge. But I guess for the viewers, they always love to know a little bit about our funded traders, their backstory. So I guess the main question is, where did it all start with you trading wise?
Yeah, that's a really good question. I've been trading for about 13 years.
Wow.
It seems like quite a long time. I've been trading with my own account, and then as prop firms started popping up, was exploring those options as well to gain access to more capital, really. This is where I am today. Many years of making mistakes and trying to see what works for you, what fits around your lifestyle, because what might work for me might not work for someone else. And so it's a journey of discovery, really. And yeah, right now I'm trading a funded account with Hola Prime, and I'm happy to see where the journey takes me from here. So
Wow, that's really awesome. But 13 years, that's quite
yeah,
a long time.
yeah, I've been doing it on and off. Yeah,
Yeah, yeah.
for
No,
about
absolutely awesome. So do you have a full-time job as well then, on the
yeah, I
side
do
of
have.
trade?
Yeah, exactly. I do have a full-time job. I trained as a teacher, a maths teacher, and I've been doing that for about 13 years, actually. I guess it was about the time as I was sort of looking for work, because my speciality is maths. I did a maths degree. I was looking for work, potentially working in finance and in trading, but I think about 2011, 2012 was not a very good time to
Mm,
get into the banking world. And I've been, yeah, very happy as a teacher ever since then. And always had a passion for see what I could earn as a side income from trading. And it's been a journey that I've been exploring and developing and trying to hone the skills that is needed to be successful.
yeah,
And I've been doing that ever since, really. So,
that's really awesome. I would love to know though, obviously being, you have a degree in maths and obviously being a maths teacher,
yeah.
did you find that helped you in trading? Do you use I guess, math in trading?
Yeah, that's a really good question. I have looked at using maths in trading, and I haven't really been sort of, well, I don't have a lot of the mathematical tools, at hand, um, that say quants might be doing,
Sure.
might be using. So I wouldn't say that I actually am. I thought that maybe having a maths degree might make me a better trader, but I think that was a bit of a false understanding. And I think I just had to kind of clear away all of those, kind of, yeah, I'm probably going to be good at this. And actually, I wasn't to start with. I don't really use maths in my trading. I just look at the chart, and sort of cherry pick what would be a very good setup, a high probability trade, I guess.
Yeah.
Um, and just taking my time just to choose the trades that are going to work out for me. Because as I said before, I'm a swing trader. It fits around my lifestyle really, really well.
Yeah.
To trade like quite low lot sizes, and have a kind of a set and forget strategy, which allows me to, you know, get on with my full-time job, enjoy my day. Don't have to kind of look at my phone, at my charts all the
Yeah.
time. And I can leave the trades overnight and not have to worry about them.
Yeah.
And kind of have wider targets. So day trading, I think for me, just doesn't really fit into my lifestyle,
Mm,
because I feel that I'm maybe trying to push to get,
yeah.
trades into a particular day, and perhaps there isn't actually one on that day. So
Yeah.
for me personally, I think swing trading to have wider profit targets is probably
No,
better for me
absolutely.
anyway. Yeah, but maybe not for other people. So
No, absolutely. I
um,
mean, pick a style of trading that obviously suits you and your lifestyle, your personality even. Some people,
yes.
like for instance, I could never swing trade.
Oh, I see.
It just
Okay.
didn't fit my
Right.
personality. I
Yeah,
would
fine,
I would
fine.
obsess over the trade and stare at it like it would even affect my sleep. When I was
Yeah.
sleeping, I would start dreaming about the trade.
Oh, yeah. Yeah. No, I
Just didn't
understand
work for
that.
me. But
Yeah,
some
yeah, yeah.
people, yeah, they can just set and forget it and do really well. So each to their own.
Mm.
When you say swing trade, I mean, how long on
Mm.
average do you actually hold a trade?
Um, that could be a few days. It could be even weeks. I'm in a
Oh,
current trade right now that I think has been going for a few weeks, nearly a month already. It just hasn't quite reached the target, and it may not reach the target. So it's because I can't impose what the markets are going to do. But I'm happy to, press the button, close out the trades if things start to turn around potentially and goes against me. I'm happy to just say, okay, maybe this one isn't going to get there. But like I say, in my strategy, I've already done a lot of back testing that has given me the confidence that this is a high probability setup. I've already picked that one out of a whole bunch of other ones that probably aren't going to work. And so I've already chosen this one. So it's not, I've just picked any random one. I'm just hoping it to get there. There's been some thought and back test behind it. And so I'm happy to leave that to have a higher return in the long run, potentially if I have to wait a month, and gain 4 or 5 figures out of it, then it's worth the wait, I think. So this is the way I think about it. So
Oh, absolutely, absolutely, and it seems to be working really well for you. So you've mastered your style. You've mastered the way that works well for you, and like I said, each to their own. Everyone is a bit different. For you, swing trading, holding for weeks, potentially months. I mean, if it works for you, fair play.
It's not everyone's cup of tea. And another thing that I try to choose as well is that the swing trade will go in my favor. So the swaps I'll be earning out of the swaps as well, rather than, so that helps. So that's another thing I factor in. Would it be a good trade to pair long term? The swaps are quite high and I'm actually trading the wrong way. So maybe I won't pick this one. So it's all about cherry picking the right things. And
so you actually make money on the swap then.
Make money on the swap.
That's absolutely. I mean, certain things like that, I think a lot of people don't even think about.
No.
When they're starting out trading or holding it, they don't even think about the swap fees, and then they wake up next day like, what happened there?
Exactly. Big chunk taken out. I didn't see that coming.
But if you're pre-planning that already, which interest rates is higher, then you can obviously figure out, this is actually going to work in my favor. So fair play to you. We'll come on to your strategy in a minute. I would love to know, so you said you were trading for 13 years. When did you really, I mean, naturally every trader's journey is very similar. You start out, there's failure, and then eventually something happens where you kind of you see it, okay, this can actually be something that makes me money, and you have that kind of aha moment, I guess you want to call it. Whereabouts did that happen in your journey?
I would say within the last year or two, I think, quite recently. So I think for me, it was just trying different strategies that I'd, have read about, got a whole ton of books to see what would work for me. It's lots of trial and error. And I think I would have a lot of indicators that would be telling me this and that. And I would, realize that actually a lot of indicators can make you change your decision within a day. And you think, well, actually now it's telling me to do this when actually it told me to do that. And so I stripped back a lot of my charts, and I have very, very few indicators at all, really. And I'm just looking for a reversal type setup. And then there was a book that I've been reading recently, actually. I think it's by a Dutch guy. The best loser wins, I think, something like that. I can't remember the exact name, but he was saying that actually a lot of profitable traders do, which is really, really hard to master, is to add to your trade when it's going in your favor. Which maybe on smaller time frames may be tricky to do. But for me, it works quite well because I have time to get in again when price comes back and makes a pullback. Then I could get in again.
Yeah.
And that kind of helps me to make potentially more on the trade. So
Yeah.
just about kind of stripping back the charts and trying not to be too confused and have one direction that you've decided in advance. Say, right, I'm going to be buying and I'm not going to be doing anything else. And if it doesn't work, then I will just close the trade.
Yeah.
And just move on to the next one, really.
Yeah. You said something really interesting about being confused, and I 100% agree with that. We see the evolution, so to speak, of a trader. You know, they start out using indicators, like a ton of them, you know, all different types of indicators, all telling you different things. One is telling you should be buying, next is telling you should be selling. And even if they enter a good trade, they never allow it to, you know, play out because there'll be some indicator telling them something, oh, this doesn't look good, and they'll be exiting, and it completely messes up their, I guess, the risk reward you could put it, or even just, you know, their edge in the market. And simplifying it, we see it time and time again. The moment a trader starts simplifying their strategy is when they start seeing results. Not to say that indicators are inherently bad, because they can be useful in certain situations, certain market conditions, like the RSI in a ranging market. Beautiful. You know, no one can argue that it isn't a useful tool, but you know, having it too many, all telling you different things just leads to, unfortunately, never really doing anything right. You never master it really. You just kind of chasing your own tail and hoping for the best.
I think the thing that caught me out quite a lot was a lot of the indicators have overbought and oversold conditions.
Yeah.
And then when markets trend, you can be overbought for a long time or oversold for a long time. And I would be like, why is it doing this? You know, it worked before, but now it's not working. And then you just have to understand that the market is not always going to do exactly what you think it's going to do. And you just have to have that mindset before going in. You say, right, you know, there's a chance I'm wrong here. But so be ready for that. No one is going to be right 100% of the time. And I think if you have, which I think I have by now, sort of trained, you know, it's a lot of mindset training. And there's a lot of psychology behind training as well. That I think plays a really, really big part into kind of accepting that you could be wrong and you're just happy to, you know, move on, really. You can't win every single one.
Letting go of,
exactly,
you know, perfection. Like you said,
I know.
Yeah. But let's move on real quick to your strategy, because I am intrigued at how, you know, your actual strategy, what you see on the charts that makes you pull the trigger and actually enter a trade. And so if you don't mind just walking us through your strategy.
So like I say, I trade probably from daily time frame mainly, at least 4 hour and above. I also look at other time frames that most people don't look at as well, which is the 6 hour, 8 hour, and 12-hour charts, because they often show other things that you wouldn't normally see. So I'm looking for particular like candlestick formation that shows a potential exhaustion in price. And when you do have this exhaustion, like a very, very big candle, sort of at the end of a trend, then you usually see a reversal. And because it's kind of the market is saying, well, there isn't enough buyers or sellers anymore. We've had that kind of explosion in price and there isn't enough momentum for that to carry on. So there's a high probability for for the trade to reverse. And then I have another um, thing that I'm looking for where I have my profit target. So how far should I let the trade go? Um, and it on a higher time frames, it's usually between 500 to 1,000 points. Because when something's really exhausted, then the price really does make a good reversal. And so there'll be other things that I'm looking for potentially to take out certain levels in price. But yeah, I will monitor it every day and to see actually, well, is it playing out? Or perhaps it's going to make another kind of like a little fake out where price might fake out again. But like we've seen with gold recently, we had that huge move up. But if you see that last move before it reversed, you see a lot of momentum going up. And then you start to see a reversal coming out of it. But it's like you have to play it carefully. You don't always take every reversal that you see. I usually take the ones that are after a very, very long move. They seem to be the higher probability ones rather than just taking every one that you see. So that's generally about it. Yeah.
No, it's actually a very good strategy because, funnily enough, the way I trade, although I trade much more short term, I would say in between scalper to intraday, I look for the same thing essentially.
Right. Yeah.
But I use volume, but the size of the candle can also show you volume. But I look for that kind of, I call it buyers or sellers getting trapped. You see that explosion at the end, and then the sharp reversal. I trade the exact same thing. So it's really interesting actually to see that the same principle occurs, on lower time frames all the way up to the daily, So absolutely. Keeping it simple, looking for something that has got a high probability setup, just sitting on your hands when you don't see it, and waiting for the right time to pull that trigger. And then when you're in that trade, sticking to your guns, the moment you see one candle against you, don't just jump out and be like, oh no, actually let it ride. And like you said, add on, especially for a swing trader like you, adding onto your position after every pullback and just riding that trend until it eventually does exhaust and it finishes. You're really maximizing your profits and keeping, your risk at a minimum. So that's absolutely fantastic to see and hear as well. So really good job. Really good job.
Oh, thank you very much. I think the trading the markets it can be like what we call a fractal in maths. So no matter what time frame you're looking at, it almost you couldn't really tell what time frame you are if nobody told you, because the market does make very similar moves from a 1 minute up to a daily time frame. And I think with like the strategies that that we trade, sometimes going against the trend, which is always a bit nervous, but after having kind of trained your mind a little bit into thinking that, well, you have to kind of do what the majority, you have to do what the majority of traders are not doing. So essentially, when you see a big move, unfortunately, a lot of beginners traders will just carry on following that because they'll feel like there's a fear of missing out. So they'll be right at the end, and that's when we will usually be getting in as a reversal kind of setup.
No, you're absolutely right. You're absolutely right. It is, like you said, I mean, trading against a trend can be nerve-wracking because especially when you see a lot of volume or a big candle, and you think, but like you said, if you do it enough times and clearly you've obviously back-tested your strategy, so many times, so the probability is higher. And like you said, stick to your guns, know what you're doing, and don't fall for the mistake of just, if something looks too obvious, don't just try and chase it.
Yeah.
Too many times, something looks too perfect, and you see a lot of people trying to chase that trend or chase that pattern, and it just completely works out the wrong way. Not always, but a lot of the time, it's almost like the market is trying to trap or trying to trick new traders.
Yeah.
But
exactly.
strategy is obviously, one half of the equation. I would say probably even bigger than strategy is psychology.
Yes,
some
absolutely.
would argue.
Yeah.
Because getting an edge in the market is actually not that difficult to have an edge, even if it's only a few percent. As long as you stick to your risk management and have a strong psychology, you can be profitable. So psychology is really everything. I've seen traders who have a really high win rate, 80% plus, and they're doing really well, and then they lose all their money on one trade and that's purely down to psychology, nothing else. How did you overcome the psychological part of trading?
So it first occurred to me that with trading, it's really, really, really unlikely to make big money from the very beginning. Trading big lot sizes is a big no. You just have to really scale down. Markets probably go against you. You never really get the top or the bottom. Where you really think, this is probably going to be a very, very good trade. The markets always surprise me. They always do things I never thought they were going to do. So for me, I just scale right down. I trade really, really low lot sizes. And then that allows me to have a good, calm mindset, monitor the trade, potentially get in a little bit more, have a better position at a better price, and knowing that I'm not over leveraging, and I'll just stick to one instrument as well. Once I'm swing trading one, that's the only thing that I'll be looking at. It's the only thing I'll monitor. I don't have to worry. Well, I say like I've got two right now, but they're very good because they're both yen pairs. So
Right.
they're basically moving pretty much in the same direction. It's not that one is the pound and the other one is the yen, for example, and then I'd be, that because I think you do have to have a good mindset, a good calm frame of mind to be able to make good decisions. And I think if you're trying to take on too much leverage, you're trying to monitor too many trades, I think then, I suppose it's a bit like trying to drive a fast car and there's all these flashy buttons and something's going to go wrong eventually. So I think you're just trying to keep it really, really simple, and play the long game. Market will be there tomorrow, it will be there next week. Play the long game. Just take it easy, slow down. Something like that.
It's funny because everything you said is 100% true, and it's completely logical. But for some reason, a lot of new traders struggle to just kind of grasp those concepts. It's funny because trading ultimately is meant to be a career, right? It's meant to be kind of like a job that you do, maybe not on a daily basis, but you do, regular, and you get payout, you get paid every month, so to speak, on your profits. And,
That's
true.
true.
It's meant to be a long-term thing, yet new traders treat it as, I don't know, almost like a slot machine, quick pay, quick, trying to make as much money as possible. And it's obviously, you're always going to end up getting burnt. If you try to flip, I don't know, £500, $500 or whatever it might be into, 50,000, it's technically possible, but to do that consistently, I just don't see it happening. It's not a sustainable strategy, so to speak. So you're absolutely right.
Yeah, I think what happened with me, and I think what happens with a lot of new traders, is that you do have this one good trade where you did earn quite a lot of money, and you think, well, what I did worked there, and I can do it again. But markets, they surprise everyone, and think, markets can easily fool people, especially new traders. And so you usually get this one lucky break at the beginning and you think, wow, I earned quite a lot of money there. I must have done something right. But what you don't really realize is that probably it was a little bit of luck. And that's really hard to replicate again and again and again. So yeah, I think you do have to kind of go through those mistakes as a new trader to then kind of get to the point later on in your journey. Unfortunately there's no, kind of like
Good day, traders. The big macro focus today is the Federal Reserve. Markets are pricing a near certain 25 basis point cut this afternoon. Powell's press conference will follow 30 minutes later. Equities and rates are quiet heading into the decision. Expect volatility to cluster around the statement language and the dot plot path. For FX, watch the dollar index against the euro and the yen on the first move. Then monitor the second leg reaction as Powell addresses jobs versus inflation. Fresh US data came in mixed. Housing starts and permits fell sharply in August, hitting a 2.5-year low. That adds to growth headwinds even as mortgage rates eased. Retail sales remain resilient after yesterday's beat. The Fed cut is still framed as insurance against a softer labor market and tariff-related price pressures. Energy markets saw a surprise move today. Crude inventories fell by more than 9 million barrels. Gasoline stocks also dropped, while distillates rose. Refinery runs and utilization ticked lower. The first market reaction was two-way as the distillate build tempered the bullish crude draw. Watch product spread and cracks into the settlement. In Europe, inflation data keeps policy divergence alive. Eurozone CPI held steady at 2% year-on-year in August. That supports the European Central Bank's patient stance. In the UK, inflation stayed at 3.8% year-on-year. Services inflation is easing but remains elevated. The Bank of England remains cautious after its August cut. Sterling is trading on central bank path differentials, making it highly sensitive to Powell's tone. Key FX pairs to watch today: Euro-dollar may see a knee-jerk move on the Fed, then recalibrate to steady Eurozone inflation. Pound-dollar balances Powell's tone against sticky UK inflation. Dollar-yen remains dominated by rate differentials, with any dovish Fed tilt checking the dollar's momentum. For futures and indices, the playbook is clear. If the Fed cuts and one and done, expect a fade of the first move in equities. If Powell opens the door to a sequence of cuts, growth proxies like the Nasdaq and Russell should outperform. Commodities beyond crude are also in focus. Gold remains policy sensitive, with dovish signals typically supportive. The dollar path will remain the key driver for metals. Crypto markets are seeing renewed flows. Spot Bitcoin and Ethereum funds. It has underpinned prices heading into the Fed decision. BlackRock's Ethereum ETF just saw its biggest daily inflow in a month. Institutional interest is returning, adding momentum. In the UK, regulators proposed integrating crypto firms into the rulebook. Some traditional requirements may be waived, but cyber resilience rules will tighten. This is a constructive signal for UK-based venues and sterling crypto rails. Trading cues into the Fed. Bitcoin may extend momentum on dovish policy, but could see a fast reversal if Powell sounds hawkish. Ethereum flows are ETF-led, with lower rates typically favoring staking and duration-style assets. Actionable futures levels today. In crude, the inventory draw argues for dip buying, but the product build makes spreads the key tell. In equities, the first move comes on the statement, the second on Powell's Q&A. For the dollar index, limited follow-ups cuts could spark a bounce, while a softer path pressures the dollar and supports metals and crypto. The bottom line for today's trading session is this: the Fed is the main event, but the backdrop includes weak housing, a hefty crude draw with product nuance, steady Eurozone inflation, sticky UK prices, and supportive crypto ETF flows. Trade the reaction function, first the statement, then the dots, then Powell's answers. From there, rotate into secondary stories, oil products, sterling path, and crypto flows. Up next, we have a beginner's guide to Hola Prime.
In today's video, we'll show you how to modify trades on MatchTrader. Let's quickly place a few trades for modification. Once placed, the trades will appear at the bottom of the page. Simply click on the respective trade and you'll see options to modify or close it. Click on Close and the trade will be closed right away. Let's try modifying it now. To modify, just click on the respective plus icon to update the stop loss or take profit. Let's set the stop loss for this trade. You can set it based on price or value. Remember, since this is a buy trade, the stop loss must be set below the current market price. If you try to set it above the current price, you'll get an invalid value error. So make sure to assign the correct stop loss. You can also adjust the price using the handy stop loss line right here on the chart. Once the correct stop loss is set, just click Save, and that's it. The stop loss has been updated. You can similarly set the take profit as well. Right here on the chart is the order line. Click on Buy and you'll see the take profit line. Just drag and drop it to your desired price to set the take profit. You can continue making modifications anytime by dragging the stop loss or take profit lines directly on the chart. The settings will automatically update. Moving forward, let's see how to partially close a trade. Simply click on the Close Partially option at the bottom of the page. Now enter the lot size you want to close and click Close. And that's it. The trade has been partially closed. Next, to modify pending orders, switch to the Positions tab at the bottom of the page, and then go to the Pending tab. Here, you'll see all active pending orders. Click on the order you want to modify. In the center, you'll see the Edit icon next to the activation price. Just click on it to modify the price. Alternatively, you can drag and drop the handy order line to your desired price, and the pending order will be updated. Lastly, to cancel the order, just click on Cancel Order. And that's how you modify or partially close open trades on MatchTrader. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to our channel. In today's video, we'll show you how to modify and cancel pending orders on MatchTrader. Let's quickly place a pending order first. Select the instrument you want to trade and click on New Order right here. The Market tab is used for placing trades at market execution. Switch to the Pending Order tab for pending orders. Adjust the lot size, then set the price at which you want to place the pending order. You can also set stop loss or take profit using the plus icons. Once everything is set, just click on the type of pending order you want to place. Let's go with a sell limit. Now, let's modify it. You can adjust the price of the pending order directly from the chart. Right here is the order line. Just drag and drop it to the desired price, and the order will be updated with the new price. Alternatively, go to the Pending Orders tab at the bottom of the platform. Here you'll see all your open pending orders. To modify the price, click on the Edit icon right here, adjust the price as needed, and click Save. To set a stop loss or take profit, click the respective plus icon, adjust the price, and hit Save. To cancel an order, just click on the cross icon next to the trade. And that's it. That's everything about modifying and canceling pending orders on MatchTrader. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to our channel. In today's video, we'll show you how to place market execution and pending orders, and also how to set stop loss and take profit. Once you log into MatchTrader, this is the default layout you'll see. To place a trade, simply click on the instrument you wish to trade and the operations page will appear. Just click on sell or buy and the trade will be placed. Exploring the page further, at the top you'll see the chart. You can adjust it as per your liking. You can also set the lot size for your trade using the -+ signs, or simply type it in. To set a stop loss on this trade, just click on the plus sign here. You can set it either by price or by value. You can similarly set the take profit as well. You'll notice that based on your selected stop loss or take profit, one of the options may get grayed out. For example, if you set a stop loss above the current market price, the system will gray out the option to place a buy trade. If you set the stop loss below the current market price, it will gray out the sell option. You can then proceed with the available sell or buy and your trade will be placed. To view all open positions for this instrument, just scroll to the bottom of the page. Now moving forward, to place pending orders, simply switch to the Pending Order tab. Adjust the lot size, then set the price using the -+ signs, or you can also type it in directly. Here's an interesting thing. If you enter a price above the market price, you will only see options to place a sell limit or buy stop. Similarly, if you enter a price below the market price, the platform will show options for a sell stop or buy limit. The system automatically adjusts the order types based on the price you've entered. Click on Sell or Buy, and that's it, your pending order has been placed. To check all active orders, just switch to the Positions tab at the bottom. In the Open tab, you'll see all open orders, and in the Pending tab, you'll see all active pending orders. And that's it, placing trades on MatchTrader is that easy. Thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to our channel. In today's video, we will show you how to log in to MatchTrader on a mobile. After purchasing a challenge, you'll receive the login credentials on your registered email address. You can also find them on your dashboard under the Overview section. To access the platform, simply click on the platform link here, and you'll be redirected to the trading platform login screen. Here, enter your username and password. Make sure to enter the username provided on the dashboard and not your email address. Click Sign In, and you're logged into your account. Thanks for watching, and if you found this video helpful, don't forget to like, share, and subscribe to our channel.
Come, I will show you how Hola Prime is changing the future of prop trading.
Not like this.
By being on our toes, so that you can experience prop trading as it should be, fair and transparent.
We are Hola Prime, the most transparent prop trading firm.
With traders from 175 plus countries and offices all across the globe.
We are the first company in the prop industry to publish daily price transparency report, so our traders can cross-verify their trades and they can trade with confidence and peace of mind.
Let me share the story. In the decentralized Forex market, traders often face pricing uncertainty, but not anymore. To ensure fair pricing every time, we introduced Price Transparency Report,
a daily tick-by-tick comparison with industry data.
We didn't stop here.
No hidden rules.
No unclear trading conditions.
Everything is stated up front,
including prohibited trading practices.
From supreme trading conditions to responsive customer support.
We operate with transparency, sharing every crucial detail with our traders.
That's why traders from 175 countries trust us.
No unfair breaches of accounts. Wherever possible, we send traders preemptive warnings because we hide nothing.
With us, you can scale your account up to $4 million.
And those profits?
We offer up to 95% of the profit splits.
That's 95%.
But what good are profits if you can't access them quickly?
That's why we process withdrawals within 1 hour, putting your earnings straight into your hands.
We calculate your withdrawable profits at the end of each trading day, ensuring you get your withdrawals as soon as you request it.
We know what failing a challenge feels like, but we won't leave you alone. After reviewing your account's trades, we'll create personalized videos to help you prepare for your next attempt. Our expert trading coaches and Prime Academy are always ready to help you learn and succeed.
I started as a junior analyst. With clear feedback and growth paths, I've moved into a leadership role.
When I joined here, I was just a graduate. Now, I'm an MBA and a senior manager.
My career has been transformed here. from an entry-level position to a department head.
While others are catching up, we are setting new standards in prop trading every day.
Join us today and get funded with transparency.
How do you feel after another victory?
It's really good, so we're excited, we're happy to be here. People only see the wins.
And there it is, folks, the
trophies.
final buzzer sounds.
The moments under the lights. But they don't see this. Adversity. No. Everyone faces it.
No.
But those failures motivate you to try harder, to try again. Hola Prime is the platform used by pro traders. No hidden rules, just fair trading. In basketball and in life, speed is the difference between success or failure. Hola Prime has the fastest payouts in the industry with less than an hour. Adversity sometimes just means a new beginning. Hola Prime, trade with transparency.
Got trading skills but can't risk your money? Enter prop trading, a smart way to monetize your trading skills without risking your own money. Start your journey with Hola Prime. Here's how it works. Buy a small fee trading challenge. Hit the profit target and keep losses under 5% daily and 8% overall. Pass the challenge and get a funded account. The risk rules stay the same, but now no profit targets. And yes, up to 95% of the profits are yours. Wondering, how's that even possible? Well, we selectively copy trades from top performing traders in live markets. That's how we generate profits. Whether we copy yours or not, you still get your share. While most firms take days to pay, Hola Prime is the industry's first to do it in under 1 hour. Yes, every payout is processed in less than 60 minutes. It's a win-win. You bring the skill, we bring the capital, speed, and support, including one-on-one coaching. Take the trading challenge. Get funded.
Hola Prime.
Hello and welcome to another Hola Prime Academy video. I'm your instructor Chris Lewis, and in the last 15 to 16 years I've been trading, I've learned a few tricks and fundamental tactics to start to search for trades. In this video I'll be talking about something that is somewhat simple yet complex at the same time. One of the biggest things that traders seem to forget is they are trading relative value. That's going to be true with anything you trade, but very few places will it be as obvious as it is in the currency markets. So, for example, if people say the pound is rising, most of the time, it's expected they're talking about the pound against the US dollar. In a fundamental tool or strategy that I call triangulation, I start to look into other currencies and I take 3 and hone in on what it is I want to do. I will run through some charts on this, but a quick example might be some of the more stagnant currency pairs, the minor currency pairs or cross currency pairs that a lot of you don't pay too much attention to. For example, the Australian dollar against the New Zealand dollar. It's a very choppy pair, and it's not that you can't make money trading it, it's just that it's quite a bit noisier. However, if you know that the US dollar is weakening in general against multiple other currencies around the world, you can look to the Australian dollar, New Zealand dollar currency pair, and whichever one is strengthening the most there, let's just say it's the Australian dollar, then you know that you are more likely to get more mileage out of a trade that is long Aussie dollar, short US dollar. This is because the US dollar is losing value, but the Australian dollar is gaining more value than the New Zealand dollar. This isn't to say that you couldn't make money with the New Zealand dollar against the US dollar. It's just saying that it's a smarter trade to take the Aussie. Another example might be the euro pound. You would have the same scenario, but in this case, let's say the US dollar is strengthening. Well, if you want to buy dollars, you need to decide what you want to short. If the euro is falling against the British pound, you want to short the euro and buy the dollar. So you're shorting euro dollar using the euro falling against the pound as a sign that that currency is weaker than the British pound. With that, let's take a look at a few charts and I'll drive the point home and try to simplify things as we go along. Okay, so in front of you, I have the US dollar index. The US dollar index, of course, is a group of currencies as measured against the US dollar. The biggest one, of course, is the euro, but we also have the pound, the Japanese yen, Canadian dollar, Swiss franc, Swiss krona, and one or two others, I believe. So when you look at this chart, this is just telling you about how the US dollar is behaving. So, for example, you can see that on the hourly chart, it has been grinding higher for a while. Interesting, but let's take a look at the euro pound. So the euro pound, and I'll go to a daily chart. Let me go ahead and hide all of the events. The euro pound continues to plummet. So what does this tell you? This tells you that the euro is weaker than the British pound. So we start to look at charts and we say, okay, how can we use this to our advantage? It does look like the US dollar is strengthening overall, and it looks like the euro is weakening while the British pound is strengthening. So let's take a look at the euro dollar. The euro dollar at this point in time is approaching an area that could be supported, but it also looks miserable. So keep that in mind. The British pound against the US dollar, it still looks a little soft, but notice how it hasn't plummeted the way the euro has. So this all lines up together. So now you have a decision to make. Do you want to go long the US dollar, or do you think it turns around? As things stand right now, I would say it looks like the US dollar is more likely than not going to strengthen. And if that is the case, you want to short the euro against the dollar instead of the pound. And the main reason is because even if they both break down, and they probably would if you really saw the euro fall apart, it more likely than not will be much more of a mild drop in the British pound against the dollar than it would be the euro. And the recent price action certainly bears that out. But what happens if you go back to the US dollar index and you say, okay, well, it looks like we're going to pull back and we start falling. If the US dollar starts losing strength on this chart, then you want the stronger of the two currencies. And in this case, it would be the British pound. So, for example, I might look at this and go, okay, let's see what the US dollar does. And if it starts falling in the US dollar index, I'll start looking for some of these candlesticks here to get broken above in the British pound. And I'd be a buyer of that, not the euro. It's in a much healthier uptrend, and it just makes more sense. Doesn't mean that the trade will work 100% of the time, but what it does mean is that you are putting momentum and strength in your favor. So let's take a look at another setup. Australian dollar, New Zealand dollar. Aussie dollar has been stronger than the New Zealand dollar for some time. Keep that in mind. So let's take a look at the Australian dollar, US dollar. Look how weak that is, right? Looks like it's getting ready to bust through this little support level. Take a look at the New Zealand dollar against the US dollar. It looks much weaker and in fact has broken through a support level as of late. What this tells me is more likely than not, if I buy dollars, I want to short New Zealand. If I short dollars, if we see the dollar turning around, Australia has a more palatable technical setup here, as we are right at a support level. Really, when you trade Forex, all you're doing is mirroring the strongest against the weakest currency. This can be used in pretty much any cross currency to a point. Some of the more perhaps thin ones, you don't really get as much of clarity as you would some of the other ones. So for example, like if you did the Mexican peso against the Japanese yen, and we can do that for fun here. You can see the Mexican peso has plummeted against the yen, but we are approaching a certain amount of support, right? So the Mexican peso is weaker than the Japanese yen overall. Look at the dollar mex. You can see the dollar has been screaming higher against the Mexican peso and is in a nice strong uptrend. Look at the dollar against the yen. It's in an uptrend as well, but it's recovering from a crash. So what this means to me is if the dollar is going to strengthen, you're going to be better off buying US dollars against Mexican pesos. You are more likely than not to see more upward trajectory from a setup like this than you are from the dollar yen, which, despite the fact that I think it does look like it's trying to perhaps break out, it's got much further to go before you get people trapped and overly concerned. If the dollar strengthens overall, both of these trades will probably be profitable. But again, you should get more mileage, more profit out of buying the dollar against the Mexican peso because it's weaker. Let's reverse that situation. Let's say the US dollar starts selling off. Well, you're going to be better off shorting the dollar against the yen, all things being equal, because it's most certainly been sold off quite drastically as of late. It clearly looks a lot more bearish than this chart. So remember, when you are trading currencies, take a look at what things are doing against the dollar. It gives you a good idea. And what they are doing against the other currencies that you might be looking at. Now, the Mexican peso against the Japanese yen, that's kind of an extreme example. You typically will do this with Euro pound, Aussie dollar, New Zealand dollar. Euro Swiss works pretty good as well. That would just be, do I want to buy or sell euro dollar, or do I want to buy or sell dollar against the Swiss franc? There are a couple of other ones, but for the most part, you stick with the top 10 currencies, and it's yet another potential reason to go long or short a pair, and you can really start to hone in on who's stronger or weaker. Some pairs naturally have competitors beyond the dollar. So for example, Euro Swiss, it's because there's a lot of cross-border trade. Aussie Kiwi, it's because there's a lot of cross-border trade. Euro Pound, it's because there's a lot of cross-border trade. You kind of see the theme here. So with that being said, once you get all of this lined up, you can look for a technical setup, perhaps something like a bullish engulfing candlestick or a hammer or a pullback to a 50% Fibonacci retracement level, something like that, to start buying or selling.
Markets are unpredictable, volatile, complex, but your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum, to London's open surge, to New York's high volatility action. We decode every move live. Get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts. We crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
Hey, I'm Troy Epperson. I'm one of the coaches at Hola Prime, and this is a little glimpse of me outside or beyond the charts. Outside of trading, I play golf with my son. As you can see, I have a laptop and multiple screens. I've been trading for about 15 years on my own and about 25 years before that, even with a lot of interest in the market. I've realized over time that it's not about the strategy or the method. It's about implementing whatever that strategy or method is, which is super, super important to become consistent as a trader. Everybody wants to get profitable and make thousands of dollars a day, literally overnight, but it's about taking those small incremental trades just over time, taking the same boring pattern over and over again that creates that consistency and develops a discipline to make money trading currencies, futures, or stocks, or whatever you're trading. Golf is great because the parallels with trading are immense. Discipline, doing the same thing over and over again, getting your setup correct, knowing when to do a layup and when to actually go for it. All of those things apply to trading. Balance is super important and is the edge when it comes to trading. We want to be consistent, but at the same time, you've got to be patient, and you need to be able to reach out and ask a coach a question and never feel guilty about doing that. And there's no bad question. Every question is a great question because it helps you enhance your intelligence and your knowledge of the market. Well, that's a bit about me. I hope to see you soon in a live trading session. And remember, we're just looking for one good trade. And once we find that one good trade, we're going to do it again and again and again. I'll see you then.
Hola Prime, trade with transparency.
All right. Welcome back, Coach Troy. How you been? How was the break? I think you're on mute.
Can't hear me? Hear me now?
Yep, I got you now. Cool.
What's up?
Well, that's by the way, I sent you a message in Slack just informing you.
Yes, I
We're
saw
gonna roll.
that. Thank
We're
you.
gonna roll. We're gonna roll through this. Okay,
We're
just so you know.
Keep on
All right,
rolling
cool.
after.
Yeah, exactly. I'll let the fun times begin. So we are at the Ask the Experts segment here with Coach Troy, and we are here to answer your trading questions or concerns for the next 30 minutes. And I see that you've already put the question in the chat. Thank you, because I was going to do that. So that's great. Just to respond to Giannis, if you're still here, do we really give away accounts or not? Yes, we do. We've been giving away accounts on a daily basis for months now. And almost every one of your brethren that are in the chat have won an account. So they can attest to the fact that Hola Prime is the leader, the most transparent, and the greatest prop firm to live. And we are currently ranked #1 in the US of A. So yes, we are.
That's right.
Yes. No hyperbole. No hyperbole. As
Just ask
Biden
us,
would
we'll
say,
tell
or
you.
something.
That's right. Just
Yeah,
ask us,
exactly.
we'll tell you.
All
We'll
right.
tell you.
Noel Ray FX, welcome. Glad you're new here. Thank you. All right. So if you guys have questions, we would love to answer your pertinent and relevant present questions for today. If you'd like to put them in the chat, Coach Troy and I will be responding to those. Otherwise, I think I'll kick us off, Troy, with a question that I've got on a list here that goes back through our social media queries. Oh, let's see here. Oh, this is a good one. This is one we don't get very often. How does lunch hour trading change your scalping style? I think they mean like maybe when the market slows down during lunch hour in New York or Chicago. Does it change your scalping style or your trading style at all?
Maybe a little, not very much. I guess you have to understand what's going on during lunch hour. So lunch hour, your senior traders are going to be going out to lunch, and your junior traders, your newbies, the guys who are training, are going to be left.
They're on the desk,
back at the fort, maintaining their as market makers, they have to be there, right? They have to be there constantly.
Yes.
So they let those junior guys kind of take over the ship, so to speak, during lunch, and those guys are under pretty strict rules, and that is don't do anything stupid for the most part, which means that the market's going to probably be in a very narrow range during that time. So they're not going to let the market get out of hand while the senior traders are off having lunch. So very little usually happens. That used to be the case. Now, I've seen in the last couple of years where we're actually starting to see some decent movement during lunch. So I'm not so sure that the old saying about the senior traders eating lunch and the juniors being there and keeping it flat, relatively flat during lunch, because I keep seeing more activity during lunch. So I don't know that is how true that is. I would say that I don't have a huge expectation during the lunch hour. That being said, half the time I go and eat lunch, I come back and I go, oh man, look at that move, right?
Yep.
And so I kind of have mixed feelings whether you should stay and try to trade that lunchtime move, or if it's just tradition that you should go get lunch and take a break. I don't know. What do you think?
No, I tend to agree. It's great that you provided some historical perspective of how it used to be, and that was totally the case a while ago. But I do think that, it doesn't change the way I trade. I'll trade the same throughout the day, but I actually do find a lot of opportunity, like right around now, these times where it tends to be slower, where guys want to say, just trade the first hour or hour and a half and call it a day and be done. Or maybe they come back for power hour where the volatility ramps up again. But because I like to sit in trades and let the thing develop, I tend to do fairly well between, that middle area of the day just as much. So I like it. If I see a cleaner setup, oftentimes it's cleaner for me because a lot of the extraneous noise is gone, right? We don't have the crazy whips, but you still have to be careful. There is the ever present, something could happen, news could happen, a bank may decide they get a call and they need to move or they need to buy, a couple million contracts in something, and they're working with another bank or another hedge fund to try to make it happen. And you see it reflective in the market. It doesn't necessarily mean that it's trying to go after you or manipulate. It just is what it is, because when you're trading on futures and you've got a single exchange where all the volume's going through, you just see a lot of it and it moves it. But I like trading. Typically I like trading during this time. So it doesn't really change how I trade either, but that was a good question there that we pulled out. And it looks like we have some questions now. Cool. So let's see here. Giannis is asking, do you think the US 500 will go down to 6,500? I don't know. You mean today with FOMC in 25 minutes? I have no idea. Anything's possible. It will whip around a lot. So not going to give trading advice here, but we are coaches and you can kind of see what we do. And I think a lot of us will sit on the sidelines for a bit until maybe we get to the press conference. So stick around, because we are going to be streaming the press conference at 2:30 Eastern when Jerome Powell starts to address the media. And 2 o'clock, we'll be here at 2 o'clock, obviously, when the interest rate release is put out there. So Noel is asking us market or person. If the I'm assuming he says if the market were a person, how would you describe its personality? Is it more of a moody artist or a predictable accountant? I don't know if you're being serious or not here. It depends, man. Every day's different. Every day's different. I wouldn't say it's a moody artist. I wouldn't say it's moody. I wouldn't say it's anything. It's a conglomerate of tens of thousands of participants, certainly in the stock indices. There's lots and lots of people. You've got lots of banks and institutions. You've got hedge funds. You've got ETFs. You've got retail traders. You've got retail pros. You've got commodity trading advisors. You've got CPO guys. You've got a whole bunch of stuff in here that some guys have a lot of money and some guys don't. And someone's taking the other side of every trade. With futures is clean. You're typically trading on a single exchange. For stock indices, it's the Chicago Mercantile Exchange. So one exchange, all the volume comes through there. All the data points show that, reflect it. And every day changes. But I am a true believer after trading the markets for 25 years, and Troy even further than me, that the participants move this thing around. But the participants change every day. And there is randomness. And there's events that happen, and there's random news, and there's natural disasters, and there's geopolitical events that happen that throw things, throw a monkey wrench into things. So, if you start to trade and start to pay attention to the markets, you'll probably notice that for yourself, and you'll adapt to whatever works for you.
I would say personality-wise, first of all, I want to agree with Daryl. Very well said. I always try to make my analogies as real as possible, as tangible as possible. And so I would say the market, and I don't know about California, but I know Atlanta traffic. If you've ever driven Atlanta traffic during rush hour, it's exactly what's going on in the market. So you're on 285, which is the big band, a big highway that goes, a big circle that goes around the Atlanta, greater Atlanta area.
Yeah.
And it's like this. Okay. So here I am. I am 8 lanes wide, stop and go. And it's stop as in accelerate to 30 miles an hour, slam on the brakes to 0. Sit there, maybe move 5 car lengths, and then accelerate like a back at a, a bat out of hell to 30 miles an hour to then stomp on the brakes once again to a complete stop. That goes on for 5 or 6 minutes, 10 minutes, and then it's full blown. Everybody's got the pedal to the metal. You're literally going 95 miles an hour. And this is all nose to tail. Everybody, not just one person's going 95. Everybody's doing 95 because we can. Okay, that's the only reason why, is because we can. And then, of course, the whole line of cars stomps on the brakes. And I'm talking about, your face is mashed up against the front windshield, okay, slamming on the brakes, right? All the way back down to a complete stop. And then it's inch along, okay? That's the way the markets are all the time. Today, this morning, we saw the flat line where we're not going anywhere. And in about 20 minutes, we're going to see everybody stomping on the gas and going like crazy, and then stomping on the brake and stopping. Okay, so it's as erratic, and you think about it as a highway where it's a controlled venue where everybody is doing the same thing. We're all stomping on the gas, we're all stomping on the brake, and it's just wild going back and forth. So Fed Day happens 6 times a year, something like that. It's not quite it's more than quarterly, but not every other month. It's like every 6 or 7 weeks on average. So 6 times a year we get this, and it's literally, like I said this morning, my buddy Joe Trader takes today off. and probably is way better off because mentally he's not having to deal with the slow grind before and then the erratic, wild cuckoo for Cocoa Puffs move, right? and then the aftermath, even the aftermath is going to be crazy. The hour after will be very volatile, both directions, as people try to digest what does this really mean? What does lowering interest rates really mean? What does it not mean if they don't, if they don't raise or lower interest rates? And so, and even tomorrow, there'll be a hangover tomorrow from today.
For sure.
In fact, many times we see a big move one way or the other on after the FOMC
the next day,
and then that completely gets reversed the next day. Right?
Yes.
So either it's over optimism or over pessimism that takes place on the day. That's then what we want to call the rational trader comes in on Thursday, right? And they play the opposite direction usually because it got overdone the day before. So it's really hard. And I don't want to put words in your mouth, but it is really hard to trade these types of conditions, and you have to be nimble and quick. So you never say, "Oh, this going down. I'm going short. I'm hanging on. I'm adding size." Wrong answer. It's going down at least right at this second, and I better have my finger on the close button. And you play really nimble, really quick if you're going to play at all.
Yeah, great answer. Good addition to what I said. I think that's properly described. I mean, yeah. So Noel was asking me, and I was asking for a little clarification while you were elaborating, Troy. He was asking kind of a question we get here all the time, which is a very open-ended question. And I kind of, these are, they just, it's just, where do you begin? Where do you start? It's like, what are some common mistakes you see new traders make and how can they avoid them? So I went back and I asked Noel, what, is he a current trader? Is he a brand newbie? What's the situation? He says he trades Forex. So cool. And yeah, Will Hayford, just to reference what you were saying, Troy, he says he likes to wait at least 30 minutes after the press conference minimum. I would agree. I think that's a great strategy. And obviously 30 minutes after that, we're in power hour and you got an hour to go or so, and it still may be whippy as hell. And it may just be where you just sit and watch it and don't do anything. And that may be the best move. And he says, yeah, don't be holding no bags now. Exactly, Will. Get out of the market. This thing's going to get thin. And I already see it in the order flow. It's already starting to disappear here with about 14 minutes to announcement. So, yeah, I mean, so we trade futures here. Coach Troy and I, we're futures coaches, but it doesn't matter whether you're trading Forex or not, Noel. It's the same thing. A trader is a trader. They deal with the same common mistakes. And it really comes down to, I feel, psychology at some level. But in the beginning, if you're really starting out in the beginning, you just don't know what you don't know. And it's good to watch successful people or watch somebody that maybe just appeals to you. You, for some reason, you like the way they trade or their style, and you don't know why, and that's not important. What's important is that there's something within you that gravitates to that, which allows you to stick with that or watch them for a while, because it's something where you feel that's an advantage you may have, or you may be able to mimic that or do something, which is good. You have to start somewhere. It's great to watch and try to learn every indicator under demand, every trading style, every setup, every asset class, every instrument, whatever it may be. But at some point, you're going to get to where you're going to want to make it simple on yourself. You're going to want to get consistent and try to extract profit from the market. And I feel, after doing this for a long time, the best way to do that is to get rid of the junk that you may have acquired in that process, the old habits or things that you don't really agree with, and focus on the things that you do and hone in, like what Coach Troy always says, kind of hone in on a great setup or a great structure or play that you can try to replicate over and over, because all you need is one. You just need one edge that has a higher propensity or a higher statistic in the law of averages of playing out in your favor and making you money. It's all you need to do. And hopefully you can see that in the market often enough to where you can engage and you don't need to worry about the other stuff. And just try to refine that little trade over and over and start to pull out money. And you don't need to do anything more, because if it gets consistent and you're really good at it, now you can add more size. So now you're actually making, 1.5 times the profit, or 2 times the profit you normally make, or 3 times the profit for the same exact move. And that's where you start to make the curve of making that what we call a professional trader, or someone who can do it for a living if that's what you want to do, but you're certainly a more consistent trader at that point. But there's so many things, there's so many mistakes that people do. Revenge trading is huge. Over trading is huge. Getting in right now with 11 minutes before the FOMC and saying, I'm going to get in and I'm going to go long because I feel that if the rates come down, then the market's going to shoot up, and that's not the right thing to do. Trust me, don't do it. But these are all common mistakes that we see all the time.
I totally agree. When you were talking, I kept thinking of the phrase, be like Mike, be like Mike. That's from the 80s, talking about Michael Jordan. And if you think about basketball, you think about Michael Jordan, and think about the style of his play, the crazy Air Jordan, the jumping, and he'd take off before the foul line and fly through the air and chunk it in, right?
Yep.
And think about not just, but think about what happened. Not only did he revolution, think about the players that were thinking, I want to be like Mike. And the next generation was nuts. I mean, the stuff that the next generation did was so far beyond what Jordan. I mean, Jordan was still great, of course, but the younger guys coming up were being like Mike, right? We model. How do we learn? We model by modeling after someone, particularly in sports. Sports is a great analogy for that. But in trading, same thing. Find a trader, whether he's a YouTube guy, whatever. Find a guy that you like. You like his personality. You like the style of trade, and copy full out. Don't even try to understand it. Focus on copying it and replicating it. Okay, so you're trying to be like Mike, and that's how you get started. That's how you learn an edge, is by following someone else, learning how they get in, how they manage their money. And then at some point in time in your career, you'll suddenly go, oh, I'm going to modify this because I see this over here. And you end up making it your own, and it becomes your own style, and it becomes your own money-making machine that's unique to you and you alone. But it started with modeling, and modeling is a very effective way to learn anything. And so we shouldn't just throw traditional education out. Modeling is really good in trading. Learn a model and then adapt it to your personality and to the market that you happen to be trading. So it's all good.
Yeah, and exactly. And I'm probably going to cut this thing short, about 5 minutes till the release. We'll get the other coaches in here and we'll kind of watch it in real time. But just to elaborate what you were saying, Troy, humans are not perfect at all. And we tend to feel like we're smarter than others, or we want to do it our way. We want to be unique. We're unique beings. We're unique individuals. But in trading, it's probably the wrong thing, just like what Troy was saying. I did that early on in my career. I wanted to do my own thing from scratch. I read all the books. I followed all the people. I saw all this. And I said, yeah, that's cool. Yep. That's cool. But I'm me, and for whatever reason, I know better. Why? I have no freaking clue. I'm not a math genius. I wasn't working on Wall Street. I wasn't in Chicago. Why would I think that? But I did. And until I got my head out of my you-know-what and figured out this sucks, I'm sick of bleeding out money year after year after year. I need to resort to things that are working for other people. And then, like Troy says, it eventually becomes your own, because you do take little bits and pieces of things that you like and at work, and you make a little recipe out of it. And it has to be your own anyway. You're not going to stick to any strategy unless it's your own. Troy can tell me, hey, Daryl, I pull in $5,000 a day doing this strategy. Cool. And he says, here it is. And I said, great, I'm gonna copy it verbatim. I'm gonna trade exactly like Troy does, and I'm gonna start pulling out $5,000 a damn day. Guess what? Maybe I do it for a day or two or something, but then at some point it's not gonna work, because Troy's got, there's other intangibles. There's a psychology part of it that allows you to know when to do certain things as far as managing the trade or getting out of the trade, or maybe when to scale in or scale out or do whatever it is to do that can get you to the $5,000 a day potentially. But if I don't do those little things that Troy does that are almost discretionary, they're, in a blink of an eye, he almost doesn't even think about it. It's part of who he is and how he does it. Maybe I enter where he enters, but I'm late. I'm missing, and I'm entering a point or a point and a half late. I'm not making that full spread. I'm not making what he's making. So, and then you say to yourself after a week or so, oh, this sucks. Troy's wrong. I'm not making 5,000 a day. I'm losing, or I'm making 1,200, or I made 1,400 or whatever. Screw it. I'm going back to my own. And that's how it is, because we can only do what we do. You cannot copy someone else. You look at it, lastly, I'll just say this. You look at all these, we talked about the trade desk earlier with the lunch hour and the junior traders and whatnot. Okay. You get in there and you're being trained, but you're not being trained like robots. At some point, everyone's learned, and the risk manager and the general manager, they're asking these guys, what do you like to trade? What are you good at? What do you see yourself doing? And then they work with that trader to get better at one particular thing. Maybe one guy's great on bonds, one guy's great on fixed income, one guy's great on indices, one guy's great on metals, whatever it may be. And that's how you form a whole diverse trading desk where everyone's trading different things, but they're all working together and helping each other out. So, yeah, there's another. I know you have follow-up questions here, Noel, and do me a favor, stick around. Come to see us every day. We stream live every day, all day while the U.S. is open here, and you'll learn from us. And if you're trading Forex only and you're not interested in futures, we have Forex coaches in the evenings and the early mornings. I don't know where you're located, but we stream, almost 20 hours a day, right? It's all free. So stick around. You'll learn a lot. Ask your questions. Let me just see here. I need to get to, one second.
I think they're still waiting on Adelina.
Yeah, I know. I think that, okay. So,
And by the way, Noel, it's not just Ask the Experts. We answer questions during the live stream all the time. So it's not like you have to just be at this segment. During the live streams,
very well said.
Ask a question. We're very happy to answer that. And we'll always, if somebody is not in a trade, they can answer the question. If you're in a trade, obviously you're focused on that trade, but that's why there's 3 other coaches to answer that question.
Exactly.
Even if one of us is in a trade, somebody else will answer the question. So we're all about trying to provide a community that is pro-trader, pro-profit.
Christopher Lee, we are going to stream the press conference. There's nothing really to stream. The release, the interest release, that's are you muted? What happened? No. Talk to me, Troy.
Hey, you hear me?
There you are. Yeah, no, there you are. I don't know what happened. That was weird. Okay. Yeah, so we're going to bring a couple other coaches in here. We're going to continue. We're going to get started earlier than we normally do. We normally get back to live trading at 2:30 Eastern. We're going to jump in here now. We're going to just kind of observe. I don't think any of us are really eager to jump in and get in front of this freight train, but we'll watch it, and then we're going to probably stream the press conference in the live stream here as well, so we can listen to Jerome, do whatever the hell he's going to say, and let the media pick him apart. 2 minutes. 2 minutes and counting. If you're listening to us, we're ready to go. We can bring in Coach Paul and Coach Adelina whenever.
Oh, shit. I just
All
saw a
right,
big spike.
there she blows. Yeah, blew the roof off a little bit.
Hello.
How's everyone doing? Welcome back. Welcome back. All right, so it looks like we've got I'm waiting for it here.
15 seconds.
Let me do this real quick. Yeah, we're going to scatter around. We're going to jump around. Updating P&L. All right, cool. So,
hey, whoa.
Yes, we are.
We kind of expected
of course.
that up like that.
Of course. Yeah.
All right, one cut.
Oh, yeah. One cut.
One
all she
little
wrote.
quarter-point cut.
Did I say?
Yeah, 25 basis points. That's all she wrote. That's all it took. That's all it took.
Nasdaq popped.
So we will be
about 70 points. 70 points off that.
Yeah. Nasdaq did?
Yep.
What you said?
Yep.
Yep. I believe it. And of course, financial juice is all locked up. Why are you locked up now? Everyone's trying to get in. What the hell? Are you locked, Troy? All black on you.
No, I actually shorted.
Refreshing. It's in a.
I just short.
There
I
we go.
shorted
Now
the
it came back.
Nasdaq. I shorted Nasdaq, and that was a quick $300. Boom.
There you go, baby.
Dude. Very nice.
Man, that's insane.
All right, so the median projection shows 50 basis points more rate cuts in 2025. Well, we'll see. We'll see what Jay has to say. Let's see what he has to say. This guy. All right, cool.
Dang. All right. So, another two cuts. Another two 25-point cuts at some point here.
Yeah.
This year.
Yeah. I mean, November, December. That was kind of baked in. They were saying that for a while.
Yep. Yeah, and that.
All right,
what's okay, Troy? Yeah.
I was just going to say that scalp trade I made. I got in at 2:00 and 53 seconds and got out at 2:01 and 14 seconds. So that is a total of 21-second trade. Made $230. That's insane.
Good.
That's a scalp.
That's hilarious.
So that's sort of yeah. You can see that right here. Right here, it gives you at the very, very bottom of your project X. It'll give you the trades and it'll show you the entry time and exit time and the duration. Here it's 20 seconds for a $230 profit. Insane. Again, what you're doing here is you're playing the spike somewhere where that spike comes up. I didn't get anywhere near the top, but once it spikes up, you want to short and get that down, but then you want to get out because you can see right here, it came down more than halfway from the original move to the upside. Remember I said that earlier, you want to cover at 50% retracement because you don't know if it's going to come all the way back to the reversion to the mean. And then it can decide it wants to keep going up or it may plummet. But after, you just don't know what it's going to do after the initial move. And the news trade is on the initial move. It's not on the move after. So just want to clarify that because I had said a lot of stuff earlier and wanted to make sure that was fully aware of. The play is on this candle right here. It's not on the play after the candle.
Right. So when you take those shorts like that, very quick in and out, you're still looking at 1 minute chart or you're looking at second chart?
I was on a 1 minute.
5 minutes fine.
Doesn't
matter.
Yeah, it doesn't really make too much difference. It's a 10-second trade, 25-second trade.
You're going for the momentum.
What you're watching.
Yeah,
you're watching that trade go up, and you're watching to see when it runs out of energy, and it's a split-second decision. It looks like it's running out of energy. You short it, and then it pulls back down. Boom, you're out. It's literally a 10, 20-second trade. And it's just a timing. It's pure experience. You need to watch. You can replay this in maybe another software package and replay it so you get an idea of watching it slow down because it spikes and you can kind of see the order flow starts to slow a little bit. And then you can say, okay, that's it. It's going to retrace. And, I think I got short like about right here at 87. So I was late to the party. It still had plenty of movement to go to the downside, but your edge after that is, in my opinion, is very little. Like I can't tell you what's going to happen after this bar, after that down bar right there. I don't know if it's going to keep going down, if it's going to go up. So I'm not trying to play that. I'm trying to play the overreaction, the imbalance initially. Remember, the market loves to be in balance. It wants to be in balance. So anytime you get out of balance, either direction, it's going to try to come back to balance. And that's what you're playing on a news-based trade, is you're trying to play the overreaction long or the overreaction short. And once that reaction's over, whether it goes up or down, to me is completely random and I have no edge. So you'll never see me play after this. I'll wait 30 minutes, 30 or 40 minutes after this, but I'll play that one bar, right after the news comes out, because you're playing the imbalance. And to me, imbalances is where we as traders take advantage of the market. It's when we can see an imbalance, then we take advantage of that imbalance. The market pulls back into balance or pulls up into balance where we get out. And we're doing that on a much bigger scale. Like, and Daryl's really good at this because he uses the POCs and the high volume nodes as places of balance. And then he looks for those low volume nodes as imbalance. Once it gets down there, it wants to come back up to balance or down to balance, so to speak. I hope I didn't put any words in anybody's mouth there, but that's my style of trade for the in news events.
Definitely something awesome to be able to actually see in real time there, that you're able to take advantage of that kind of opportunity in real time. Is there any do you know, like, so you made like $200 or $230, so that was roughly 11 or 12-ish points or something for you in the Nasdaq. So like, if you to put it into perspective for everybody, like you said, you don't need to get to the top of that wick of the that initial candle. You just need to try and get in at some point, I guess, in relatively the upper half of it to be able to get that short, that quick short, and then just set your, immediately get out if it drops, a decent bit there. And did you have your orders, you had like your a limit order at the top and bottom, or did you do that like kind of OCO situation, or is that what you did there, Troy?
I do. That's what I do in my cash account. Yes. What I do in Project X, because I don't even think they'll let you have a live order during the news event. So you're kind of limited. So it has to. Plus, once the news event comes out, you're waiting to see what the reaction is. It either goes up or it goes down, and you're looking for that initial reaction. This one just spiked to the upside, and again, you're watching momentum. In a perfect world, I would have a database that says every time the FOMC, the Nasdaq moves X amount, and then that's the average, and maybe go back 10 FOMC meetings to get an average movement, and then you park your order at that area. But in this case, with Project X, I was just completely all by feel. I'm literally watching it and trying to tell when it's starting to run out of steam to jump on that short. And then I have my eye on the midpoint of the move as a potential exit. Unfortunately, in this particular instance, that's all fly by the seat of your pants. In my cash account, I'm going to do it very mechanically. I'm going to have my, I'm going to have an order parked, a stop loss that's an auto stop loss. So you instantly get filled. There's a stop loss already in place. There's a target already in place. Usually I don't do anything but put the order in where I think it's going to go and let it go. It either pops up, gets me in, pops down, gets me in, gets me out at my target. Occasionally I will jump the gun and pull the target. Go ahead and close the position if it doesn't look like it's going to get, you're watching the order flow. Momentum is really the key. I don't know if that answers your question. I get really animated with this style of trade. It's really exciting to me, and I love doing it. So I apologize if I get a little boisterous here describing this, but this is like, I love this stuff. It's so cool. And it's so much fun. Now, I've had them where it ran over me, and if it runs over you, you just sort of say, well, I made money the last 8 times I did this, so it runs over me one time. Not a huge deal. Especially is like you can see here. This is the MNQ. This is the micro. I actually did the trade on the NQ, which actually was a mistake. But hey, I'm okay with that.
Yeah. Hey, take it. It looks like we've retraced that entire upwards move in the Nasdaq, in the Dow.
That's the revision. That's the revision to the mean. Okay, so that's what I call the reversion to the mean. And if you go back, I'm telling you, you go back and look at the last 15 FOMCs, and the percentages are in the high 80s that it actually reverts all the way back to the mean prior to the announcement. And so that's a high probability trade. You have to be able to, be really aggressive with it and say, hey, 85% of the time this thing spikes one way or the other, but it comes back to the mean. And it's a high 80% trade. Most people will not, it's so crazy that they won't trade it, even though it's a high probability trade.
Right.
Come on.
And again, we talked about earlier that some prop firms won't let you play it. So sometimes you don't even have a choice. But
yeah, that's cool. Yeah, the Dow is off blast off mode. It's not even really reverting at the moment, while the Nasdaq has and the ES have completely reverted.
ES has pulled back big time. Yeah.
Damn
ES.
But the Dow's consolidating. It's kind of making a little bit of a bull flag of sorts, but it might end up following suit with the other indices here soon. Let's see what the Russell's doing.
Yeah.
You little sucker.
It's gonna retest.
Russell's doing the same thing. Same thing as the Dow.
All right, cool.
I hear you, Daryl. What you're in a trade? You're in a
I'm trading my
yes
cash now.
trade. Gotcha.
I'm getting beat up.
So what was the actual report? They're going to cut a quarter point. What? I wasn't even paying attention.
Yep.
Yeah.
Quarter point, and they're going to cut in October. Is that what they're all saying now? They're going to
Maybe
cut
another 50
I'm
basis
saying
points.
November, December, another 50.
Yeah.
Whether that comes in.
Yeah.
Oh, you little son of a gun! Damn you! Coming all the way down. Coming all the way down to the low day. You had to do that, huh? Okay. Wow.
Big move.
Yeah,
move.
that's a 30-point move. Oh, another one. Keep going. Damn, it's still just.
Yeah. So, you're not on my screen anymore. But if you look at the initial move, and then it reversed and took out the high, and then it reversed again and is now screaming down.
Came
to
in
the
all the way
downside.
down low.
So you actually got
Yep.
a double reversal.
Yep. You
which
did.
Which is
You
why
did.
I don't trade. I don't trade after the fact. I only trade that news
It's
spike.
too whippy.
Yep.
Oh, man, this is.
Yeah.
Just right before we went into the break at 12 o'clock, I took a short. That's why I'm on plus now at 12 o'clock.
Nice. Good job.
Very good.
Good job.
My God, this
Yeah, we can
platform
look
is
at
so
your chart. You
laggy.
can show us what you did.
We are just dropping. We are.
So basically, I saw here a retest at 12:05, and I just waited for a candle to broke the EMAs, and I just took it down till here.
Nice.
I think till here.
Very nice.
It's like 100 points or so for you on the Dow there. That's sweet. Awesome.
Yeah.
Well, that must have been about a $600 trade, wasn't it?
Yeah.
It was
yeah,
600, yeah, because you got me in 100.
Nice. Very nice. Good. Nice to turn it around. That's Coach Daryl and I were talking about lunchtime movement and how that's changed over the years. And it seems that lately there has been moves between the 12 noon and 1:15, 1:30, where in the past years, that was usually a dead zone in the market. So that was kind of interesting conversation, Daryl. I did enjoy that.
Yeah, actually, yeah.
Mm-hmm.
At 12 o'clock, I saw many times it start the moves at 12, actually. Many times I'm waiting for 12.
This thing is so
5 minutes after
frickin'
12,
laggy,
it's
dude. Why is Project X so laggy?
starting the move. So you see, it retest this here right now. So I'm waiting to cross the EMA. Maybe I go back into a long. Let's see.
So, from the Fed FOMC, from the statement, a comment that's being highlighted in the statement is inflation has moved up and remains somewhat elevated.
Yeah.
So,
yep. That's where you're going to get the negative concern from, probably, and why we're looking at maybe doing 2 more cuts. That's a bummer. That's a bummer because honestly, I don't know. Well, we'll wait and see. We'll wait and see. We'll see what our boy says. Came up point of control. Are we selling back down? We gotta wait for him to start talking. He's gonna start talking. This is gonna rip all over the place. Right now, everyone's just trying to get what they can get. Can't believe it came all the way back and extended the low. I mean, I'm not surprised, but it's just it is what it is.
Yeah.
When does he start talking? At 2:30?
2:30.
2:30, yeah.
Yeah, 12 minutes. We're going to stream it here. He'll come out and say good afternoon, and it'll fall 500 points.
Good afternoon.
Good afternoon.
Good afternoon.
That's the truth. That's too funny, man. Those LOL time
what we
videos
see all the time.
With
we see all those memes.
Were so funny.
All those memes are so funny.
Man, this makes me so stressed. I've already drank almost this whole bottle in like 15 minutes.
Oh man. Yeah.
Be careful. Don't
all
do
I
it.
have on my chart here on the ES, I just have the value area lines that have all been blown out essentially through this move and blown out to the upside and downside, and then we blew through overnight low like we had ever so slightly broken in the regular trading session earlier today. And now we've had a relatively large wick down to 66.40 and we're bouncing back above overnight low. So really, I think we've essentially made a 45 point. We have a 45 point range now between the high of that move and the low of this move. That's right. I would assume we kind of hang out for 10 more minutes somewhere in the middle of that range. And then when, just like Daryl said, good afternoon, and then something's going to happen. And then we're either going to blast off to the upside down.
As soon as he walks out the door, it's like everyone just starts, it just goes bonkers. It's crazy. Now, don't forget, this is important. When we hear it on YouTube, there's a good 10-second, maybe 20-second delay. So what you're going to see in the market's going to move before his mouth moves on certain issues. So, you just take that with a grain of salt because he's already talking. And honestly, he's released his speech to all the media. It's already been leaked out. Everyone's had it. They've read it. So there's a little bit of advance going on here with this stuff. So it's not, I'm not saying it's totally fair. It just is what it is. Happens all the time. Happens all the time with all these kinds of things. So others have already seen this.
That 45 points, if you take that and you multiply it by 4, the number of ticks times $12.50, that's $2,200 for a single contract from high to low. Okay, so what people don't understand is that's a ton of money in a very short amount of time, and that's on a single contract, $2,200. So you don't have to be good to capture a small piece of that. You just have to be a little lucky, right?
Right.
Yep. You got to be quick.
Yeah.
Yeah, you got to be quick, and you got to just get out.
Got to really be
dialed
in.
And during that, the VIX is now at 15.92. It's actually lower now than it was before. That makes no sense.
It was, where was it before? It was like at 17 or 18 or something, wasn't it? It wasn't very.
I thought it was like 16.50. It's at.
Or maybe it was 16. Yeah, so it was even closer. All right.
That's. Yeah, funny, Troy. I was looking at VIX during that initial pop up, and I was thinking of you the whole time. because I was like, it's like it was just going back to our conversation earlier. It's hilarious because there was a massive amount of volatility to the upside. It doesn't matter that it's to the upside. There was volatility, obviously, to the upside, and the VIX is like was dropping significantly. It was at like 15 at the moment or something. Like when I was looking at it, and I kind of laughed. I chuckled a little bit to myself thinking of you and us talking about it earlier. But now we're back to 16. You know, we might slowly, you know, get back to the 16.5 area that you were talking about or something. But, you know, here we go, pushing up again. And the ES and the Nasdaq are trying to push up here, back up to, for the ES, back up to that 66 level. That's definitely a level
that area. And that's where the mid, the VWAP, VPOC, everything's sitting there.
And then for the Nasdaq 24,400, that level is definitely one that matters a lot right now as well. So that's where we're back to at the moment. 7 minutes.
Right at the PFC.
6 minutes, 20 seconds counting. I can't stand listening to this guy though. He just is like most. I don't want to say he'll put me to sleep. It's worse than that. It's just like, dude. Is these freaking central bankers, man. I don't know what it is with them. It's just so.
I think he's a little bit better than Bernanke, though.
Bernanke was the worst. Bernanke was.
He was terrible.
Bernanke was.
Yellen was pretty bad.
Bernanke was absolutely.
Man, Bernanke
and his freaking beard. Yeah, he was bad. He was bad.
Oh
man, they're all bad. They're all freaking bad.
Yeah.
I mean, I think they're all cut from the same cloth. Even, you know, IMF, World Bank, whatever central banker on the ECB. You know, they're all pretty bad. They got no emotion. They just like wander around like, I don't know, like robots. Yeah, we have a dual mandate. Our dual mandate says, "How do you feel about the president? What he wants you to get fired?" I will refuse to get into political conversations at this time. That's what he is. He's going to mumble through this crap. It's like, dude.
Yeah.
All right.
Saying all the right things. Just trying to be as neutral as possible.
I know, that's the thing.
Know?
I know. But it's like, man.
I get it.
God, man.
All right. Google.
Come on.
I'm looking at some of individual stocks as well right now. Just kind of keeping an eye on some individual tech stocks and whatnot.
That's good.
Nvidia is still down like $5. Google gave up $3 since the beginning of the session. It was at its high. It was at 252 today. So it's down at least $4 from its high. Let's see. Amazon down $3, down 1.3%. Meta down about 1.2%, $10. Netflix is killing it. It's up $21, 1.8%. I don't know why Netflix specifically is killing it, but
they're probably announcing a subscription increase or some crap. Probably going to go up to like $30 a month. I don't know.
Right.
They were like, yeah. The only thing that makes sense to me. Oh man.
Materials, real estate, and financials are the big gainers at the moment. They're the biggest gainers in the S&P sectors. Watch here.
It's the color of his tie. That's funny.
I know. I saw that. I did see that. That was funny.
3 more minutes.
I saw Tesla's down some too, as well, about $5.
Yeah. 1% at the moment. people getting into things like Walmart. UNH right now is up.
Go push up ES. Push up ES and I can get out before he starts talking. I don't want to hear this clown. Just pissed right now.
Oh, I think you should bring it up right now as soon as possible so we don't miss it. And I like
it's already
scheduled.
small. No, it's what do you mean?
Oh no,
we're gonna stream
back
it.
office or back production.
Yeah. We can do full screen. I don't care.
Doesn't matter.
Yeah, I don't think we need to. It's not like you're seeing a lot of detail, so we can just, we can just keep it like on the size of a screen right here. Watch this freaking door open.
I got in a long in a Dow, but I got into a micro. I didn't have the guts to go.
Micronesia. I like that.
No, it's micro.
She has
a
Ferrari.
micro.
She has a Ferrari coffee cup, and you're in the micro. I mean, that does not make sense.
It's a 1/10 scale model.
Makes sense for me.
A little micro. It's a little micro.
I have a Ferrari.
812
I have two. Micro.
All right. Boom, 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 boom. All right, let's go, Jay. Let's go, Jay.
Oh, Christopher, man, that's gutsy. Shorting the USD Japanese yen. Woo,
dollar yen.
Man,
yeah.
I don't know if I could do that. That's too risky for me.
Dollar's going to drop. Dollar should be falling. Maybe a good move. All right. Well, I hear some music. The market's already dropped 2,000 points. I heard music.
Hello, everybody.
Oh, jeez. Here he goes. Watch it. Watch it. Here it's over. It's over.
Okay.
Look at this.
Oh, here he is.
Oh, my God. Look at Mr. Excitement. Mr. Excitement. Oh, my God. Smile, little dude.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. While the unemployment rate remains low, it has edged up. Job gains have slowed, and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals, and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job growth has continued to moderate while still outpacing inflation. Overall, the marked slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up, on balance, over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027.
All right.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy is not on a preset course. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission, and we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Great. Thank you. Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Oh, I'm sorry. Can you, you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation? Thank you.
You know, it's certainly possible. You know, we're beginning to see, we have begun to see goods prices showing through into higher inflation, and actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point, and we do expect them to continue to build over the course of the rest of the year and into next year. And you know, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers has also come down quite sharply, and to the point where we see what I've called a curious balance. It's, you know, typically when we say things are in balance, that sounds good, but in this case, the balance is because both supply and demand have come down quite sharply. Now demand coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timmeros of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
So I don't think we can say that. What we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that. But we do know that they've moved meaningfully toward greater equality, the risks between the two goals, and that suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now, and so that warrants a change in policy.
Colby Smith with the New York Times. Should we be viewing today's cut as the committee taking out some insurance against the possibility that the labor market is at risk of weakening? Or is it the committee's view that the dynamics of a downturn are already in place? I guess I'm just trying to square the shift in the rate forecast in the SEP towards more cuts than just 3 months ago with the fact that the forecast for unemployment didn't change?
Yeah, I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
The SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028. So I guess I'm just wondering how you characterize the risk to price pressures of kicking off a series of cuts at this point.
Yeah, so I would look at it this way. We fully understand and appreciate that we need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low. It's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years. But the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that.
Once prices go up, they don't come back down, you knucklehead.
Our job is literally to make sure that is what happens, and we will do that job. Right now, the situation we're in is that we see Inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, this is quite an unusual situation. How do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of this, of the tension between the two goals? How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current
he's
situation.
stuck between a rock and a hard place. I mean, that's all there is to it. He's just.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and people they're making their arguments, and we're having really a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Yeah, baby.
Of
course you are.
Yeah,
there's your canned response. There it is.
I know
there's
preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount, and I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it, but the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month. And you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But if for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. It shows a weaker job market coming into this year. If you had had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
You know, we have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter.
Question.
And I think it's important that we use our tools to support the labor market.
Anybody could have came up
signs
with that.
like that. I did mention that. You know, you see
a high school
minority unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
If you look underneath his feet, there are eggshells everywhere.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
Of course, I'm not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve System and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So
he's
I think
adding to the job
we're
decline.
certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to always trying to do better.
They're an agency. Government agencies don't give a crap about anything.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI better more than they had in the past.
I just can't trust it,
part of
though.
the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down, and so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
He could have a fart, and then the market would just do something. We don't know what it would be.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category. And last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Imagine.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 19 participants of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And
Really?
that's how it's going to work. And I think that is the way
What a
the
concept.
institution, that's in the DNA of the institution. That's not going to change.
That was a great
And
question.
then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Rewind, play again. Rewind, play again.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there's a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up just one tick outside of the the range where it's been for a year. 4.3% is still a low level, but I think this level of this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So. We watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates, and that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help will help supply, and so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and that's
not the interest rate. So that's only affects mortgages and refis.
And just a quick follow-up. During the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about
Imagine a cocktail party with these people.
I'm wondering if you still
How
feel
exciting
that way.
it would be.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about.
Man.
So I think right now is a particularly challenging time, even more uncertain than usual. And so
it's the only
I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance.
Talking.
If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Good idea, Tom. See you in the chat.
I think
Good idea.
we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet,
I agree with them.
we're
not doing
we're
any more
still
either.
in an abundant reserves
I gotta
condition,
maintain that count. So
and
I'm not doing
we've said
any
that we would
MOC
stop
today, nothing.
somewhat above an ample reserves level. That's what we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN.
Boom.
We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals.
We're in a bubble.
Right?
Where the hell have you
And
been, dude?
Our goals are maximum employment and price stability.
Exactly.
And so we take the actions that
These
we
are the
take
questions I want.
with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate, and I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities, and I would say those are not elevated right now.
Jean, we'll go to you for the last question.
Hi, Chair
Oh,
Powell.
thank God.
Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations both break even in the markets, and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, we need to, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
What a snooze fest. Yeah.
Yeah, that was status quo. That was just super status quo there.
Well, I'm glad we got to show it to everyone in the chat. That was, a lot of you guys haven't seen this or don't listen to it much, so it's good. It's good to see where, what things are discussed and
it's important.
What tends to move this. Oh man, God, he was putting me to sleep so bad. I was dying.
Yeah,
dying.
He has a nice voice.
It's hard not to be disrespectful. Nice. I don't mean it that way. It's just, it is what it is.
Yeah, I know. I mean, at the end of the day, he's a federal employee, and that's what it's no different than someone who works at the post office or the DMV. Just gets paid $1 million a year or more.
No, it doesn't.
That's a big difference.
No, I'd be a little harsh, but yeah. No.
Be like a little bit less than 200 or whatever, but yeah, it's still good.
No, I know. Yeah, no. When he leaves, he's gonna go to Goldman or something and cash in. That's what they all do. They all do that crap.
Right.
Oh, man.
Exactly. Consulting.
Well, you can't. You have to remember that they're academics, right? They're academics.
I know.
They're just a totally different mindset.
Theory.
Than the reality of, right? And so when he talks about policy and unemployment, they're thinking, 4.3 is nothing. That's low. Everything's great unless you're the guy that's unemployed.
Yep.
If you're the guy that's unemployed, then it's a totally different scenario. So, they have a way of looking at things on a macro level that doesn't have anything to do with what's happening on the street, right? And you kind of have to take what they're saying and just sort of go, yeah, okay. What's the real story here? The real story is that by lowering interest rates, they made it cheaper for all of us to buy shit. Whether it's buying a house or whether it's using a credit card to buy something, they just made it cheaper. Is that a good thing? Yes, that's a good thing. Can that also contribute to inflation because now we have more incentive to go out and buy stuff? Sure. But hopefully that we won't run out and buy like crazy because we got a 1/4 point reduction in the interest rate. But you understand what I'm saying, right? The filter down effect is very, very minimal. It takes a long time to see any kind of results from anything that the Fed does. I mean, we won't see results from this small reduction for 3, 4, 5, 6 months, and it just takes so long for it to filter down. You kind of have to take it at a kind of a grain of salt and just move on. And it does affect the market because the market is doing what? It's forward looking 6 to 12 months. The market prices we're doing right now is a projection of where we're going to be in 6 to 12, maybe even 18 months out. So, it is what it is. You can't get too bent out of shape about it one way or the other.
Chris says he's a worm. I will say it. I am being generous. I know he is. I know he ran I know. We know all this. I know, Chris. I know, man. Oh, my God.
Yeah, you can say it. We can't.
I know. I know these dudes. I know. Same with Hank Paulson. All these guys. They made fortunes before they came in. And they made fortunes on the way out, doing their service, doing their little job for the American consumer and the American citizen. They're so nice. All right.
I had to write down, I don't know about you guys, but I wrote down the acronym SEP because I had never heard of an SEP. I like, what the frick is that? And that's the September economic
he says it all the time.
projection. I had no idea.
Yeah, he says it all the time.
That
He says it all the time.
Like, who knows that acronym? You know?
Or SEP.
SEP.
I think what's more concerning
SEP
is
as well.
I think the most concerning part is like the rate at which I feel like if they're really going to have 4 quarter-point cuts by the end of January, the projection right now, like I know that we're only doing 1 this month, but like what's a few months time in between all of these? Like, is it generally speaking,
it's fast.
That's a lot of cutting in a short period of time. Like it's going to be a point of cuts within a quarter of or a third of a year. It's still somewhat, I mean, just somewhat quick in my thoughts. But so when he was talking about like affecting the housing market and stuff, it's not as bad because you're not doing it quickly. I was like, man, like, but isn't that like 4 cuts in essentially 4 months of a quarter point kind of quick? Like I don't know.
They're cutting and they're slowing the printing press too. I think he said they're continuing to slow. So there's less liquidity in the market and they're cutting, which they want to control the supply, right? I don't know. I mean, the big unknown, he keeps talking about some tariff stuff coming in, but we don't have the big tariff numbers yet. We have no, there may be some little bit of things from some small countries, but we haven't.
Yeah, that's what I was going to say is that, I think he said it very well over and over again. He said the two things. He says, we're worried about tariffs and we're worried about a softening labor market. And, a month from now, IBM could come out and say, we're going to hire 5,000 people because AI is going to expand our business model or whatever, and suddenly there's a rush on hiring that you get spread out. You just don't know what's going to happen. And I think that's why they like to do quarter points and do more of them than doing a half point or waiting all at once, because they can sit there and go, see, we were right, let's cut another quarter point. See, we were right, let's cut another quarter point. And so it's sort of the CYA going on there. And let's face it, there is the tariffs, the big unknown. The labor is not, I don't think, quite as unknown, but the tariff, man, we just don't know. Like he said, the companies in between are absorbing the costs. How long can they do that? I don't know. Once that starts getting passed through, and it's a dual-edged sword. So when prices go up because of the tariff, and therefore people have less money to spend, so demand goes down. Well, then supply has to adjust. And how does supply adjust? They lower prices, right? So the whole thing gets kind of cattywampus. One thing creates another thing, and the Fed's just going, dude, we're not doing anything till we get clear data, right? And then we'll make a decision. So, this doesn't surprise me at all. I would have been very surprised if it had been a half point, or if he'd have come out and said, we are extremely concerned about the labor market. And in any one of those, the market would have crapped all over itself. Right now, the market's pretty much recovered completely. And, we're going to continue because the data is not telling us anything. So why change anything, right? And the Fed's proactive. They're cutting rates, even though we don't know anything about tariffs and we don't know anything about the labor market. We're going to, it is what it is, right?
Yeah. I don't think they're going to eat it forever. They're not. I think I think it's early. And I think some of these companies, and who knows if they're distributors or where they are in the chain, but if they are a B2C type customer or business where they're dealing with the consumer or the retail, consumer, they don't want to be one of the first ones to jack up rates and blame it on tariffs. They want to see other people go with them. No different than like we had with COVID and the toilet paper and everything else. And it was just like, hey, look, everyone else, it's all going, they all went along with it. It's the herd. So I think they're just a little concerned of being the first few to come in, and then they'll be all over the news and someone will say, look, they're screwing us, this company here, this company there. That's just my take. But again, I don't think we have enough. I don't think we have enough tariff stuff either. I think Powell's just saying that just so he can buy himself some time. We're going to lower a quarter point, and we're watching the tariffs. The tariffs haven't even come in yet. I mean, I don't know.
Yeah, I agree.
So
and it's going to take a Walmart coming out and saying we're raising prices, and then Target, and then Kroger, and everybody else will go, yes, we have to raise prices too, right? It's going to take somebody big to step in because let's face it, Trump's been really aggressive in threatening companies not to raise prices. So maybe that's also slowed the price movement down, at least in the short run. We all know that in the end, Walmart's not going to be in business to break even. I mean, they're going to raise prices. Everybody does. Otherwise, you're not in business.
Yeah.
Yeah.
Yeah, I know.
Yeah, I mean, we're seeing people already. A lot of people are flocking to wholesale clubs and everything already. But, I guess at what rate do you start seeing that kind of trend take on to where maybe, I don't know what the precipice is of it meaning anything typically for the health of the consumer and whatnot. When you start seeing, okay, well, maybe, I don't know, 5% of Walmart's customers are now preferring to go to Sam's Club actually, Walmart owns Sam's Club, I believe, so that doesn't really matter. But BJ's or Costco or or whatever.
Right.
But you get my point.
But the prices are high there too. The prices have all been inflated at all these places already. Everything's kind of up, and once they're up, they don't really go back down. We as consumers get used to paying a certain amount, and then it becomes every day. And then if it goes down a little bit, it's like, yes, I'm saving a lot. It's like, no, dude, you're still paying 80% more than what you were paying 2 years ago. They just screwed your ass. You're hypnotized.
Yep.
They got you.
Yep.
They got you. Where you think now that it came down a little bit, you're like, yeah, I'm saving money. This is awesome. It's like, dude, you're still spending more than you were. It's just the way it is. Just the way this thing is. The question is, what'll happen over the next 4 weeks, I guess.
I do think that we should write into the Fed and say, hey, for your media questions, we'd rather have high school economics students ask questions, please. They'd be better quality questions.
And these guys they already had the speech. They've had his speech all day. They've read through it. They know exactly what it is, what's in it. I mean, it's like, come on. But that's,
Well, some of them just almost sound rhetorical. Like some of them almost sound rhetorical, and I'm like, are we joking? Is this like, I mean, we all know, already what the response is even going to be. Like we know the response is going to come out of his mouth. Why even try and ask that question? Like go a different route. Try to get some new information in some other way.
Let's ask the political question 15 different ways and get the same answer. Like really?
Right.
He's not going to. What a waste of airtime. What a waste of time, man.
Yeah.
I mean,
yeah, man, it's crazy. To me, it reminds me of like somebody that's they're just trying to do their job. So they're like, they figured out a question really quickly so that they did their job, but they knew that it was a nothing question. It just filled.
They just have to ask. They just have to announce their. I'm with I'm with CNN. I'm with Bloomberg. I'm with whatever, Financial Times. I'm with whoever. That's all they got to do. It's just so stupid. Oh, man. Chris is funny. Chris is cracking me up. Everything he's saying is so funny.
Well, on the poll that we just posted here, Powell just cut rates by 25 basis points, flagged possible more cuts this year. What'll the ES do? And just based on the reaction that we saw in the markets today, kind of a V-shaped reaction of sorts. We've already recovered, and we're back in the ES. We're back at the value area high of the previous trading session. So I don't know. It feels like short-term optimism of sorts with the rate cuts, but how long it lasts,
I would agree.
I
would
don't know.
agree. I would agree. We should have a drunk homeless dude ask these questions. I agree, Chris. I agree. He says there's a guy at Fifth Avenue that yells at nothing. I nominate him. Oh, man. Oh, dude, I don't envy you. I do not envy you. Point and figure charting. Ugh, man.
Yeah.
Well, the thing is, I mean, you just gotta take every day for its own, merit. That's why we're day traders. Don't try to read too far into it. For Chris, you're a swing trader. Yeah, you do have to look a little more, but I know you trade a lot of other things, a lot of metals, a lot of dollar, whatever. So, yeah, But yeah, man. I'm a little surprised at how much it sold down. A little surprised that it came all the way down and made new lows on the day to come back. I'm not surprised it came back. I'm just a little surprised it came down that far. But it didn't drop below 6,600, so it held. The ES anyway. I'm talking.
Yeah, you'd think though that most of the big hedge funds, they're all thinking the same thing. We need to lighten up a little bit. Let's lower our risk. It's not got nothing to do with what he said or didn't say. It's like, we've been on a tear. The market's at all-time highs. We keep making all-time highs. Maybe we need to let off a little bit here. I think that's what's happening. I think we're seeing some profit taking, moving to cash on the sidelines. And good God, we've seen the Dow. The Dow's been doing something else. And I think that's rotation. And I'll bet you that we're going to see the RTY, which is the Russell, also, we're starting to see some rotation. And that's usually what happens at tops. We start to see rotation out of the Mag 7, out of the Teslas and all the buzzwords companies, and moving into some of the smaller caps, mid caps, as a rotation from overpriced to relatively underpriced. And then,
underpriced for sure.
Right?
Underpriced.
I think I see this as I see this as a beginning of a rotation, and this might be a top in the market from that perspective.
Mm-hmm. No, that's a very good comment right there. I totally agree. And I think people don't realize when they think the market, if we're at a bubble, and whoever that dude was, a freaking buffoon. Oh, do you think we're market at all-time high? We could be kind of getting near a bubble, maybe potentially. Where the hell have you been the last 2 years?
That was so funny. You had me in stitches, man.
Dude, what's this clown talking about? We may have a potential bubble forming. This is what. So anyway, but you're gonna get this, like you said. Yeah, you're gonna get the rotations for a while. It's not just gonna drop down. It's not gonna be like COVID. We're shutting the economies around the world, and then everything just falls. It's gonna, it's gonna soften a bit, then it's gonna come back up a little, and everyone's gonna say, "Oh, okay, just a correction. Get back in." And they'll be the greater fool. The last one in gets suckered, dude, and eventually we'll just get weak, and start to make, lower highs on a way down, and then eventually something will rear its ugly head, and then maybe it'll move. But yeah, I mean, what I'm a little surprised about is we made 2 nights ago in the overnight, we made a new all-time high in the ES. And I know it's the December contract figure adjusted, so the number is high. It's like 66 and 96 and 3/4, right? Not quite 6,700, but damn close. And then when we came out with the announcement and this thing jumped a good 30 points, it didn't retest. It came 10 points shy of it, and it held. It didn't, I mean, I would have thought if there was a time when you would want to do both extremes, you're so close to that all-time high. I honestly, if I was betting prior to the announcement release, I would have said we would have taken out and at least gone to 6,700. Yeah. And I would have said we would have taken out 6,700 for sure. The fact that we didn't, I don't know if that's foreboding or anything, but it's just, it's just interesting to me. And we never came back up there either.
Yeah.
I mean, we made a new high of the day at 66.86 3/4, but we never came back. I mean, we're back up. We're back up to where we were, a bit above where we were when the interest rate announcement came out, but we're not really marching higher. Who knows?
Yeah, and
Mitch,
in gold,
20 minutes left, 7 minutes to MOC.
Yeah, I don't know. God, I don't know what MOC will be like today. Does anyone know what Chris means when he says he's using IWM as a proxy?
IWM is the ETF for the Russell.
Right.
Oh, okay. I figured it had to be something. I figured it was a symbol or something. Okay. Well, what's interesting, Chris, is some newsletters that I follow. There's been some guys, much long-term position managers. They've been moving into small caps for weeks now. They've been rolling out of all this stuff and going into small caps with it. So I wouldn't say hated, but it's just the opportunity is there, and you're not getting. I mean, look, we keep talking about the PE ratios and everything else in the big boys, so it makes sense.
I mean, how much farther can Google go up? It's just got an incredible run. The risk is becoming more risk on the downside than on the upside. Missing out is high. The missing out is not as high as the retracement probabilities, right? So the smaller caps, the small and mid caps is where the rotation is already starting. And it doesn't surprise me a bit. With PE ratios are just so out of whack for the S&P 500, you got to go somewhere else for value, right? They're overvalued. You have to go somewhere else for value, and you're going to go to the small caps, mid caps, and you're going to do sector rotation like Paul was talking about earlier: healthcare, utilities, energy.
Energy up.
Right.
The basic.
That's where
the basic flight to safety ones. The ones that do well if the economy softens or whatever. Yeah. I mean,
I actually, funny enough, in my cash account, I today before the meetings or before the press conference, I fully exited my Google position, and I trimmed some of my Nvidia position as well, just because in my head I'm like, what?
Yeah, you were talking about that.
I'd rather have the cash at this point and look at rotating into other things, because Google's run has been wild this last month. Yeah.
And then the China news comes out about Nvidia last night, and you're probably happy.
Yeah, I mean,
you're like, ooh, timing is everything.
Yeah, But don't get me wrong. Like I might miss out on another 10% to the upside. Like I don't like that.
That's
I'm
okay.
fully out of my Google position, but I might miss out, and that's fine. But I have to just look for opportunity elsewhere to dive into in the equities.
But you took some Nvidia off too, right? You said you got out of Nvidia, like all out, or
a little
just
bit,
some of it.
No,
yeah,
like 10% of it. 10% of it.
That's fine.
But I have now 80% of it hedged with calls. I sold some covered calls essentially. I've been rolling the sale of covered calls for a long while now, and that's essentially my hedge. They're working really well. So but yeah, I'm definitely protected to the downside a good bit in Nvidia here. And I don't have any expectations aside from I know I want to be relatively long. So I don't want to miss any other jumps that could occur just because I think that things could be going south. So
yeah, it's an interesting day though. There's been days where announcements come out and the markets run or fallen for a long time. It just keeps going. So, there's a lot of optimism here. There's a lot of optimism that it's come back and it's holding tight. Yeah, I agree.
Yeah.
All right, time for Daryl's MOC trade. Getting short.
Yep.
Oh, I forgot all about that. I forgot all. No, I'm not trading anymore. I gotta protect that account.
2 minutes, man.
I'm done. I can't do it. I can't do any more today. But I want to see what happens. I like to see the imbalance.
Oh, of course, yeah. Gold reached 37.44 at the spike of that press conference, so that's technically a new all-time high, and then we're all the way back down to 36.92, and we've made a low of 36.80 today on that big sell-off that we had after the initial pump. But yeah, so gold's coming down a bit.
I'm expecting a downward close. I'm expecting to close
I was thinking
lower than we are right now.
The same thing. Yep, I was thinking the same thing. However, I'm like you. Not sure I'm willing to push it.
Oh, I'm not doing anything. I'm not taking a trade. I'm just the fact that we didn't come all the way up and retest that high that was made when the announcement came out.
I can't even repeat Chris's comment, but
I saw that the coin. Yeah, I saw that. That was funny. I'm not going to repeat it either.
I did look at cryptos during the press conference. I was looking at it a little bit. Bitcoin was down to like 114 something at some point, but it's recouped some of its negative.
It was up at like 117 or almost close to 118 earlier, right before we opened the U.S. session today.
But now we're down to 115.
A little bit of a pullback here.
I see what Chris said. That's too good.
There's a coin for everything nowadays.
Oh, I know there is. Ridiculous. I'm launching an Hola Prime NFT. I want you guys all buy in. It's only going to cost 2 Bitcoin each.
Okay.
Just send it in.
Easy.
Just send it in.
Okay, got it.
Yeah, it's
should
simple.
see MOC here. MOC.
I'm waiting for
MOC. What is
there
it?
There it is. Not bad. Plus 840 million, plus 469 million, plus 165. Dow is negative on the sell. All right. Fairly strong. I mean, I didn't think it would be that high. 840 million more buyers coming in. Good.
You got to think about what is MOC though. Who are the players for MOC?
They're the institutions and not the retailers. The retailers are coming in market on open from overnight, right? they're putting their orders in when the market's closed, and they get filled at a crappy level, and they just get filled at the open or wherever. So I think market on close is usually the bigger players, if I'm not mistaken. That's what I feel.
Oh, for sure. It's huge institutional, like the banks and
because you're not getting
investment
retailers that want to come in
firms.
now. No one's coming in at the end of the day and get a holdover. If they are, they're already in, and not in futures. So typically. So this doesn't tell. I know what you're trying to say, Troy, because it's like whatever it is doesn't really translate into where the market's going, because you may see 840 million entering the market on an imbalance for the buyers, but they may just need to fill some order and just get the hell in, and maybe they're getting in and they will ride it up for a day or two and take it back down, or who knows what. No one knows, right? It doesn't. You can't read into it. It doesn't work like that.
I'm sitting on my hands. I am sitting on my hands.
Very nice. How much? Yes.
I want to short it. I want to short it. I want to short it.
Yeah.
Put your hands up. Don't touch the mouse. Somewhere where I can see it.
I know. I know.
For some reason, I immediately
That
thought
was
of
funny.
Song. Put your hands up in the air. Put your hands up in the air. Put your hands up in the air. Put your
Mm-hmm.
Throw your hands up. Yeah. Well, I don't know what we're going to talk about, Troy. We've already talked about everything now. What are we going to do for the next?
The prime wrap up.
What are we going to do for the next hour and a half? We still got an hour and a half, man. Dude.
You can only say so many things about the most obvious.
I know.
How can we say Powell is such a dynamic
Buffoon.
speaker? How can we say, the answer is always the same, What's the question? Doesn't matter. The answer is the same, right?
Market Watch says Powell and Fed officials are less worried about tariff inflation. They see a longer path to 2%. You guys are, what the hell? Who are you writing this stuff? They're less concerned about tariff inflation. He didn't say anything like that. They don't know it. The data's not in. All right, let's see where we're at. Hanging around that 6666 in the ES. Love that number.
Yeah.
Well, when we are finally ready for emoji time, I actually spent time today working on it. I actually have like 4 or 5 of them. So I don't normally.
Did your son help you?
I know. I don't.
Your son
I don't
did it for
normally
you.
Participate
Your son did it. Don't
in
lie.
those, but no. I was doing it this morning. I'm like made a real effort to participate this time. So when we get there, I'll let you know I got some good ones.
All right.
I can't believe you recorded that.
Yeah, he uses all the time when you're not here, so you know.
I do it all the time. I do it like Sam's not with us, but Sam's here. Come on, Sam.
Jesus Christ. It's Coach
Oh wait, he's gotta do that.
What the hell?
did you just take when you shut off your computer there, man?
Jesus Christ. It's Coach Darrell. When the music goes.
That's the best part of it.
Oh, Sam.
I got Tony here.
I did do.
I got all of you. I don't have Adelina though. I'm not going to do Adelina.
A little taste. I did do. Remember how Paul was showing me his Picasso on Sam? So I did one as well. So.
Oh, okay.
Sweet.
Okay.
This will be good.
Okay.
This
the
will
surprise.
be good. Okay.
Should be good. You just tell me when you're
All right,
ready,
let's see
Captain.
where we end up closing. Let's see when we're closing. I'm ready. I'm ready whenever, because this is boring as hell watching this right now. I mean, we'll probably end up closing right around 66.50.
We have to
in the ES and just
give it the benefit of the doubt and wait till the market actually closes before we start completely going off script.
Right, right.
3 more minutes.
No.
Yes. Right.
Yeah,
Exactly.
Tony, I'm on the red side, and I stopped Tony because I got to save this account, so I'm done. But I was doing fine until I started getting overzealous with frickin' Jerome. Jerome and he's got, dude, my speaker here's got a better personality than he does. But whatever. It is what it is. Hey, Tony, could you imagine? I was asking the other coaches here. Could you imagine being in that room at like a cocktail hour or something, and all those stiffs just sitting around?
Oh yes, right.
Talking about some kind of
consumer sentiment.
I don't know.
Yes.
Yeah.
Dual mandate.
What do you think the dot plot's going to look like? Are we going to be skewed off the statistical average this time, or what do we think's going on?
How about that SEP? That SEP was quite interesting, wasn't it? SEP. What the heck?
Man.
Hey, Jerome, can I get you a glass of wine? I have a dual mandate, one to crack a smile here and one to not get drunk, so maybe I'll pass.
The reporters remind me of like the seagulls in Finding Nemo that just keep repeating mine.
Oh yeah,
just
yeah.
mine.
Yeah, oh yeah. Yeah, mine. You know what I'm writing down, don't you?
Gosh, man.
You know what I'm writing down.
The minute and the second.
Yes, September 17th at 1 p.m. Pacific. I got your ass. You're done. Troy, flock of seagulls. And I run so far away. See, I'm gonna
a little bit of
flock
pump
of
here.
seagulls, dude.
Small pump.
Do you remember the flock of seagulls,
Smaller.
Troy? I'm sure you do.
In Finding Nemo?
I just know.
No. The flock of seagulls, the
band.
80s British band. Yeah, the band. The dude that had the hair like the double mohawk kind of thing. That 80s cover band I go to see we go down to see. They play it all the time. They're freaking great though.
That's like their only famous song. I feel like that band, the Flock.
It pretty much is. I think it is, honestly. Yeah, I think you're right.
Yeah. It's hilarious how chock full of one-hit wonders the 80s is. Like the 80s has. It's just
I know.
So many one-hit wonders all over the place.
It is. That is true. That is true.
What, Daryl?
Chris says, little known fact, Jerome is a ladies' man. The last time a government official was this popular with the ladies, he was called Ben Franklin. Oh, dude, that's great. And then Tony, yeah, I know, Tony, yeah, exactly. Oh, my God. Oh
Down
my
to
God.
by private window.
Gold at 15,000 an ounce. Jesus. Oh my God. Oh my God. Dude, he's on a roll now. What happened, Tony? You just woke up and came in this thing? Adelina's bird is poached? No, her bird's good, dude.
No.
It's
Oh my God. Hey Chris, did you see in the comments yesterday before you got on with Sam? I saw your screen, I saw your backdrop, your green screen, and I told Sam, I said, "Oh, he's trolling me with the Blue Jackets arena, and he's got the cannon there." And Sam was like, "What? What does that mean? I don't know what any." He didn't know. And then you started talking about it, and then Sam's like, "Ah." That was perfect. That was a perfect follow-up, my friend. I give you props. Well done. All right. Where are we closing at? 66666 again. Right around there.
Yep.
All right.
Yep.
Not much of anything.
Tony, if we ever,
I know it's for me.
if we
I know
ever,
it's for me,
if
Chris.
we ever be in a life together, I'm gonna bring the bird. So you know.
Yeah.
It's gonna gouge his eyes out. It's gonna claw his eyes out and take the beak and peck it.
She's
I'm gonna put it right here in the front, like right here. Stare at you all the life.
Stereo.
Oh my God. All right. You want to show us your artist work, Troy?
Yes.
You can,
yes.
You can take it away whenever you're ready.
I'm going to scroll backwards on my screen here until I get back to wherever it was. Oh, there's,
man, he put some serious
so here we
work into
go.
it.
Oops. Yeah, it's messed up now. Let me see. How do I do this? Scrunch it down. There we go.
Somehow I know you're gonna.
Okay,
mess this one
so
up, dude.
this is my painting. This is my painting for Sam.
Of Sam with his fresh local
Keto.
ingredients.
Oh, he's missing the
Lack of his
carbs.
keto diet.
All his carbs.
So actually, the question should have been which coach is this? That would have been the question.
Yeah. He's missing
right.
out on it. Yep. Perfect.
Love it.
Okay. The next one is
swims
a
like a shark?
movie. The next one is a movie.
Okay.
Shark.
Jaws.
White shark.
Jaws. Yeah.
It's gotta be Jaws. Easy.
Okay. The
This took
next
you
one
all.
is,
You worked this hard on this thing.
I spent hours on this, man. I spent hours on this. Okay, so all right, you ready for the next one? The next one is a singer or a rock group. Okay, ready?
Ice Cube.
Ice Cube? No, not Ice Cube. Ooh. Vanilla Ice. Good job.
Oh,
Vanilla Ice.
That's a good one.
Very nice.
Good job. That was a good one, Troy.
Yeah,
Okay, that was
nice.
good. You're making a
Okay,
comeback.
so the next one is a movie. Okay, ready?
Airplane.
That was hard. But, yeah. Let's see. The next one is also was actually a superhero. Okay.
Batman.
Batman, dude, you worked. How long did you work on this? What the heck?
Like an hour and a half this morning, man. I was working on it this morning. That's
no way.
That's all I've got. I couldn't. It took me like 20
good.
minutes to figure out how to find the
that's
emojis,
the hardest part.
You know?
That's the hardest part right
So
there is finding them.
That's my
Oh, man, that is
contribution.
hilarious.
Okay, there you go. All right.
That was good. Thanks, Troy. I appreciate that. That was great. It's fun. Sam with the lack.
Chum don't
of
want no
carbs.
help.
That's
Chum
so
don't get no help. Jive ass dude ain't got no brains anyhow. Yo mama, you speak some jive. Yeah, excuse me, miss, I speak jive. What's happening over here?
Oh God, that was so funny.
There you go.
I love it when he takes little Timmy to the cockpit and he goes, "Have you ever seen a grown man naked?" Like,
I know.
That movie would never be made.
Oh,
that would never be made today.
No. You know how many movies would never, dude, History of the World Part 1 would never be made today. All these movies, all those classic ass, funny ass movies would never be made. I agree. Totally.
What's his name? Was a legend. The main guy on Airplane.
Brooks?
What's his name?
Oh, on Nelson, Leslie, what's
Leslie Nielsen.
Leslie Nielsen.
Yeah. He's
I love the
Cream.
one.
Cream was in there. Was it Cream? Cream was like the. Was it Cream like the co-pilot or something?
Yeah.
He got sick on the fish.
Yeah, and he was wearing basketball pants, basketball shorts. Remember that?
Yep.
And he's got a pilot's jacket, but he's got basketball shorts on. And how about the one guy that always has a drinking problem, and he takes the glass and he goes like this? I have a drinking problem. Yes, you had to be there. You guys haven't seen the movie. It's really fun.
No, I've seen it many times.
And the one guy, I picked the wrong day to stop sniffing glue. I picked the wrong day.
Sniffing glue.
Yeah. He's going.
When the shit hits the fan in the control tower.
Yeah. There's a fan and this big old blob of flies into the fan. Yeah, it's funny. It's funny.
Oh man,
that's some good stuff.
I forgot
there.
that. I picked the wrong day to stop sniffing, or the wrong week. He was like, I picked the wrong week to stop sniffing glue.
He's the air traffic controller for context.
That's right.
For you there. He's yeah.
Oh my god.
Leslie Nielsen's been gone now for 15 years. That's crazy.
Really? Wow.
Yeah.
Oh my god. Oh, Blazing Saddles is great too. Blazing Saddles is great, Chris. Oh, you saw the outdoor Columbus Blue Jacket game? Yeah, that's cool. That's cool. I would love to go to an outdoor. They had one at Dodger Stadium. I didn't go to it though. But it was not cold. I think they're worried about the quality of the ice too. Whew. Why does it today now seem like we've been on the air for 100 hours?
It does, man.
Boy, it
Feels
does.
like a
It does
long
today. You're right about that.
It was moving fast, and now it's painful. Like I'm seriously worried.
Yeah.
I'm seriously sweating. Like I gotta pull something out of the butt for the next hour and a half. What am I gonna talk about? Not
fun. I do have. I'm about to.
What are they doing in Tampa, Chris? Are they doing the Lightning and the Panthers? I would think. Is it like a rivalry outdoor game at Raymond James Stadium this year, or it's like just Tampa hosting? I don't know. Carolina or something, maybe. That's probably two Florida teams.
I have a charade at some point. If you guys wanna switch to mine.
Yeah.
It's a movie.
Do it.
It's a movie.
It's Tampa and Boston? Really?
Porky's.
That's cool. Porky's Revenge? What?
Yeah.
No.
I don't know. It looks good.
It's a horror?
What's it? This is the. It's that little. It's that one. It's Saw. Is it Saw?
No.
No. It's
No.
not Saw.
Come on.
A clown with a knife.
It's more so the
Chucky.
Chucky Child's Play.
Or Chucky.
No.
John
The
Gruden.
knife is more so
John
just
Gruden.
to add to the sinisterness. John. I'm never gonna get this. This is a classic horror movie for sure. I mean,
hang on.
I don't know how else to depict it, to be quite honest.
The clown.
I would focus on the
Scream, or whatever. One of those
Scream
movies.
doesn't have a clown in it. Scream doesn't have a clown.
No, but it's
in
got
it.
a thing with a mask. It's got a clown.
Yeah.
Clown.
But we're looking.
What's
we're
that
looking for
one?
some clowns
What's
here.
that one? The Terrifier.
No.
Halloween.
Gosh, dancing all around.
Oh,
dancing all
Mike
around
Myers.
One of the most classic.
Friday the 13th. Friday the 13th, but he didn't know he has a goalie mask on. Mike Myers, Halloween. I don't know, dude. What the hell? Texas Chainsaw Massacre. No, I don't know. I'm grabbing, dude. I'm grasping that stuff.
You're naming like every
I
horror
don't know.
movie. We're crossing more off. Guys, a clown.
Wait, hang on.
A clown. A horror movie
Hang
that
on.
the main
Oh,
character.
Yes, It.
There we go. Goodness gracious.
It.
Holy.
Stephen King, right?
It.
Damn.
Yeah.
Yes, It. I don't know why I was.
Yeah.
Yeah, sorry about that. Little boy. Yeah, that makes perfect sense.
Takes little children into the sewers.
Yep. What was what's its name? The clown's name? It's like
Pennywise the clown.
Pennywise. Yeah, Pennywise.
Yeah.
I have one.
Oh.
And this is for Tony. If you're in a chat, Tony, this is for you.
I know it's gonna be. That's Tony sitting at his desk with a nice bird next to him.
Cardinal Sin.
Yeah, Cardinal. Exactly.
Is this an actual movie or?
It's a movie, but it's also a superhero.
I was gonna say One
Birdman.
Flew Over the Cuckoo's
Birdman?
Nest or whatever.
Is there a Birdman or is there a?
Birdman, yeah.
Is there Birdman? It is Birdman, right?
No, there's not. No, there isn't.
There is
Yeah,
not?
there is. Yeah, there is.
No,
Michael
there's
Keaton,
no-
was he like
I don't know. It
Birdman?
just came to my mind.
No, he
That's
was like
not
he
a-
had that mechanical wings thing on it. What was that?
Oh, you're talking
very well, I
about
don't
the
know.
Vulture. You're talking about the Vulture.
Nah.
No, he's talking about the.
Vulture.
It's in part. It's in the Avengers. The guy with.
Yeah, I
wings.
know.
Yeah, something like that.
That's his.
That's the Avenge. That's
Yes,
he's a vulture.
that's the Vulture.
That's his name.
Yeah.
No, it's called Birdman, dude. It's called Birdman.
No, he's.
It's called Birdman. Michael
No,
Keaton.
that's.
Dude, not what I'm talking about, but he was in a movie called Birdman, and I remember it now. Yeah. Yeah. 2014.
Well, that's
Yeah, it's
different.
Birdman.
I'm talking about the villain in.
I know the one I'm describing. Yeah.
He hears tweeting in his ears. He's whatever.
The villain.
Twitter man.
Tony,
Twitter man.
the Birdman. Let me see if I have a brunette
Chris,
man
what are you?
here.
An
No?
adult
Just
swim
blonde?
cartoon called Harvey Birdman? What the hell? I don't even
Why
heard
they
that.
all have just blonde people? Blonde mans, blonde.
Yeah, I'm very offended.
Brunette.
I'm very offended. Yeah, I'm so offended here.
Oh,
Oh,
dude.
this is only
Okay, Chris.
brunette.
Yeah, I do know what you're talking about with the Adult Swim character. I do know exactly. Yes, that is true.
Adult Swim? Harvey's.
It's like a adult cartoon show essentially.
What was that?
I mean,
Frankenstein?
not suitable for all ages. Yeah. Oh, that's a better one for.
Is this a new one?
That's
Madeline?
Tony. I said, 'cause this is for Tony.
No.
Oh, that's.
I couldn't find another brunette man here. Sorry.
He's all pecked out. This is great. That was great.
Zombie.
This is from him getting beat up today.
His eyes are all pecked out. He's all ripped apart. Oh, that's perfect. That's
It's the
perfect.
yeah. Today it's red eyes.
Oh yeah. Oh yeah. Chris
And
says
it's crazy how they don't have brunette here.
I know.
They
I have
don't brunette, the
another
zombie.
charade for us.
I colored
I have
one with
another one
brown
for us.
one time with the. Oh, you do?
Back
Okay.
to Polly's screen. Come on,
Another
Gilligan, give me
movie.
something good.
I mean, I don't know if you guys are gonna get this one, but it's relatively easy. I think it's easy, but it might be my childhood more so than anything.
Clifford the Big Red Dog. Or the Sandlot or something. Or like something like that. I don't know. Like what is dog and a
It's a
soccer
dog
ball?
and a soccer ball. Come on.
Was there like some kind of super dog with a cape or something movie like that? Maybe there was something like that.
Kind of. Yes.
Maybe.
Yes.
But I don't know the name of the movie. It was like Underdog or something. I have no idea.
No.
I don't know. I don't know what it's called, so I wouldn't know.
It's called
I'd have to Google
Airbud.
it, but I don't want to do that.
Airbud.
Oh, Airbud. That's right. Okay. Yeah. Okay. I do remember seeing something like that.
I'm just running out of movies and and bands, and I'm really clawing
Dude, I
at scraps here.
You know what we can do? You know what we could do? We could also do educational stuff. All these flags at the bottom for the countries. It doesn't identify which country they are. So you just pick the flag, and then it's like we got to see like which one it is because there's no cheating. Like you just kind of have to click on it But I mean, I know a lot of them, but I don't know all. The flags are hard. I know my geography like crazy, but the flags are tough.
Yeah, I'm not good. I'm not going to be good at this. I'll tell you now. I might know like a quarter of the flags of our world.
Yeah. No, that's cool. Do you guys know how to read an analog clock? You and Adelina? I'm sure you do.
Oh, yeah.
I could pull up all these clocks. Here. Yeah, we could like. What time is
this?
that?
Like kindergarten?
All
right.
the
What
kids
time
can't
is
read
it?
you know. But you guys are older. You know how to read that stuff. Let's see. They got horoscope ones. They got. Yeah, these emojis are weak. They're not diverse enough. We need more.
Weak.
And you can't bring any more in.
I'll find some.
I'm so impressed with Troy's artistic ability with the shark. What movie is it? I thought it was a trick. I thought it was a trick question at first. I'm like, oh, it can't be Jaws, right? That's too easy.
Man.
Dude,
Hey,
I
they have a
spent like
gorilla
hours
on
on
here.
this. So,
We could do King Kong. We could do King Kong as a gorilla. We could do I don't know, man. There's all kinds of
Here. This is Troy here. Hold on. Here, now look at my screen. What's the movie?
Okay. 7.
Yeah, it's a good movie.
That is a great movie, actually. It's fantastic.
Dude. I know. Yeah, well. Hey, he spent time on it. He spent a lot of time.
I'm just kidding.
Hey, I tried to contribute, you know? I'm just trying to be a good
I think it's good. I'm glad.
It was fun.
Can't find a dollar
that's
sign.
great.
Isn't there a dollar sign?
There's like money. I think there's like a stack of money. Yeah, there's like money with wings. It's stacks of money, different colored money. Oh, there's a bag of coins or gold coins or something with a dollar sign on it. That's probably as good as you're going to get here. Down where the tools are below, like the candles and the flashlight and stuff, the alarm clocks, just objects. Go down to objects. It's called objects. And you'll see it is like, you see like a diamond. It's like the row above the diamond on the far left.
Yeah.
Like you see
All right. All right, I got one.
Oh, wow.
I got one. Woohoo!
Okay.
It's a movie. It's a movie.
Okay, you go.
We'll
King of
this
Golf.
is my screen. This is my screen at the moment. But
I tried to.
So
Kingpin.
There it is.
Kingpin.
Let's go.
That's good. That's good.
Now that's a hell of a movie too. You got Munson.
That's a good one.
Oh,
Moneyball.
Moneyball.
All
We
right.
did that one before.
Yeah.
I think. That's good, Billy Bean.
Oh, you did? I'm
That's
sorry.
good. That's good. No. I mean, we did it a long
one.
time ago. That's good. That's good. Perfect. Moneyball's perfect. Where's that other one?
I still thought that Kung Fu Panda one from yesterday, Adelina, was.
I know that's
top
good.
Notch.
That's very good.
Top notch.
I would agree. Oh man, dude, I don't know what to do. I'm gonna have to pull up something. Maybe we'll just play some records. We'll just have some background music for people.
Gonna have a Daryl DJ session.
Oh, I have one.
No.
Just.
All right. My brain is fried.
I think I'll have one too in a second. Okay. Yeah. Yeah, here we go. I mean, yeah, okay. We can do mine again here. We'll do mine again real quick.
We're keeping AJ busy. AJ's flip.
Got him.
Oh, I didn't even look. I'm not even on VMix. Duh. I'm like, what am I looking at? Jurassic Park. That's good.
Yeah.
Freaking chair.
Off the cuff.
I have one.
Quick.
All right.
All right. Oh, Aladdin. All right.
Arabian. The print. Oh God, what's it called? Aladdin.
Oh, got it.
Okay, I was gonna say shoot. I didn't even know we had those emojis. I didn't see those anywhere.
Yeah, they got a blue genie. I mean,
When I look for the brunette guy, I saw it. So.
I can't stop it fast enough. Like, shoot, I gotta stop. Pause.
Pause. Stop.
Like, no, don't say that word. I gotta find a censored version, maybe like a radio version of it.
Ooh, I'm gonna do a good one.
Oh
here.
man,
I want to do a really good one here. Come on, please have the emoji for it.
I can see
please,
what you're
please,
typing,
please.
dude. We can see what you're doing. Oh, this is Adelina.
Oh, can you?
Adelina,
No,
we
no,
see
you
what you're
can't.
doing.
Oh, it's me. It's me.
I know. Oh, okay.
Okay, you
Remind
can.
us
Okay,
of
what
you're
is this?
doing. Us superheroes, Batman, Robin, us, U.S., us. What?
It's got to be like Superman.
Is this a movie? Is it a movie?
No, it's a superhero.
Superhero. Oh, I don't know. It looks like Aquaman
Robin.
to me. He's all yellow, but I don't know. Robin?
Batman and Robin.
Batman and Robin? Yeah, is that right?
Lone Ranger.
No, it's got. What's the us? Us. U.S. Like, does that mean like? I don't know. Let me think. American
Oh, yeah.
Captain America.
Mm-hmm.
Captain America.
U.S. is America.
That's what she wanted to put the U.S. on his chest. I gotcha. Okay, cool.
Yeah.
That's good.
All right.
That's good. Yeah, Avengers. Robert's like Avengers.
I'm pretty proud of this one that I just did here. I mean, it wasn't terribly difficult, but it wasn't difficult or anything. But
Edward Scissorhands.
Great. That was great.
It's really good.
Dude, what did you do? Oh, you found a guy going like this, and then you put the scissors on. That's
No,
funny.
yeah.
That's perfect.
I got
Oh,
one.
man.
I got one. This is.
Oh, shoot.
Damn.
Let's
Troy's
go.
rocking.
Money doesn't sleep.
Movie.
Money
Is that-
sleep.
Money never sleeps. It's the old first second Wall Street.
Never
yeah.
sleep.
Yeah.
Is that a movie? Money Never Sleeps?
Yeah, it's the second
Money
Wall
Never
Street movie.
Good. That's a
Oh,
good
it's
one.
Oh, yeah. Yeah.
Michael Douglas.
Yeah. No, I know. I was just. Ah, yeah.
All right, one last one. See if I can't get.
Oh, yeah, we got
more.
1 minute. We're almost done here. All right, cool.
Yeah, I
See,
think
time
so.
flies when we do charades. We listen to Powell, dude. I might as well I lost 10 years of my life listening to that thing. God dang. That was ridiculous, dude. That was painful. Literally, I lost 10 years of my life listening to that crap today. Why the hell do we do that? I apologize to everybody in the chat putting them through that pain and misery.
Yeah.
Going to work, seeing that clown every day. How you doing?
Oh, come on.
Good. Dual mandates in place. Dual mandates doing good today. Good. Just doing our work. Dual mandate, doing our work.
Oh, God. We are here. The end of the day. Wow.
The market is closed.
Market is closed.
Yeah.
We all hear that. It's so funny.
What, did you have another one, Paul?
No, I couldn't
thought
get
you
to
had.
it. It's too difficult. Too difficult to do.
All right. We're going to sign them off. We're going to let them go home. They got to go home. They're already home. But Adelina's got to send the birds out. Fly to Boston. Go north. Go north. Go to Tony. They're like the flying monkeys from The Wizard of Oz. I'll go get them. I'll get you and your little dog too. Oh, sorry. I got carried away.
What Tony didn't realize is yesterday when the birds came back to me, he got to red. When he had the birds, he was green. Yesterday the birds came back.
Yeah.
So he's
That's
red.
right. You're right.
And today too.
Yes, he is. See, so it's a bad omen, Tony. Don't be doing that. Take good care of the birds.
Yeah.
Anyway,
Exactly.
we will be back in 5 minutes. If you want to stick around, Coach Troy and I will be going over the day and all the fun and excitement out of the Fed
Woohoo.
and what have you. And we'll look forward to tomorrow because that's important. We'll look forward to tomorrow and we'll discuss that. So,
Let me go get
Coach
another
Paul,
Mountain
Coach
Dew.
Adelina,
Yeah.
Adelina, we'll see you next week. Paul, I'll see you tomorrow.
See
Troy, I'll see
you.
you in 5. Bye, guys.
See you tomorrow.
All right.
See you
See you
guys.
guys. Bye.
Want to learn trading or already a pro but can't risk your money? Enter prop trading, a smart way to monetize your trading skills without risking your own money. Start your journey with Hola Prime. Here's how it works. Buy a small fee trading challenge. Hit the profit target and keep losses under 3% daily and 6% overall. Pass the challenge and get a Hola Prime account. It still has fictitious funds and the risk rules stay the same. But now, no profit targets. And yes, up to 95% of the simulated profits are yours. Wondering, how's that even possible? Well, we selectively copy trades from top performing traders in live markets. That's how we generate profits. Whether we copy yours or not, you still get your share. While most firms take days to pay, Hola Prime is the industry's first to do it in under 1 hour. Yes, every payout is processed in less than 60 minutes. It's a win-win. You bring the skill, we bring the trading setup and support, including one-on-one coaching. Take the trading challenge. Get rewarded.
Hola Prime. Trade with transparency.
Markets are unpredictable, volatile, complex. But your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live, get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts, we crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond. Markets are unpredictable. Futures trading and thought too complicated? You're not alone. Futures trading can feel like decoding a puzzle, but it's simple at its core. Take the one-step Prime challenge. Hit a 6% profit target. Stay within 3% max loss. Pass and get the Hola Prime account with profit splits. News trading? Allowed. Copy trading? Supported. Pro trading platforms? Ready to use. Trade instruments listed on CME, COMEX, NYMEX, and CBOT on all major platforms. Oh, and did we mention, we're the industry's first with 1 hour payouts. So you don't just learn fast, you get paid fast. Because futures trading shouldn't feel like a maze. It should feel like progress. Hola Prime Futures. Futures trading simplified. Ever heard of learn trading or already a pro but can't risk your money? Enter prop trading, a smart way to monetize your trading skills without risking your own money. Start your journey with Hola Prime. Here's how it works. Buy a small fee trading challenge. Hit the profit target and keep losses under 3% daily and 6% overall. Pass the challenge and get a Hola Prime account. It still has fictitious funds and the risk rules stay the same. But now, no profit targets. And yes, up to 95% of the simulated profits are yours. Wondering, how's that even possible? Well, we selectively copy trades from top performing traders in live markets. That's how we generate profits. Whether we copy yours or not, you still get your share. While most firms take days to pay, Hola Prime is the industry's first to do it in under 1 hour. Yes, every payout is processed in less than 60 minutes. It's a win-win. You bring the skill, we bring the trading setup and support, including one-on-one coaching. Take the trading challenge. Get rewarded. Markets are unpredictable, volatile, complex. But your trading journey doesn't have to be. Hola Prime TV is now live. Every trading day, join top coaches as they break down real-time setups, key levels, live trades across Forex, futures, and crypto. From Tokyo's early momentum to London's open surge to New York's high volatility action. We decode every move live, get sharp analysis, clear strategies, and insights that actually make sense. And yeah, we don't just break down charts, we crack a few smiles too. Only on Hola Prime TV. This is more than content. This is infotainment and beyond.
All right. You know, Troy, I really miss out when no one's trading near the end of the day. Now I realize how boring it could get. If no one's doing anything, it's like, oh my God. Oh my God. Oh boy. Well, you know, I don't know, man.
There's always
I don't know
that,
how
you know,
feel. I feel
where you do something so somebody has something to watch versus the smart thing to do, which was nothing. You know, there was no opportunity. That was the right thing to do, but you know, you're trying to provide entertainment and you know, somebody to watch something. It's hard. It's a
right.
As you would say, we have a dual mandate, right? Our dual mandate is to trade and entertain. So sometimes we entertain and sometimes we trade, but it's hard to do both, right?
So true. It is so true. Yeah. No, so true.
Let's just go
but
through
I think
the
this is
news
very
for today.
Yeah, and I think this is very valuable for a lot of guys that don't typically know what goes on at the Fed or aren't aware that when there's an FOMC or any kind of thing where there's a press conference, what goes on or what's discussed. You know, a lot of guys don't see it. So it's kind of cool that we can share it because it's enlightening. You know, you learn something. You may not be able to take anything that you can actually take action for trading, but you'll learn. It widens you up. You get a little smarter about how things work. Yeah, you want to go through the news? We can go through the news for like
Sure. So 8:30 this
tomorrow.
morning, we had housing starts that were below expectations. This is this morning. Building permits were also less than expected. Housing starts were substantially less than expected. Building permits were less than expected. So, you know, they were all negative numbers. Housing's having trouble. And one of the things I like to talk about with housing that. Go ahead.
Prior to that, at 8:30 your time, so 7 o'clock your time, there was the MBA 30-year mortgage rate, which came in a little lower, 0.1% lower at 6.39 as opposed to 6.49. And mortgage applications, I'm assuming this is month over month, was way up, like 29.7% increase over the previous month. So,
wow.
Yeah. You know, and I've been reading something about some of the stuff. It's good. It's good. I don't think it's really, I don't think it's going to shake the market up much, but I think there's a lot of people that are just been waiting to move or need to move. And it's like, yeah, okay, rates are getting a little softer. Let's go ahead and start looking into something and applying for a mortgage or whatever. So that's good. But yeah, you're right. No, building permits and stuff. Yeah, we're not making more housing. We're not building more affordable housing. That's the big problem, the whole thing. But I just wanted to throw that in there because on one hand, and this may have been just knowing that the rates were coming down today.
I mean, I'm glad the rates are coming down because housing is one of the underlying things that nobody really looks at that has dramatic impact locally. It's one of the few things that we look at. We look at all this macro stuff, but builders and building is micro. That's it. That's your local neighborhood. When you have a house that's being built, you are using local labor. You're purchasing at least some local supplies, maybe not all, because some of the supplies are going to be national brands, like lumber comes from Canada, and you know, you know, a major lumber supplier that's one or two in the U.S. that supply those. But there's a tremendous amount of local labor and local materials that get purchased locally.
Correct.
Has a huge impact on the local economy. So, you know, obviously there's a trickle down effect. So if there's nobody building houses, that means nobody's buying lumber. There's not buying nails. They're not buying they're not getting the concrete from the local concrete place. You know, there's so many pieces moving in
there's so much that goes into a house. Oh yeah.
Yeah.
Selling appliances, tile installers,
appliances.
drywall guys, roofers, all that. And then you got the inspectors that come in, and you've got the real estate people that are involved in the sale and the commissions and all the, you know, it just continues. It continues to trickle out. And insurance providers, you know, you need insurance, you need, you know, mortgage broker or lender. Everybody gets involved in the whole thing. And it gets a lot of cash and money into the system. Like you said, it's very, very true.
I think that's one of the. I don't think it's. I mean, it's a yellow item on financial juice.
Yeah.
And I think it should be a red item because it is so important to the
I
underlying
always look at it.
economy. Yeah, I do too.
I
And
always
it's
look at
not
it,
just
though.
that. I mean, think
Yeah.
about the people that buy. What's the first thing they do when they buy? They come in and they go, I'm going to change the color of this. And,
Yep.
they're
New carpet.
putting
I don't like the
they're
floor.
putting-
I don't like the tile. I want to put a hardwood flooring down. I don't like the curtain. I'm going to change all the new window coverings, and then all the furniture. They're going to drop like 15, 20 grand
right.
on new furniture and TVs and all the other, everything that goes into it. And then if you're doing hardscape in the yard, or you want to remodel the yard or drop a pool or whatever, it just keeps going. It just keeps on going.
Yep,
So
it's a
yeah,
big,
I mean,
big
and that we
money
see that
driver
in we
for
see
the
that in all the
economy.
Home Depot and Lowe's stock. Everything's been, people
Yeah.
aren't really been spending a lot of money on home improvement. They've been doing probably the necessary repairs that they need to do, or hire the necessary, handyman or contractor to do whatever. But I mean, a lot of people. I think it's been this way since COVID. Really, it's just been. You're not buying or moving unless you have to, and if you're locked into a damn sub 4% mortgage, like I think you said you were. You don't. Why would you do it? Why would you?
Right.
You have
Exactly.
to. You're not going anywhere.
Not only has price has gone up, but then the cost of money's gone up. So you get a double whammy.
Yes, exactly. Correct.
I can't afford to rebuy my house. Right.
Right. Yeah, your house is your house is basically 50 to 60% more than it was worth in 2019. Same house, nothing's changed.
Yeah.
Basically.
Absolutely.
It's crazy. It's just crazy.
So we also then, of course, had the FOMC meeting, rate statement, as well as the press conference. And we can probably summarize that by saying quarter point drop, and Powell repeated the same answers he did last time.
Yeah.
And that's it. That's
quarter
the
point
whole
drop,
thing in a nutshell.
Quarter point drop, and possibly 2 or 3 more quarter point reductions, maybe going into, certainly not this year, because I think we'll only get 2 more. I think there's only 2 more meetings. I think it's November and December, if I'm correct. I don't know if there's an October one, but I may be wrong. But it doesn't matter, potentially. And if we start to get some ugly inflation numbers from tariffs, I don't know, man. Who knows? Who the hell knows? But yeah,
there's an October meeting and a December meeting.
Oh, there's an October and December.
It's October 29th.
Where are you seeing
December
that?
10th.
Where do you see that?
It's on the Fed Watch tool.
Oh, it is
you
on
go
the
to
Watch
CME.
tool. Okay. Yep.
Yeah, it tells you.
Yeah. Okay.
Cool. There's an October and a December meeting. So yeah, we of course there's all this buildup. As traders, we've been looking really the whole week. Monday, Tuesday, today has all been looking forward to today, right? To what's the Fed going to do? Let's get some direction. Let's let's keep going up. Let's top out and go down. What are we doing? We're waiting for the Fed. We're waiting for the Fed. All this, and then I would say a very conservative quarter point reduction that was obviously priced into the market, and really very, very little guidance going forward other than we're concerned about the weak labor market, and we're watching the data. That was sort of the summary of it. And I think it's going to be really interesting tomorrow, more so than today, because today you still have all the hype, right? And then you have time for them to digest the information overnight. Tomorrow is going to be an interesting day because the market will establish a direction based on the summation of everything, right? Don't you think tomorrow we'll see some more,
I agree.
A direction.
Yep.
Up or down.
Everyone will have a chance to digest everything, have their little meetings, talk about what they think, what they're planning to do, whether today confirmed or denied their bias or what have you. What is interesting also, I'm looking here on the CME under the ES. So we're currently in rollover. We still got a couple more days before September contract expires, but the combined volume in both the September and the December contract was 2.289 million contracts today, a little less than yesterday. So despite being FOMC day, I mean, these are good numbers. 2.3, anything over 2 million contracts a day is pretty good. Obviously, we get lower. We can get 1.2, 1.5, it fluctuates. But interesting that it's not super heavy, and it's a little lower than even yesterday. So I don't know. May just be that we're in rollover, but it was something to note. Yeah, I'm with you though, Troy. Tomorrow things will settle out. We'll get some real direction. What else do we have? You had, I mean, we have a bunch of just a lot of little things tomorrow. Initial jobless claims, continuous. We got some Philly Fed stuff, but it's not really it's probably just going to confirm more of what, I mean, the Fed knows these numbers already. They've already seen these going into today. So nothing's going to surprise anybody. Yeah, I mean, yeah, I think that's all she wrote.
Friday, there's nothing on Friday.
Like nothing. Friday's
no
nothing.
News,
nothing.
But it is.
It's rollover expiration. It's expiration
triple
day.
witching,
It's
right?
triple witch. It's triple witch. Yep.
Yeah.
Yep. And there's Baker Hughes oil can, which is out every Friday anyway. So yeah. Aside from that, the expiration. By the time we get to tomorrow, it's all but done. Rolled over. Anyone that's not taking delivery, but there's no delivery in the index. And let's see here. Let me look at Bitcoin again. Back down to 115. Okay. Yeah. Just curious to see if anything crazy happened today.
Well, Tesla went from being down $5 to being up 4.25. That's one of the only ones I see that's completely flipped directions. Nvidia is still down. The SPY Spider is down.
Yeah.
Oil was slightly down. Silver was slightly down.
Nothing was crazy. Nothing got beat up. Nothing got really beat up today.
No.
No,
and when you look at the chart, it's going to look like it's not going to look like it did much at all when you look at the daily chart.
No, exactly. Exactly right. Exactly. When you look at the open to the close, not the high low close, but just where it opened to where it closed, it'll say, oh, today was a pretty flat day, up a little bit, slightly up.
Mm-hmm.
No one would ever know. And that's just such a misnomer. So misleading in a lot of ways. But United Essays in the chat asking thoughts on gold direction. Gold futures. I mean, gold in general to the north. I don't
I agree.
actively trade gold much, but I don't want to say it's going to continue to go up every day, but I think it's still there's no stopping gold right now. There's no stopping much of anything right now. We're probably going to resume the status quo until we don't. And interesting. Very interesting. Let's see. We can show my screen. I'll kind of show what happened in the ES today, because when you look at the chart, it doesn't look like a whole lot. But when you start to pull back, you look at all this. Let's see, we opened up This is the 1 minute, so why don't I just get it down a little more easier? 5 minute.
That looks like a whole
I'll
lot of
build a
nothing.
profile too. It does. It really does. Let me build a profile. 6:30 my time to now. Okay, so yeah, I mean, and you look back at the overnight, and the overnight looked very, very consolidated. We did have this little sell-off down here when China says that we're not going to buy NVIDIA's new AI chip. We're going to tell all our companies not to buy it. So we had a little bit of a shock, but it recovered nicely and kept going. And then, you know, here we are going into waiting for the interest rate decision. And it doesn't look like a whole lot, but when you look back and you go, this thing moved 75 points. It's a pretty good move, and it moved in a multitude of fashion. So we talk about this all the time. I think Troy, you and I talked about this 2 days ago. How, you know, how could you make money in a market where, and let me just get the numbers here roughly. I'll just say roughly 630. We'll just call it like it opens up at 66.71, and I'm still tracking the close, but we could do the cash close. Let's go to cash close at 1 o'clock my time. Yeah. So how can you make money when the S&P only went down 3.5 points today? It was a flat day. That's what they're going to see if they don't look at this. They're going to say, "Oh, S&P had it was a pretty even keeled day." Yeah, well, not really, guys, because you get the interest rate and it immediately just frickin' pumps. It comes back, it goes up, it goes down. I mean, there's lots of moves in between all this, but you just got all this going on. And in between all of this, you add all these up, and it's like probably 250 points of movement, if not more, collectively between all of this up, down,
you
up,
get
down,
chopped
up, down, up, down.
to death.
Easy.
So
Oh, yeah.
easy to get chopped to death.
You do. You do.
Yeah.
And so this is why we say it's dangerous, and it's not even the range. It's the volatility, the speed with which it happens, because this is all happening. Actually, let me shrink this. Let me go this way. This will make it more sense. What I want to show is the basic move from 11 o'clock, which is here, to when Powell stopped, which is like, I don't know, let's just call it like right here, all this. I mean, that's an hour.
3:15.
Pretty much like 11 to 12, an hour and a half. All this happened in a short period of time. And so, you know, you had all this leading up to it for hours on end. And all of a sudden you get just the big craziness. So, and then afterwards we settle down again. You know, we're just kind of like consolidating out on the close and into the overnight. So it just, all the heavy volatility all happened in that short span, and that's where it just can get you nailed. So that's why we tell everybody to, if it's best, try to sit it out. We didn't sit it out because as coaches, we got to show, we do have to be active and we have to show some stuff, but you know, it wasn't great. It wasn't great for us anyway. It just goes to show you that we're no different than anybody else. It's tough. It's tough. You did well, Troy, in the beginning on that up move. You played that to a perfect fiddle. That was just like perfect. And I think Adelina did really well too on one of those, maybe the retracement move or the third move back up. You guys did really well early on. I don't know if you kept trading it when he was talking, but you know, this is what happens. And again, we got up as high as 10 points to the all-time high in the ES. We didn't retest, and maybe we'll retest in the overnight, but we came that close. So I think we're still moving higher. Whether it happens tomorrow or not, I don't think we're selling off much here. We could have some profit taking. Anything's possible.
Well, the question I have is what's changed? Has anything changed fundamentally? Has anything changed attitude-wise or behavior-wise? And I would argue that there's been nothing. what
Not
happened
in the
today
economy.
did not change anyone's perspective at all. I don't think people are going to go, oh God, we're overvalued, I'm going to sell. I don't think that's the case. I think that we're still
No.
in the the buy the dip folks are still full tilt in the market, and then every little down's going to be buy the dip until there's a catalyst, right? We need a rug pull. We need something to catalyst to say, hey, this is not right. And we've had 6 months of this, but you guys weren't listening. And suddenly now we're going down. Everybody's going down. But that's not happened. And today certainly didn't add any information to that to change that perspective. I think we'll just continue to chop higher. I think, I'm a big believer in the 20-day moving average. It's the only moving average I use is a daily, and I use it as a home base. And if you look at the 20-day moving average, price loves to oscillate around it. Okay, so we can't get too far away from the 20-day. We'll come back down to it. We go below it. We don't get too far below it, and we come back. But we're at one of the highest points in the last 3 or 4 months above the 20-day moving average. So, we're due to come back, but it doesn't mean that we're not going to come back, have 2 or 3 days of down, and then chop. And honestly, November, December are my best trading months of the year.
They are.
I don't know about you, but
they're good.
And it's because
they're good.
It's very I'm looking forward
October
to
too.
October can be hit or miss, but November, December, buddy, that's my months. That's when I make probably 50% of my income comes in those 2 months from a trading perspective.
Nice.
Because, usually the summer is very sideways. September's kind of back and forth, but it definitely picks up. October, obviously, if there's any month of the year that we can say is a crash month, it's October. So you're always worried about the crash coming in October because we've had 6 or 8 of them in the last 50 years. So I can't see us changing gears or shifting gears here because of the FOMC meeting today. It just sort of, he really said absolutely nothing other than I'm a little bit concerned about labor, but he already said, in the last meeting, they said, well, we're not sure about labor, but it seems to be okay. That's basically what he said last month or last meeting.
Yeah,
and
no,
I don't
you're
think
right.
It changed.
That's exactly what he said.
Yeah,
no,
I think he already knew
in the market
there was
hadn't changed. Yeah, I think the only thing that behavior that changed was the Fed's stance that he had to do something. There was just too much political pressure, despite him, denying it every which way he wants to deny it. There's a gazillion amount of pressure on him. It was interesting when he was talking about his SEP and the dot plot map and how out of the 19 voting Fed, I don't know what they're called, governors or whatever they are. There was almost half that had elected not to lower rates today. It was almost like I don't know, 11-8 or 9-10. It was pretty close. So there's still a good handful of those guys that are looking at things going, I don't really see a whole lot here yet. But he had to make the case for it. So
I think they're scared. They're terrified of the tariff potential impact.
Oh yeah.
Because think about
I think they have to get ahead of it.
Remember, these guys are academics, okay? And academics are going to look at history. And history has overwhelmingly had the same story when it comes to tariffs. Tariffs are bad. Tariffs just destroy both countries or multi-countries. There's case study after case study, right? And it's embedded as a macro economist, and I've taken I don't know how many of these courses in my master's program and whatnot, but that stuff is it's accepted as the gospel. This is the truth. This is the way tariffs work. And they are, I mean, if I was in their position, I would be scared out of my mind, because it's a one-time, they're hoping it's a one-time thing. But see, that's where inflation's funny. Once it gets started, it's almost impossible to stop. And if you look back at when we have been able to stop it, was when we had 18% interest. That's what stopped it the last time, and nobody wants to go through that again. And they're all going, oh, dear God, we can't let this get out of hand. So I think
I don't think it'll get that bad.
I think the tariffs scared the bejeebies out of those guys, and that's why they've been dragging their feet on lowering rates, when obviously the labor has been degrading over the last year, right? Slowly degrading, even though our numbers didn't support that. It was actually degrading over the last 6 months at least, right? If you had asked me in June when we first started, is what's going on with the employment, I'd say, I don't believe these numbers, man. I don't believe these numbers. It's way worse than it looks like. Because the local economy's going, hey, we got unemployment. People that are unemployed, or people who can't find jobs.
Or underemployed. Of course.
Yeah.
Yep.
Exactly.
Yeah, but it's been that way for. I mean, it seems like the people that don't want to work aren't working, and those that do are. But he kept citing the immigration, the deportations. I don't know. I mean, I know we've done a fair amount of it, but these are typically lower wage jobs. It doesn't affect. I mean, it all adds up. Don't get me wrong. Certainly locally, but I don't know. I don't know. I think they're scared, and like you said, they're such big academic heads. These guys, they don't want to be wrong. The last thing they want to do is be wrong.
That's right.
And they God forbid that they hold off, and then all of a sudden we start to get some tariff stuff coming in. Exactly, and then inflation's creeping up, and they're like, "Oh crap! Now we're behind the 8 ball. We should have done something." And all the other finance guys are just criticizing them. So they don't want to do that. They want to at least say, hey, according to the data we saw, we at least cut appropriately. We found it appropriate to do this here. We thought 50 basis points is too much. That's the way they're going to save face. The only way they're going to save face, because they're not going to be able to stop it. If it comes in 25 basis points or 75 basis points, ain't going to do crap. If it's inflation like we saw in 2022 after COVID, when there was like 8 trillion pumped into the market, and who's to say it's not? Who's to say it's not? It's. I know we're not printing money and sending checks to every American household and all the stuff we freaking did, but doing all this, we import so much. We export so much too, and all this stuff is just going to get, I don't know, who knows how affected, how exponential this thing could get on everything, not just big stuff like,
which is their justification for dragging
or
their feet at lowering rates.
Correct.
Right.
Correct.
Yeah. Well, my neighbor is doing a major remodel, and they're building onto the house. And I used to be a general contractor years ago, built houses myself, and I was asking them, because it's taking exponentially longer than it should have. I'm like watching from the side going, why are they not finished? What's going on? And so he was mowing his yard, came over to the house, and he says something to me, and I said, man, what's taking so long? He says, first of all, we can't get doors and windows. We just can't get them. Can't get doors and windows. And the next thing he says is, we finally got a roofing crew. Well, roofing crews here are all Mexican. They're all Hispanic Mexicans. And those guys aren't working because they're afraid of the ice.
They're scared.
They're afraid of ice.
They're scared to get on the job site. Yeah, exactly. Exactly right.
That's right.
Yep. Same thing here.
They're afraid they're going to get
Same thing
picked
here.
up,
There's a ton of them here.
And so
I'm not far from all the crops, like near Oxnard and all the stuff where they grow all the strawberries for the nation out here. There's a ton of workers. They're all laying low too, man. They're just hiding.
Yeah.
They're not working.
Yeah. Yeah. And then the next thing he said the contractors come back to us 3 times with elevated prices. We're going to have to charge you another 10% because of this.
The bid comes back higher, keeps getting repriced.
Wow. So he said he ended up paying the crew that finally came out and re-roofed the house. It cost him an extra $3,000 because these guys were working like crazy all the time, and there's not enough of them because that group has moved back to Mexico. So I'm hearing this all over, not just with my neighbor, that the housing is getting delayed substantially because they don't have crews, and the guys who are coming in to fill the void are charging more money, right? And so, there's a situation where immigration policy is directly going to affect inflation, at least with wages and cost of housing.
For sure.
Which is really unfortunate. But, you can't find a framing crew or a roofing, those two particularly, that are not immigrants. There's just no local sources for those professions. Those professions have been taken over by immigrant workers, and it's not just those; it's lots of others. But framing, and
masonry, like slab work and all that kind of stuff.
Yeah,
drywall not so much. As soon as you get more a little higher end, like electricians, obviously plumbers, you're getting a lot of.
That's right.
Skilled technicians.
Yeah,
those are guys you're getting more like white people and stuff. You get
Yeah, you get to this any of the
they're all licensed and bonded. They got legit businesses.
Right.
They got legit, they're legit operation. They're not going anywhere.
Yes.
Yeah, exactly.
That's right.
Exactly.
Those guys may employ immigrants, but they are not totally immigrant labor. And so I think that's what Powell was alluding to was that we actually get a contraction of the labor force, and that's going to take time to fill in. It will fill in because there's money to be made in construction. I mean, it doesn't take anybody to figure that out. Like I say, I built houses for almost 12 years, and there's plenty of money to be made in building houses. And if you have trouble, what happens if you're a contractor and you have trouble getting a crew? You do one of two things. You either delay your project because of this, and you're mad about it, or you start calling every Joe, Bob, Billy going, "Hey man, get over here and do some framing. I'll teach you." I'll pay you $25 an hour. Sure, I mean, right? That's what happens. And so it'll eventually fill in, and you'll get a whole nother group of people that are doing that work. But it will cost everybody more.
Yeah, exactly. And they kept talking about the graduating students out of college having a hard time finding jobs. I mean, I guess there's something to it. I don't know. I mean, I don't know what these kids are looking for. A lot of these kids tend to really be, they want the whole world today. They don't want to get into a situation where they're going to learn
six-figure salary right off.
Yes, exactly right. Exactly. That's what I was going to say. And they can't make enough money to live on their own. So living at home and housing is so expensive. So it's exacerbating the problem, right? In a lot of ways. But they don't want I went to school, so you owe me $150K plus or whatever. I'm not going to work for that. Are you kidding me? That's beneath me. It's like, dude, really? Okay, I guess you don't want to. I mean, yeah. So I think that has to do with somewhat of the demographic and the generation involved.
Yeah.
I don't know if I buy in. I don't know if I buy into AI's taking up everything yet.
I don't buy that either. But when I knew the first job I got was going to be a shit job. Of course, it's going to
Me
be a
too.
shit job. It's your first job. It was just understood.
Dude, I was a gopher.
Exactly.
I made 17 grand, and I lived out of my savings. And I had my real estate broker's license, but I was working and learning the commercial real estate business under two of the most successful guys in Southern California that just closed the biggest deal in the nation. And it was like, to me, it was like, yeah, I'm going to be a grunt, and I'm not going to. But then my second year, I got a portion of the commissions, and it got much, much better. But you have to eat crap. Otherwise, I wouldn't have had the opportunity. Right. If I said no way, I would have never gotten to work for those guys. I would have never gotten in all these deals and all this stuff. And these kids today are like, no, I'm not going to do that. And it's like, dude, I made no money. I mean, I literally, I spent money. I had to pull money out of my savings every month just to cover rent and everything else just to work for these guys. But I knew what I was getting into for the first year. It was just like almost like charity work,
Well, it's just doing your time. It's doing your time.
Yeah, it's like an internship.
They don't understand
like a low-paid internship.
They don't They don't understand that concept of you're going to have to take a crap job, even though you got a degree. And of course, then there's, oh, well, I'll be an influencer. And there, you have these little influencers that are making millions of dollars that, are making everyone think that that's possible. They just happen to get in the right niche at the right time, and they are a fluke. One out of a million people are going to be
there's so few.
Successful.
There's so few, exactly. But everyone thinks that everyone's doing that. Everybody's making this. No, they're not. They're not. You're hearing about the few that made it, and you're not hearing about the thousands that went broke or can never make it. That's the thing. That's the thing. Even with trading and anything in life, you always hear the success stories. Yeah. You never hear all the other things that went wrong, and it's just. It's not realistic. But
very true. Very true.
Yeah, Robert, I mean, I agree with you. He's in the chat saying, he's kind of agreeing with all this stuff. Yeah, no, it does. It does take time. You got to put your work in. You got to earn it somehow. There's no shortcuts in life. Just the way it is.
I tell every beginning trader, dude, you're going to lose money. You're going to lose money. I promise you, you are going to lose money. That's called learning. That's called
tuition.
That's the market's tuition. You're paying the tuition.
That's the only thing we can guarantee. The only thing we can guarantee is you will lose money. Guaranteed. You
will pay tuition, no question. If you think it's just because the $500 on a laptop's going to be your cost, you are wrong. It's gonna I think that the profession of trading is so skewed because everybody thinks anybody can do it, and they think it doesn't take any kind of intelligence at all. Everybody can do it,
right?
And it's like you take who are the big boys? The big boys, the quants, okay? You go to XYZ hedge fund, and you're going to have more PhDs working for them than any other comparable business, right? I mean, they're going to be, maybe they've got a business, it's 100 people, and 50 of them have PhDs. I mean,
that's right.
We're talking about the smartest people in the world who have spent years and years in education. You just don't wake up one day and you're a PhD. You have to go to high school, college, master's. Then you finally get your dissertation. You go into you go to get your PhD. And then after you get your PhD, you're going to be working as an economic advisor for some little crap company till you finally get to a hedge fund, right? So they're all paying their dues in different ways and in different time frames.
Yeah.
Oh yeah.
Exactly.
For sure. You're going to be a grunt. You may be a grunt at a PhD level, and you know what? You might be making less than the guy on the construction crew, which is really kind of interesting too. But you always have to pay your dues
you factor in the time you went to school, all the years you were not working at something else. And then if you have loans on top of it, and you got a guy that maybe went to technical school for a year or 2 years, and he's got I don't know, whatever, anything, auto detailing business. He's got 20 trucks, got a whole crew, and they're pulling in like 200 grand a month, and it's, they're all high school graduates with technical, they're just doing it because there's a need for it and they're making money hand over fist or whatever. But it's not sexy, Troy. It's not a sexy job.
Right.
I can't do that. I can't tell people I detail cars. What? I can't tell people I mow lawns or I handle a crew. People don't realize there's a lot of freaking money in landscaping because it's not just mowing and edging and fertilizing, and it's all the other stuff that goes in it. Oh, someone wants to build a built-in barbecue, wants to build in a little pergola or gazebo or whatever. You start getting these additional jobs where you're now you got a real thing going, right? And it's just that's where the real money's at. And you're with these homeowners all the time, and you get to know them, and you find out what they want. Oh, I can create that. Oh, I don't know how to do it, but I'll hire a couple of masonry guys, or I'll hire. Oh, you want concrete steps here? You want a rock wall? You want a partition? You want a whatever the hell maybe, right? Retaining wall. We'll get the right guys. We'll do it. Most of that stuff you don't need permits for either, which is even better. You don't have to go down and get permits. So it's just like, man, it's freaking quick money. But people don't see it that way.
I have a great story for you. So I was very young, just out of business school. I had a suit and tie job for a year. My wife got transferred, so she was making more money. So we followed the money. I gave up my job,
right?
And I'm sitting on the couch sending out hundreds of resumes, right? Not getting anywhere.
Where are you? You in Atlanta? You in Atlanta here?
We were in Atlanta, and we moved to Charlotte. We moved from Atlanta to Charlotte, and I'm sitting on the couch doing nothing really. And my wife is at this big company, and all these other people came from Atlanta and went to Charlotte, and all these people are buying houses, and they're all complaining at work, going, I can't find somebody to paint my bedroom. I can't find somebody. And my wife goes, my husband's at home on the couch. Let me help you out here. Okay. And so I went from I was handy. I was very handy with my hands and knew how to do stuff.
I'm like too.
And I
too.
started my own one-man constructing business. But the story I want to tell here, and at one time I had 4 or 5 trucks, multi-million dollars, houses, et cetera, et cetera. But the point is that during this beginning phase, one of her coworkers says, I have a bathroom that I have to redo, and I want to tear the tile out and redo it. He says, do you know how to do that? I'm like, no, never done tile work ever. And he says, well, would you do it? Would you do it? And I'm like, well, yeah, I guess. He goes, I'll even help you. And I said, okay, here's the deal. You go out and get somebody else to give you a price on it. I'll do it for $50 less. Okay. So I'll save you $50 and we'll figure it out together. So we tear out this tile. And we're redoing it. We put new tile in.
Yep.
We get all the new tile in, and it's wrong. I had to tear out about half of it and redo it. I ended up making $2 an hour on that job. But guess what? Learned like 5, maybe 6 years later, I was doing custom tile countertops and making crazy money doing custom tile countertops. And it was all because I was willing to make $2 an hour to learn how to do it.
Right.
And what's funny was he and I went to Home Depot. We went down to the tile area. They got a tile guy there, and we're like, how do you do this, man? And this tile guy at Home Depot,
you need a trowel, you need some mastic, slam scraper, get the old stuff off. You do the space.
That's where my tile talent came from. You never knowing that not even 5 or 6 years down the road, you're doing custom tile backsplashes, countertops, flooring, all of that, and it all came from that $2 an hour job. And I think that that's that I paid tuition. That was tuition, right? That was, and it's the exact same thing in trading. Find somebody, figure out what they do, model after them, beg and plead, say, hey, can I sit and trade with you? Can you, virtually, can I trade with you? You do everything you can to try to get, even if it costs you money, to get exposure and to get and I'm not talking about exposure as in, YouTube. I'm talking about exposure as
No,
to
yeah.
different types of markets, different types of
Yes.
instruments, right? As much as you can get, and understand that you know nothing. You know nothing. Learn everything, right? Be a sponge. Learn everything.
Correct.
And it still may take you 5 years before you turn a profit.
Mm-hmm. That is so true. But you don't know unless you start. And if you sit and delay and say, oh, I don't know. It's like, if you want it bad enough, you'll do it. I mean, you got to have, you got to be self-motivated. You got to be self-motivated to do this.
We didn't have prop firms like that are available today for trading capital.
Nope.
What you did was you worked a side job to make money to put in your trading account. That's what you did.
Right. That's right.
Sometimes you'd have to work a whole year before you could even make a trading account.
Oh yeah, dude. I blew up. I would lose a lot of money. I mean, I was working all the way through most of the time until like 2011 when I started to trade. I had enough money then, and I had the time to do it full time and spend the focus on it. But yeah, I mean, I would trade, and then I'd go for a few months where I'm not trading because I don't have enough money in my account, and then you just save up and put more in, and that's how it is for a lot of guys at the beginning. It's nothing wrong with it. It's how most people get started. Unless you just happen to be lucky to go work for like some firm or some fund and you've got a whole bunch of outside money that's pouring in or someone's managing something, but that's pretty rare. Even if you have the education, you just more or less need to have the connection in those situations. Got to know somebody who's running a desk or a firm or work the floor, some pit somewhere and wants to spin off. And, there's a lot of that you need connections with, but I didn't have that on the West Coast, and I didn't know anybody that was in finance doing this stuff. So I just grinded. My way. It took me a long time.
Very, very true. Very true.
Yeah. So anyway, I mean, you just want to on days like today, it's probably better for everyone not to have traded, period. You would have been, probably the vast majority would have had more money than they finished the day with, I suspect. I had more money before FOMC came out. I know that damn sure I did, but it is what it is. And I stopped it. I knew better than at some point I'm like, okay, now it's getting ridiculous. I'm done. I'm walking away for the day. Come back tomorrow. And I've done that many times, so I just knew I just need to stop, and I'll get it back. But yeah, you got to know when to stop. It's very important. This whole thing was bouncing around. We had no control over any of it. I don't think anyone had any control over it. It was probably mostly algo anyway. Like you said, tomorrow we'll see how this thing autocorrects, and if we continue the march north, or do we consolidate? Do we sell a little bit? Do we profit take? And then, I mean, we could have a sell-off day tomorrow, a pretty good sell-off day, only to come back up on Friday and, an expiration rollover day, and just yeah, thanks for playing. We're gonna squeeze out the shorts. Back long we go. Anything's possible.
It is, but it goes back to what we always say we constantly say this, and that is, at least I say it because I need to hear it myself, is trade what you see, not what you think.
Yeah.
If you're, and Sam says the same things. So, Sam's like, he told me, he says, stop using a daily chart. Go to a 15-minute chart, and that's the only thing you can look at.
I remember.
Right? That really helped me to focus on what's happening right now in front of me than looking at the daily chart,
more micro.
The 4 hour.
Yeah. No,
because
exactly right.
I tend to look at the macro and fundamentals, which, as you know, are excessively notorious for not being good entry points. Right.
No, they're
right.
not.
You can be right.
You may have the right idea, but you may be right, but it may take 2 months before it kicks in or something. You never know.
That's right. That's right.
You're like Michael Burry in the Big Short, man. You're just eating it for months. You're just like hanging on for dear life, but it's turning around. I guarantee you, it's gonna start.
Yeah. Yeah.
Oh,
no, exactly. Yeah.
Yeah. So
exactly, 100%.
I don't know what Robert was talking about here in
100%.
the chat. Technically possible to take the 500 and a laptop, but will be the 1/10 of 1% that probably spent a lot more time in a demo paper trade account. Maybe he was talking about, we're just talking about the few that make it. Yeah, exactly. You know, these guys that, I took $500 and I made $100,000 out of it. I made $1 million out of it. It's very hard to do. Certainly hard to do in futures. It could be done in other things. Mostly has to be swing or pretty long positions, I feel. Otherwise, you're just going to get chopped up. I mean, you can't. I mean, technically you can compound it, but you got to be pretty good. If you're starting out, most of us are not pretty good. So you may get lucky and turn 500 into 1,000 one day, but then you may end up losing 700 or 800 the next day and you're almost wiped out. And then where do you start again? Yeah, exactly.
Invariably, as soon as you go from
so,
1 to 2 contracts, you end up having a loser, and you lose on 2 contracts instead of on 1. Isn't that always the way it is?
I know.
Like that first time you go from 1 to 2, you get hammered, right?
Yep.
And it's like they know you're over
leveraged. Yeah, exactly.
That's right. That's right.
They do. They do. It's human nature, and that's really what it is. It's all the mechanically, if we were to do what we were doing and not get over emotional or jump in too early or have the FOMO or whatever, we probably would be okay. It's just the human element is it factors in so much into what we do. It really does.
So true. So very true.
He's saying, for instance, he got one Reddit stock IPO at $34, but if I bought a lot of them, I would have had amazing. I know, but this is the thing, Robert. I use this analogy a lot. People sit there and they say, oh my God, what if I had bought Bitcoin at $4 or 30 cents or whatever the hell it may have been? Can you imagine where I'd be today? I'd be worth hundreds of millions or something. I don't know if I buy that. What if I bought Amazon early on? The thing is, I don't think I would have held it till now. I know I wouldn't have held it. Any decent give back, I would have cashed out. Maybe I would have gotten in again, but I wouldn't have held it all these decades. Like I wouldn't have held Google through the splits and all the craziness up. I just wouldn't have done it. So you're telling me if you had Bitcoin, let's say tell someone they had Bitcoin and it went to 60,000 and then all of a sudden it pulled all the way back down to 20 or 22, whatever it was. You don't tell me you're going to hold that. You'd probably be like, dude, I got in. I'm already a multimillionaire. I'm not going to be foolish and give back 60, 70% of this right now. You get out.
Exactly.
So that's just the thing. Everyone talks about this all the time and and it's not healthy. It's not healthy for portfolio managers, RIAs, whatever. They always love to do this. Oh, if you had just bought this blue chip stock, if you bought GE and you held it since like 1987, dude, right after the Black Monday or something, you would have had, no, come on, dude. No one does that stuff because other things happen in life. You move, you want to buy another bigger house. You want to put your kids to college. You want to do this. You're like, I got all this money. I'll pull some out. That's just what it is. There's nothing wrong with it, but human beings are not stick your head in the sand like an ostrich and just let it sit like a time capsule. I mean, it's so rare. And the people I think that we hear about it are like the old dude who like died and he left his family with like 25 million because he forgot that he bought stock like eons ago and something. He just didn't even know about it or forgot all about it. And they find out, I got paper certificates here. I bought stock of something, That's the kind of stuff that happens. So anyway, yeah, we're anyway. Hey, Troy, we made another hour out of this. I don't know how we did it, but we did it.
Had fun. We had fun having a conversation. That's what it was.
Yeah, you were just talking. Exactly. You were just talking, which is great. Well, thanks for being here all day. It was a long day. I will.
No problem.
I'll see you Monday, right? You're off now till Monday. So I'll see you Monday.
I'm actually gone for 2 weeks. I'll be back in 2 weeks.
Oh, yes, that's right. You are going. Okay. All right. So I assume someone's going to be filling in. I'll find that out soon.
Yeah.
Have fun wherever you go. Be safe. Enjoy the downtime.
All right.
Probably a good time for you to go away now, too, with rollover and everything. Just decompress.
Yes.
Perfect.
Yes. I am looking forward to it. So.
Nice. Well earned. Have a great time. I'll catch you when you get back. And to everyone else, I will see you tomorrow. Thanks for sticking around, and be safe and happy trading.
Agree.
Hola Prime. Trade with transparency.